Are we Gucci? I think we're Gucci. I think we're Gucci. Are we Gucci? Oh, we're so Gucci. Move this a smidge. We'll get a link and be on our way. Running super late today. I went to the grocery store after the gym and they had no food. They had no food. I had to go to like another grocery store. But we ate, we got food, we reloaded the food supply. Where's the Discord? Oh. Fake pump or no? Or no? That's what we'll call it. Fake pump or no? Okay, cool. Update our levels on our way. No real update to the trades, right? I mean, we kind of talked about this is a level, right? I was saying like until we like start getting closes above this level, like I'm not buying it just yet. And so far we haven't, right? So far we have not. I just came up, cleaned the eyes, did like a little failed auction at the yellow line, shout to the yellow line. Especially the nice horse for opportunity, right? Whether you took like this stuff or you took this. Also, in terms of the long we talked about the juice box yesterday, right? There you go. It kind of came down, SFP this low, cleaned the poor low, cleaned the naked point of control, and then just on its way ever since. Also, they gave you the opportunity to get in on this thing, right? You got the pullback. If you didn't have limits here, you could have taken the SFP, could have taken the pullback, could have taken like the failed auction too, at the value area low. Lots of opportunities to get into that shine. Well, I'm a bit suspicious of this pump, right? Right before FOMC on pretty low volume. The volume yesterday was not particularly high, right? Same with the ETF. A little sus, right? A little suspicious. We'll say that. We'll roll with it for now. The levels. And in terms of the ETH thing, like the ETH, sure, like because this thing was looking way stronger than Biddy, right? So I got that thing stopped at break even. And then I ended up hedging it like a little later on again, like somewhere. Like, it wasn't the greatest of entries, honestly, but I'm willing to like give some back, right? Like if this is gonna be the move that we're taking the loss on. I'll check it in a sec. But yeah, I figure we might as well protect our downside. Keep that downside protected. 94469.1. 94320. Also, I never ended up checking the video for the buzzing. I did that in a second. 90721.7. 90721.7. So we'll leave this thing marked out. That seems a little loud. Some music. Bum, 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 bum. Let's look at some of this other data. Also, man, it's just, I was giving this some thought today. That, like, we're in a simulation, right? We must be. It literally must be. The last time we took like a big swing trade like this in the high time frame. When was it? It was this thing, right? And this is at the time that I got like the surgery, for anyone that remembers, right? The same thing's happening again. I didn't even realize I had like the surgery on Thursday. They called me this morning to verify it, and I'm like, what? I didn't even realize. Did not even realize. But like, there's so many similarities with this stuff. Like, it was like both around FOMC, both swing trades, both near the surgery. Interesting, right? So how's the weekly looking? Interesting. We like swept last week's high. Still pretty suspicious of this, to be honest. Still very suspicious. Like, everyone's targeting this like 98 zone, right? Like big ass liquidity cluster up here. I was gonna see like a single print on the daily too. The two of them actually. Max Payne is probably just never making it there. People are waiting to sell the pump. Oh, there's a lot more orders in the order book up here now too. Interesting. Let's pause this for a second and see how the video ended up sounding. Because if we're correct, there should have been a buzz at the start, and there shouldn't be a buzz after we do all the changes. Are we good or no? Fucking NVIDIA. Didn't do anything, did it? This thing did though. God damn, should have running away on me, breaking my heart. Breaking my heart. So what happened to this Walmart ticker? Odd. Oh, now it's on the NASDAQ, I see. NVIDIA, where are you hiding? Yeah, more or less the same thing as yesterday. Or no. But it should also be. Was there a buzz? There was no buzz. In place of this. It seemed like there was no buzz. Okay, cool. Well, that's good news. How everything else do? These things have been really going, right? American Eagle, Abercrombie and Fitch. Like, look at these moves. God damn. Yeah, the music. Whoops. Oh, this thing had a huge move in the after hours. Holy shit, it's already up here. Oh, it's like basically breaking out in the after hours. Damn. Why doesn't this thing show it? Did I delete it? Anyways. Why is it so? Am I like? Why is it so weird? Okay. Good enough. Good enough. Hmm. Well, it's almost here. FOMC is almost here. Bum, 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 bum. We delete this line now. Rid of that thing. Oh, what a day.
Build this library of all these.
Or were we on this video? Yeah, she was going over her Skype. What a boomer, right? Does Skype even exist anymore? When was this video made? I thought they shut it down. Yeah, that's true. It's shut down, isn't it? That's funny. Google Notes. Actually, before anything, let me find that video. I need to go back and find the stream where we watched this video. I need to find that there was a section where Bebo said something. Should be pretty quick. The hell did I just do? Well, if anything, kind of. What is that? Oh, there's like a new split view in Chrome. Interesting. Dang. Oh, this is the video. Wow, first one. First one. What time did he say this? 2:15. Oh, it's fucking funny. This is too quick, let me know. Ah, Charlie Burden. There we go. Charlie Burden. Titans up tomorrow.
From burning through a 200 and
'em talk, I draw my fate. He got hype, I got calm, talk, pull back and drop that bomb.
Okay, cool. Like, I have a bunch of notes for all these videos, and I have like the YouTube link for all of them, but one of them I put the wrong YouTube link because we ended up switching videos. We have now corrected that. Now we need to go back to this video we were watching. Where is it? Kind of afraid these dumb bears. We're gonna sell FOMC hard. Probably the most likely, right? Like, I mean, it's gonna depend on what he says. But in terms of like having a rate cut, like it's definitely already priced in. Also, like a pretty big rally going into it. I guess we can look at some of this options data. I suspect it hasn't really changed a whole lot, but we'll see though. We'll see, right? It's normal. Like, people are gonna take profit after a move like this, going into some like volatile event, and we start to rally afterwards, and they can just buy back in, kind of a thing. If it's like a pretty bullish meeting. Plus, from what I've gathered, I mean, I'm doing the same thing. I'm not like bothering to like touch any positions until this thing passes. And from what I'm seeing around on Twitter, like most of the people that like actually trade know what they're doing seems to be doing the same thing. A lot of times these events are like pretty pivotal changes in the market, right? It's not just like a one-day thing where like, oh wow, it pumps because of the meeting or dumps. Like it'll start like a prolonged move, like one direction. Once people kind of digest everything, like all like the releases. Wants to be a blast off. Yeah, it definitely could be. It could be. No doubt. I think the main thing people are going to be paying attention to are like how much like agreement or disagreements there is between the committee. And then obviously like what he has to say. Like also they might like revise their expectations for next year in terms of like GDP, so on and so forth. 6,700. It seems like a mixed bag. A lot of people are hedging for like moves up here. A lot of people are hedging for moves down here. More so down here than anything, but I guess they're prepared for both directions. Also, The other thing too is like the Japan rate is coming soon as well, right? Isn't it next week? I believe it's next week, right? It was the 18th. Yeah, on the 18th next week, Bank of Japan's announcing their rate. Also, like Britain as well. There's a lot going on next week, actually. So it's gonna be some pretty interesting 2 weeks coming up here before Christmas. Interesting. I think the shorts are already in positions. They might get lunked out. Buyers have been holding out. I don't know. Depends. I don't know what you're referring to specifically. There's like many different instruments. I'm fucked if Nvidia opens here. I mean, in terms of like moving people that trade these moving averages in the daily, it's pretty good close, right? You just kind of reclaimed all of them on this candle. Is it a weekly on this thing? Hard to say, right? I'm have to be planned for both things, like whether we go up or down. Although sometimes in FOMC, nothing really happens either, right? Like the day of, it's just like a big whipsaw that stays sideways, and then like the following days it starts to make the move. They're not always like super volatile. Oh, so isn't there like when's the options expiry? Next week. Interesting. I'm looking at after hours on Robinhood 184. Robinhood, Nvidia. Yeah, 184. 5 cents. Friday for mine. Well, I was looking at like the monthly expiry is the third Friday of the month. Crypto's a little different though. All like the Deribit ones typically expire in the last day of the month. And they also expire like Friday, early Friday morning as opposed to like the end of the Friday session. But it seems like that's no longer the biggest options market in crypto. It seems like the IBIT options are like I've now overtaken it in terms of volume. I was watching a Me Kevin video earlier today at the gym. He's making like a pretty big bull case for them. Like, what did he say? What was the term called? I don't recall now. Like, essentially, like, whatever, they already announced that they ended quantitative tightening in the past, the start of the month, and then there's a certain type of like money printing that they might be engaging in. Someone was talking about it in some interview earlier today. Apparently, if the Fed goes along with it, it would be quite bullish. I mean, it makes sense, right? I guess money printing at the end of the day is more liquidity flowing in the system. We'll see. For now, kind of let's just chill, relax. So this guy starts opening his mouth with his "Good afternoon" speech. Not much we can do. Number goes up. Yeah, basically. Okay, we're all done this. Where's this video? We have the music. Also, whether you have more is debatable. More what? Also, if the video is like quiet, let me know. I might have to turn the desktop volume up now, given how much like the microphone volume has increased. But yesterday when I was like listening to it before the processing, it seemed like the video is way quieter than it used to be. So I don't know if it's trying to like automatically compensate for how loud the microphone is now. That's like lowering like the ceiling of the volume, which has made the videos quieter. Guess we'll find out. You print money, numbers go up, the value stays the same. Yeah, exactly. Like a lot of people look at the S&P and think like, oh my god, it's like going parabolic. Which like it is, right? But when you like actually like look at it with like inflation accounted for, it's like really not. Like it's not doing this parabolic move. It's like just grinding up if anything. It's a pretty interesting chart. Like, if you like, what is it? I think it's like if you take the S&P, then you do like the value, like the inflation. It's either like the inflation, it must be, right? But they're perfectly correlated. Like as this has gone up, so did the inflation, kind of a thing. Compounding that dividends, it really makes it a powerful investment vehicle. Yeah, to be honest, I don't have like a big like I have some things that happen to pay me like some dividends. But I know that there's certain people who that's like the entire like their theory of like how they construct their portfolio. It's like full dividends. I personally don't do that, but curious how they perform over the long term when comparing it to something else that doesn't do that. Because there's pretty interesting things people do, right? Like for instance, other people are. But I went with like a more well-rounded approach of like a few things that like aren't correlated, like with some dividends, so on and so forth. But then there are people that take like the full-on dividends approach, and then there are people that also are like selling options like on their portfolio, essentially like collecting the premium month over month. Stocks that pay dividends tend to not good price movement. Yeah, yeah. Right. Listen to this lady talk. Okay, nice. She talks about this. Okay, interesting. I'm gonna make some of these indicators because I'm very curious because there's multiple like large entities that are using this and have been using this. It seems like pretty powerful for like position trading. Maybe even useful in the lower time frames. We'll see. Leave this on in the background so you can kind of see what's happening.
These chart formations, and then all of a sudden everybody's piping in and they're all getting it wrong. And I'm, no, 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 no. I'm doing one just for myself. So that's how I keep myself amused during the day because it's very difficult to keep your attention and your concentration up throughout the day. And I don't have a TV. I just do not believe in that. For me, that does not work for me. I don't look at blogs. If I post anything on Twitter, it's just because I'm really, really, really bored or something. But I have Twitter closed all day, and then I just have a few friends on Skype who have been on there for up to 25 years, and we post humor in the middle of the day. So it's for me
She
that's
posts a lot on Twitter as well, by the way. Like not a lot, but like she is active on Twitter if you want to follow her. Post some interesting stuff sometimes.
a big let's see here. That is a big tension release, So here's my humor I posted today. This was from my son-in-law who I had
Yep.
dinner with last night.
I saw
Okay.
this as well.
Yeah.
Yeah, this is good.
you know, and so, it sometimes takes the stress off. Everybody's doing their own thing, you know, nobody's making the same trades or anything like that, but it also is a forum to keep ourselves accountable. So we actually have a homework room. So these are ideas that anybody can do. Okay, so just to show you, okay, this is another friend who's ready to go on the Skype room. And so he'll post all his homework. I didn't even look at it, but you do it, because you know that, okay, he's doing it, so I have to do it, right? And it keeps you accountable, having this routine and ritual. So, homework only, no idle chatter. But of course, we
Idle
still
chatter.
get, oh, discrimination. Boys love Switzerland too. So we have one girlfriend in Switzerland, Ash is over in Puerto Rico, Mandy's in Australia, and it provides some sort of community, but it's a community of your own choosing.
Right.
Does that make sense? So,
Yeah.
and
No,
then,
that's excellent.
yeah. So
For
that goes with these keys to success. It's like, uh, if you do get an idea from somebody else, that's okay. I just showed you like you can play around with these coils and the value of line charts because it helps eliminate some noise. But now you take at it and you have to see where it doesn't work. What it looks like when it does. How does it work to trail a parabolic? How does it work to trail a moving average? How do you attach that with your execution program and stuff? So you have to start playing with it and make it your own. And you have to do your own research. I've just never seen a professional trader who relies on somebody else's newsletter. Um, Keep an open mind because flexibility is the name of the game. I can't tell you how many times I think one thing and then it's like, oh, okay, well, the market's not going to get legs, you know? I didn't see that one coming today. I actually had bought some bonds last night, believe it or not, because it was like a nice little buy day, and I exited them just because they really weren't going anywhere. I had like 2 or 3 ticks in them, and then they just started falling out of bed, and I have no idea why. It was just so freak. Okay, this is what they were doing, and I just felt like really lucky, you know. I
Hmm.
They were just doing this, and then boom, you know. So who could have seen that coming? I mean, it all looks great after the fact in hindsight, and you look at the daily structure, and there was a gap there on the yield chart, and blah 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 blah, right? You know, but I just always think, oh, look, you know, we can draw trend lines here and see this flag formation. Oh, that looks so great, you know, after the fact, right? But you know, I just always know that I don't know. Okay, I don't know, so I'm pretty uh, quick to, you know, get real chicken.
And I had a question about the library, which I think is an excellent idea. Are you always kind of saving an intraday time frame and then also a daily time frame, so you kind of get those two perspectives, or does it kind of depend on the setup, the trade idea?
Yeah, I always start the main work, with the exception of those coils, because I've been playing around with those. But I always start the main work off of the daily charts and the
Hmm.
daily candles, because very integral to my way of thinking is that George Douglas Taylor's approach to the market. You know, there's the buying day, then you exit, and then there's the sell short day. And of course, it's not a perfect count, because you might
Who's
be
that?
in a breakout where you're getting, of course, Taylor's approach to the market. You know.
George Douglas Taylor? Who's this? The 3-day cycle? Interesting. Seems like you wrote a book. The Taylor trading technique. See if I can find it later. George Douglas Taylor. The Taylor trading technique. I'll take a little bit though. I'm reading the other book right now about like futures trading. Pretty interesting, like algorithmic trading ideas in there actually, the more I've been reading it.
You know, there's the buying day, then you exit, and then there's the sell short day. And of course, it's not a perfect count, because you might be in a breakout where you're getting these extended runs to the upside, or you might start getting a lot of price bar overlap where nothing's going on. But you know, I do like that rhythm a lot. And so the daily candles are one way of monitoring, you know, for what's setting up. So that was the reason I looked at the bonds, is because they had been down 1, 2, and the 2 period rate of change right here was poised to flip up. Okay,
Hmm.
so yeah, it's like about a 65% trade, you know, and it actually was good for a little bit. You can see we did rally up in the overnight market, but that's where you have to be smart and say, okay, it's really rare that a market will rally for 4 sessions, and by that I mean US morning, US afternoon, Asia, and Europe. Okay, so if we rallied in Asia and we rallied in Europe
Interesting.
and we rallied in, you know, the early US morning, it's very unlikely you're going to get anything more. So, yeah.
Yeah, excellent. And that 2-day rate of change indicator, could you kind of describe a little bit how you use that? Is that your stocks or a
Or
market
is that still
supplying,
relevant?
trying to
Or if like
find an
what
overlap?
assets that's relevant for? 'Cause a lot of times you do see that, right? Like overnight in the daytime sessions, they counter auction each other essentially. Like if the nighttime dumps, like the daytime will pump, and vice versa. Obviously not always true, but it is quite common.
When that momentum reversal is going to happen?
It's like reading tea leaves. it's
Looking at charts is too much fun.
it's really reading tea leaves, but in terms of statistical testing, a 2 period rate of change has a better signal to noise ratio than a 1 period rate of change,
Hmm.
and even a 3 period rate of change. So it does have a very small edge to it. And if you add a filter to that, then you can start to improve that edge. And then you also learn the times when not to use it. So for example, if you had a like an inside, narrow bar there,
Right.
it could be more of a continuation as opposed to a reversal, mess the count up. I love my favorite trading pattern, all through the 80s and the early 90s was we used to get these little bidivergences here in the S&Ps. I used to call it a 5-finger pattern because you'd have day 1, day 2, day 3 would be up, but you don't go home long on day 3, okay? And then there would be day 4 and day 5, and you don't go home short on day 5. I had come up with this golf system, and it was just like, an amazing, beautiful pattern. And here it was in the bonds. But you just don't really get them that much in the S&Ps anymore. So things do change. It started being the pattern started unfolding over the course of 4 days, not 5 days, and but it's a really reliable little pattern. So, and you can see even here, look at this lovely, lovely breakout we had, but it's 1-2 days.
Yep.
It's there's a definite structure for where you get these runs like this. This case was a bear trap, right? It was a bear trap, and that is one of the patterns that can lead to what I call an extended run, although this was not an extended run. Usually the weekly will be a driver for those.
Gold.
So, just lots of
What was gold doing something? It'll be interesting. It's interesting to watch the Dixie tomorrow too.
little subtle nuances and stuff, but I would write down the reading of this every day. And
Well, I'm assuming someone's already made this, right? Someone's already made this. ROC. It's like a built-in. I want to play with this a bit though. I mean, we'll play with it later. No, that trades in different markets. Oh, it's stuff she was referring to. Yeah, I'd imagine, because there's some things that work in some markets more than others. Like in one of those trading videos, the person was like a Palladium only trader, and they like back tested their strategy in like different markets, and like it was like not effective. But whenever they did it in Palladium, it was like a winning strategy. Asia and Europe pumped. I will sell it all. Yeah, it usually seems like that. It usually seems like the New York. It's like New York versus like the. Well, we have the most money, right? North America has the most money, so to me, it seems like typically it's like NA versus like EU and Asia teaming up kind of thing, or attempting to in some capacity. But yeah, it usually seems that they counter one another. It'd be very interesting to talk to people like that, like are at the highest levels of managing these like monolithic entities, to see like how much weighting they give like the region versus region, because like there is like pretty clear interaction going on here, right? Like at the highest level of the game, there is like a region versus region aspect going on.
I would write down the pivot that would cause it to flip. And
like I'm more so curious how they go about strategizing it. Because they don't always like go against each other, right? Sometimes they'll like chain the pumps, and then one of them will have some like massive flush that wrecks everything.
now, I'll show you something here. I told you I can't really do this by hand like I used to, just because, you know, it's hard for me to write like I used to. But this is the spreadsheet that
Mhm.
a friend made for me. So I like looking at these patterns here. This is the 2-period rate of change here. This is that 2PF3 down that I showed you earlier, where then I would look for a buy, you know. This is the closes on one side of the 5 SMA, and this is like my little pinball thing. So, you know, I have this for each of the markets here, and it's pulling the data off of C2G into an Excel sheet. And then I can compile them here into, you know, just something that I can print off at night. And it'll look like this and, you know, just help me with my homework. So I try to stay very ritual driven, you know, with this process. And then, because otherwise, you know, I get cognitive biases like
Very
everybody, you
tedious,
know.
very tedious to do that, right? Like, hmm. I mean, personally, like most of my active trading is Bitcoin when it comes to like day trading, and I like it that way, right? Like I know what to expect usually, so on and so forth. If I had to like scan like 1,000 instruments every day and trade them all like as a new thing every time, I don't know if I'd be a huge fan of that. Seems like most people aren't either nowadays. Like there are so many people that just trade like ES futures, they just trade like or a handful, like just like Nvidia, Tesla, like Nasdaq futures, kind of thing, like a handful that they're just like super familiar with. I don't know if I like doing that kind what she's doing here, right? But you have more opportunities on the flip side. You open yourself to a lot more opportunities.
Well, it's I prefer trading certain markets from the long side only. I prefer trading a few markets from the short side only. You know, I'd love it if some of
Interesting.
them just went up and up and up forever, but this is my insurance against those cognitive biases, because I'll keep looking for the pattern, you know,
Right.
and the initial setup, instead of sometimes when we're feeling most bullish, you know, and it's never going to go down again, and you're wondering, oh, how, you know, I got to get some. How did I miss that move? You know, something like that. You know, it's like, oh, and then you pull out the monthly charts and all-time high. Well, it can get up to 50 again and stuff, and you know, you have to have ways to guard against that. I'm no different than anybody else. You know, I just know my weaknesses really well.
I love that. I love that. The
Yeah.
market doesn't know you're a market wizard. You gotta follow your process.
I'm every day I'm a humble peon that sits down at
There you
my
go.
desk. And if I don't think that I'm humble, the market will humble me. So, you
True.
know,
True.
yeah.
Yeah. And outside of the
People tend to have their favorites, but things have their times, like the bonds, oil, healthcare, industrial. Yeah, I saw didn't natural gas have like quite the nuke today? Speaking of which, god damn. Damn, that is savage. That is savage right there. I didn't realize, but apparently you can't store this stuff. Which I mean makes me curious, like if it cannot be, like does a lot of it get wasted at sometimes? Like it just goes to waste? Or not? No. Hmm. Okay, so most of it is stored, but some is not. Okay, interesting.
the spreadsheets and adjusting that data and adding that data every day. Could you walk us through your daily routine? Because you mentioned how important it is to set that game plan to prepare for that the next opportunities.
Yeah, I mean, at the end of the day, I have two sheets that I print off. One's off of TradeStation and it details out everything, and then I have those other two sheets, but I have a sheet that I write down my homework on. And see, I'm just very much into these trade sheets. So I used to do all this by hand too. So I'll take this sheet here. It's refreshing the values right now with the yesterday's data. So that's why it looks a little funky. And then I'll write down my positions on here. I'll write down, if I don't write down exit, I'll forget to get out. Seriously. I mean, I have to tell myself what to do, put in a stop here, I'll write down if this is a 3-bar, I have a little notation, so, and then when I come in the next morning, sometimes it's completely changed, and I'll show you what I use here. This is kind of fun because I can slide these things over to
Yeah, it's
Zoo.
good.
Yeah. So
I
you
liked
see,
those two little notes too that you had on that sheet. Be a trade management pro, and then winners.
winners
mistakes are-
readily admit errors. Well, I have to
Yep.
confess that has been on there for 40 years, so I make a lot of mistakes with execution. I just do. That's why I prefer not to do it myself. But it's like fix mistakes immediately. So like today, I don't know, I was trading the S&Ps and the Russell, but somehow I ended up initiating on the Nasdaq, and I didn't even realize it, until I looked up, and I'm like, I didn't buy that, and so I didn't even look if it was at a profit or loss. I just flattened it, that was not what I intended to do. So if I make this here,
I mean, I've done something similar before where I go to enter position and I add like an extra 0 before like entering the trade. So it's like an order of magnitude higher in shares. I'm like, oh shit. Oh shit. Kind of just take the L and eat the fees in that case.
Interesting. Okay,
Mhm.
so I come in the morning, and these are 5-minute charts, and my day starts at 8 a.m. Eastern time. Okay, so I can see the overnight gaps, and for example, the copper gapped down, and then this is the previous day's low. The gold didn't really gap, but the silver gapped down and was holding previous day's low. So a lot of times I'll find that the market will start to move away from the gap or towards the gap. It's just like classic gap style trading. Mondays are different. I have to say Mondays wig out a little bit because, Sunday night, there's a lot of action that happens Sunday night and you had the weekend buildup. But I very much key off the previous day's high and the previous day's low. So that's what all of these are. The Russell was interestingly an outside day. If you looked at it, took out Friday's low, and then once it started to come back up to that opening price, it's going to take out that previous day's high, just because of the structure on the daily charts. So I'll look at this for the first hour before, so it's actually an hour and a half until the NYSE opens. But there's like some fun little scalps that you can do and stuff. And, it's just a way of perhaps I had a very strong buy day reading for the day before, that night before, but I didn't put it on in the evening. And of course, invariably, the market will have rallied in Asia and rallied in Europe, and, it'll gap higher. That was the case with the S&Ps today. We didn't have a huge gap up, but assuming something like this, then you'll have to buy a higher low. You'll have to wait for it to pull back. You can't chase, so it gives you a framework to you could actually short first, even though it's the first day up, but you can short first and then look for your buy day play. So this is pretty much straight out of that Taylor trading technique. Just I think people try to read that too literally, without really understanding that he's talking in concepts.
And in addition to the high and low, do you look at pivot points at all as key levels on an intraday basis? R1 or S1?
Pivot
Yeah.
point for me is always a swing high or a swing low.
Okay.
Okay. So that's my definition of a pivot, a swing high and a swing low. And yeah, that's absolutely what I do. So for example, let me just see here. Get to it.
And thanks for showing all these examples. These are excellent.
You betcha. The bonds no, was it the bonds? It was this gold. Okay, so I had this gorgeous I can show it with this. So this gold coming in had been down 1, 2, 3 days. So this was Friday's move in gold. Now, I'm cautious with gold because there's still an overwhelming amount of bullish sentiment there. You know, the commitment of traders report is not something that I trade off like some people do, but I'm still aware of the fact that there are a lot of longs in this market. So after you've had this type of big trend day, then I have a trade that I call the Z day, which basically means you can short a rally or buy a dip. You can fade whatever it does first thing in the morning. So I I actually missed. I saw this bear flag right here. It was on this nice, gorgeous little 120-minute chart.
How old is
You know, and I
this?
saw it, and I just
I think
I
it's from
just
like July, right? Yeah, July 5th. I don't know if that's when they recorded it, but yeah, she mentioned the CrowdStrike crash, which was like, when was that exactly? I think it was like this, right? Curious about that book. I've never heard of it before. Curious what this person talks about.
didn't make the trade. You know, I mean, a lot of times I see a lot of stuff and I just don't make the trade, but I didn't buy it either. You know,
By 2024. Yeah, I guess I had two big ones, right? Maybe she's referring to another one of their sell-offs, I'm not sure. So what was the price of gold that she's looking at? It's like a contract. S&P was like 5,500.
buy it either. You know, but it was a bear flag. So I'll always like write down what that swing low is because once it started to move down, it's like, okay, there's pretty good odds it's going to make a little retest of that swing low. And then I did initiate to the long side here, and I sold it like about a buck higher above when it came out above that previous, let's see, high or low. So I have this on I have this on most of my charts. So this was what it looked like down there on a 15-minute. You can see this nice little loss of momentum into this little dip here. Crap, sorry about that. Where did it go? Thanks for your patience here.
No worries, no worries.
So yeah, so this is Taylor. You know, you're buying below the previous day's low, and you know you're exiting it when it comes up above it. I didn't exit up here. I stuck an offer out just up here, and I got lucky, and you know flipped it out, and then of course you feel smug for about 10 minutes, you know, and then of course it continues
Goes
on
higher.
higher,
Yep.
right? You know, so what? So it's all part of the game. You just have to have a good sense of humor about it, you know. So that's the kind of stuff that I do, you know, trading around those previous swing highs and swing lows, and just, you know, the little bit of a rhythm. The fact was that, you know, you had to do your homework the night before. My homework said that this was going to be a Z day, some two-way trading there, you know, and then it was just a matter of if you weren't engaged with something else. Because sometimes, you know, I'll have like 12 setups on my sheet, but I might only do 3 of them because you get involved in, you know, trading another market. So, and then sometimes I just I just have to hit flatten everything and take a deep breath and go outside, you know, just because.
I'm surprised she does this at her age, right? Like, quite ambitious. I feel like if I was this, like, how old is she? There's days when even I'm like mentally like checked out, right? I'm just like need some sleep, think about like 20 things at once. She's doing this every day at 66. Interesting.
With the concentration, and it's I have to be careful that I don't get my cortisol levels so high. So, today I went out for like a run for 25 minutes. I stayed along the gold and the grains, but I found that anytime I hit flatten, I can breathe, I can see with some objectivity, then I can put on the things again that I really like, but it's kind of a cheat way just to get rid of the losers too, get rid of everything, it all cancels out, but then let's put the winners back on again. Probably not the most organized in trading there, but have to get into my groove again.
If it works for you, that's what's important. It kind of goes to your last point here. Above all, take care of your physical and mental health. That's so key.
I can't emphasize that enough.
True.
Get the good night's sleep, take your supplements, eat right, and you have to do physical exercise of some sort or another. You have to, just to release the stress. And I mean, that is one thing that I have always been, just tops at, trying to, stay in my best physical condition and, yeah, the mental stuff. I got a pretty thick skin by now. Everything
Yep.
rolls off, but I have my 3 or 4 days that I'll, have a little depression too. And you just have to talk to some friends and go out for dinner and make some jokes and, love your dogs and do that kind of stuff.
Yeah, perfect.
Feed carrots to the horses.
There you go. There you go. Linda, this has been really amazing. Did you have more that you wanted to cover here? Or was this kind of your closing slide there? Oh, perfect.
Just on the trade management stuff, this is just me. I don't scale in and I don't scale out. But usually I will say that the trade management part of the equation is the most neglected. Everybody wants a setup. Give me the setup, for the coil and stuff. But it's the trade management that's going to make or break your bottom line, because if you get the trade management down, then it's scalable. If you don't have it down, it's not scalable. You're going to be
Interesting.
inconsistent and so forth. But if you can get consistency in your approach to trade management, I mean, it might be entering and exiting after 2 bars. I don't care what it is. But once you're consistent, then you can make it scalable. And so, especially, the market has these incredible outliers. That's what makes it such a lucrative and fun game. But what'll happen is that if people make unforced errors or they're in some losers, invariably they're going to sell their best position. They're going to sell something that they have a profit in. And so, you just can't do that. You just cut the little crappy ones loose and find a way to hang on to those outliers. And that's really a big name of the game, hanging on to the big winners, and they just don't come along that often and you can't force them. And then the trade management, I already showed you, I like ATR functions for everything, but you could use a parabolic, you could use a moving average, just you have to have something. And like I already said, most of this, the shorter the holding time, the higher the win rate. I mean,
That thing she had written there, quite interesting, right? She uses like time-based stops. Interesting. I feel like you'd have to collect a lot of data on this. But I kind of get what she means at the same time, though, because like, let's say I'm trying to get filled. Like, this happens a lot in crypto, for example. Like, you'll have some like fib drawn, and you're like looking to like get filled here, for example. And like the price comes and it like grabs this and starts going, but like the order flow is like looking pretty weak. Like you're not seeing like a huge surge in demand, and it just kind of starts like sitting here sideways. Those trades always get a little suspicious. In the ideal world, it's like it just gets it and just starts going. I think you'd have to like test that a lot, have a lot of data on that. Because if you're just like cutting every trade based on the time, I can imagine it's probably a world you're cutting yourself off of a lot of like trades you shouldn't be. Interesting, no, interesting thought.
something. And like I already said, most of this, the shorter the holding time, the higher the win rate. I mean, anybody can get a 90% win rate on the S&Ps if you're scalping for 3 ticks, it's really not that difficult. But you hold for a longer time and the win rate's going to go way down. So it's all a trade-off, and you have to do what's going to work with your psyche. And so you can see other presenters and get ideas from them. But if you're newer on the learning curve, it's like you might try it for 3 months. No, that's not really your style. Maybe you'll try options for 3 months. No, that's not really your style. It's like trying on hats, you know? And so that's one of the other things too that takes people so long in part of that learning curve, you know, is trying on all these different hats and styles. And you can't try to do too much. I
True.
probably did a
True.
disservice, you know, talking about the different things that I do, but it's like um you know, it's like I've been studying orchestral scores for 40 years. So I know all the instruments and the moving parts and pieces. So, you know, if you're just starting out, you're going to learn to play the violin or the piano or the guitar or one, you know, musical instrument. And then maybe you add to that. And so it's the same thing with the trading, you know, just don't overwhelm yourself because then you start to frazzle yourself. And then once you've found your style, you must see, you know, does it work in consolidation? Does it work in a trending market? Does it work in a bear market? All that kind of stuff. And then the frequency of occurrence. I can't tell you how many people I see posting stuff. And this is like from some of the technicians groups that, you know, I've been in. And there's like sample size of 12, you know? Well, even if you have a sample size of 18 or 20, say for example with seasonals, okay, let's say a seasonal has worked 90% of the time for the last 20 years. That means on a walk forward basis, it's only going to work 66% of the time, you see? Because it doesn't have a high enough confidence factor because there's not a big enough sample size. And so I see people extrapolating these things and then they start to get into trouble, you know, when it
True.
isn't all
We had
laid
a
out
we had a
that
pretty
way.
big rant on this the other day, right? When it came to like people talking about like topping signals in crypto, where they have like literally 3 data points and think that's gonna work every cycle. Not how math works.
Okay, I just have one last slide for you. This
No,
is fun.
this is all gold. So please,
Okay,
please.
so this is fun
Yep.
because this is a slide that I had from a different presentation. And everybody's like, what's your favorite setup? You know, what's your,
Yep.
like, is it a bull flag? Is it this? Is it that? You know? And so this is just to put things in perspective, okay? Because I love cards and a deck of cards is 52 cards. It's a closed system, okay? That means that there's no other inputs or variables coming into that closed system. So we can, you know, count the cards and, you know, get an idea as to that kind of stuff. Okay, if you take Bridge, which is another game I love, but I don't play right now. It's just too intense and time consuming. There's 635 billion bridge hands possible. Billion bridge hands. And if you have 4 players, there's 750 trillion possible hands. This is for a card game. This is for bridge, okay? So you can start to see all the variations out there. Nothing ever happens exactly the same way, but we would like to define it in a linear basis, you know, so that you think it's going to, you know, be these little equations and stuff that we play. I mean, that's just crazy to me. And that's why it'll take a minimum of 10 years minimum to become a bridge master, you know, which I'm like the furthest away possible. But I've got a neighbor who is she's in her mid 70s. She's 4 houses down. She always wants me to play bridge with her. And she's got me on this bridge base. And I'm like, no, Marcia, I just can't take it today. I can't take it today. But she is up like at 7 in the morning playing with people around the world, okay, on this bridge base thing,
What is
winning
this
daily
game?
bridge games. And I mean, this is her life. And I watch her play bridge. I go over there and I watch her play bridge on this online stuff.
The card
Something comes up,
game.
boom, she makes a place. Something comes up, boom, she makes a place. You know, I would have to sit there and think about it for like 10 minutes, you know? And so that's sort of how the market is. The longer that you're in there and the more experience that you get, like I could just practically do some things, not many, but some things in my sleep. I just have, it's not intuition. It's all that
It's
continued play and
experience.
experience. Yeah. So, you know, Wyckoff is also my hero for just basic technicals. And so I'll just leave with this, that the market never behaves exactly the same way as it did in the past. That's just pure Wyckoff. Each price move is unique. So the context is extra important, you know, and it's human nature. We want our world to be orderly, to have equations that we solve. You know, we don't like the fuzzy variables and the little gray area, you know, but that's the importance of taking this Bayesian approach, see, which is just taking each data point one at a time. And as you get a new data point, you update your models. If you get a new data point, you update your models. And that's what you must do as a trader. And then you will maintain your maximum flexibility. So, and you won't be projecting, you know, that something has to go here or has to go there. So, there you go.
Perfect. I think that's a fantastic place to leave it, Linda. You were able to share so much in just a short amount of time. Thank you very much
Interesting.
for your time. I really enjoyed it. I'm gonna, really enjoy watching this back. To everybody watching, I hope you enjoyed as well. Please thank Linda in the chat right now if you did. Subscribe to the channel as well. Linda, thanks again for your time. If you had to leave everybody with just one last bit of wisdom, encouragement, what would be some kind of final words?
Oh man, it's awkward in the world nowadays with all this chaos that we see around us. It's exacerbated by digital mediums and social media and all that kind of stuff. And I just would say that the more positive of an outlook that you can find in life, it could just be one friendship or one good thing in your life, and things to be grateful for. Even though we have all this technology that's wreaking havoc, we do have advances in medicine and other things and so forth. And if you are in a state of depression or anxiety or where there's negative emotions, I think it will carry over into your trading. So just, you don't have to trade every day if for whatever reason you're just not feeling good about the day or about life. Just don't force it. You can do some research or maybe talk to friends and stuff, but I think it's really important to stay optimistic, which is hard, but just find something to be positive and optimistic about. And for all of us, usually it's going to be our friends. So there you go.
I love that. That's a great way to end it,
Interesting.
Linda. And yeah, there's not much that can not be improved by a walk outside with.
It was interesting that one Indian guy that traded the options on Market Open. Like, I finished watching the video, like, not on stream. He was talking about something similar. Like, he was tracking his trading data, and he was saying that, like, the days where he was having, like, turmoil in real life, like, whether it was, like, an argument with friends or something of that nature, right? His trading took, like, a significantly noticeable hit on those days. Which is interesting. In my head, I feel like I don't do that. I try not to get too, like, emotional in one way or the other, just to kind of stay at, like, a baseline. I've never collected data on it either. I don't like track, like, oh, today I was happy, today I was not happy. Maybe it is true, right? Maybe it is true. Curious. Problem with this stuff is, like, you have to track all of this, right? Do I really want to see your everyday in my life writing every little thing that's going on like that? Not really. Maybe I'm just lazy. You lose manifestation power? What does that even mean? Manifestation. So you can't really, like, you can't manifest things in the market. Like, in real life, like, oh, I'm gonna go have a positive attitude and go talk to this person or stranger. Like, yeah, it works. Like, you can't see you're the chart being like, oh, I'm gonna go up, it's gonna go up, right? It doesn't work like that. But in general, yeah, like, it's important, like, like, being thankful for things, like waking up in the I do it not every single day. A lot of times in the morning, I'll kind of just wake up and just, like, thankful for waking up, thankful for having food to eat, so on and so forth. Healthy family. A lot of studies on that stuff too. As I don't know, like, I don't have nowadays I'm in a position in life where the people that I interact with, the people that I choose to interact with, it's not like I go to work and, like, I just have coworkers that are there whether I like them or not, or, like, I'm in university with a bunch of people that are just in my class whether I like them or not. But it was noticeable, right, when you were in those situations and you just run into people who were just, like, negative about everything. Like I don't get how you can like live your life like that. It just seems like miserable. Like always mad, always blaming other people for stuff. Blah blah blah. Seems mentally draining on top of it. Unproductive. And also just generally unpleasant, right? Like no one really wants to be around a person who's like that all the time. Gonna get some food. Now that we reloaded the food supply.
Same move, hit, same price spent. No new trick, just same old trend. They don't learn, I just sent. We came back, they stepped in. Watch art said chill, they pressed in. Zone got tapped, fake got locked. History hit, stop got pop. They don't change, they just repeat. Same bad trade, same defeat. New account, same mistake. Fresh hope, same heartbreak. I don't warn, I just wait. Line too sharp, no debate. She said he did it again. I said math don't bend. No news here, just rinse and fold. No edge left, just bought that gold. Click, click, chart react. They bought strength, I short that act. Same move, hit, same price spent. No new trick, just same old trend. They don't learn, I just sent. We came back, they stepped in. Charts said chill, they pressed in. Zone got tapped, fake got locked. History hit, stop got popped. Back to back, same zone snap. He draw fib, I fade that map. I mark level, he walk blind. Chart don't lie, price realign. Detached vibe, I plot and drift. Low lit room, my conviction lift. She said you knew that would flip. I said watch how often they slip. Don't fight trend, don't fight edge. They still do, I still hedge. They drop bags, I drop weight. They hold hope, I hold faith. He said it's different this time. It wasn't, he said it's gonna run. It didn't. He got again. Got once, got again. Same move, hit, same price spent. No new trick, just same old trend. They don't learn, I just sent. We came back, they stepped in. Chart said chill, they pressed in. Zone got tapped, fake got locked. History hit, stop got popped.
Yeah. She says just a line. I say, watch how price move. Marcos.
Lines don't lie, baby, look at Yellow dash price hit like a friend. They call it fake, but I know that man. Bounce so clean like it got no end. Day and night still tap that zone. No alert, but it's known, it's known. Flatline set with a digital tone. They trade loud, I trade alone.
They draw boxes, I draw fate. She said hide hit, I said just wait. Wick hit twice, she gave that look. I said price reads lines, not books. They chase noise, I chase still. She write charts like I write skill. Mark that level, then I chill. Let that tap come back for real.
Lines don't lie, baby, look again. Yellow dash price it like a friend. They call it fake, but I know that bend. Bounce so clean like it got no end. Day and night still tap that zone. No alert, but it's known, it's known. Flatline set with a digital tone. They trade loud, I trade
I don't need no fib, no buzz.
just dashed that goal like it's what it was. She said, you shook. I said, I'm mad. She kissed slow when price came back. 3 times hit and the level hold. Now she whisper charts while I grip that soul. I don't move loud, I move with grace. Price respect where I place that trace.
Bounce so smooth, they say it's love. They don't know, but I see rhythm, I don't guess much. Never guess. Dash so quiet, but it pull like tide. Pull it. They lost again, and I just smile.
Lines don't lie, baby, look again. Yellow dash price hit like a friend. They call it fake, but I know that bend. Bounce so clean like it got no end. Day and night still tap that zone. No alert, but it's known, it's known. Flatline set with a digital tone. They trade loud, I trade alone.
They call it love, I call it mad. Oh, lines don't lie.
Marcos.
Yeah. They said I'm delusional. I just do the math. Marco. They said I'm delusional. Talking like the chart don't lie. Drawing lines they don't understand. Still I catch that perfect high. They said I'm delusional. Saying trading got no soul. But while they chase their feelings, I just low control and hold. Yeah, I talk in numbers, they call that fake. Said I'm cold, said I lost my taste. But I don't flinch when the wit come fast, cause the zone been placed and the math still lasts. You screenshot green, I calculate. You hope she runs, I isolate. VWAP bounce or a delta trap. You feel FOMO, I fade that clap. They want hype, I want the edge. They want breaks, I want the ledge. They want crowd, I want the silence. They want flash, I want compliance. Talking like a chart, don't lie. Drawing lines they don't understand. Still I catch that perfect high. They said I'm delusional. Saying trading got no soul. But while they chase their feelings, I just low control and hold. Yeah. Watch them call my work a reach till the price tabs twice like a sermon speech. Then they gone, no words just lost. I sit calm, they pay the cost. TPO bill value area low. They want to fly, I move below. They think news gonna break the sky, but I trade truth and truth don't cry. Limit set with space to breathe. You chase weak, I just leave. They want drama, I want pace. You want now, I want place. Delusional to them, intentional to me. I'm not wrong.
Should we watch this options chart fanatics video?
They said I'm delusional.
See if this guy is yapping or no.
This guy has mastered options trading, and now you can too, as he reveals the step-by-step simple process to become an options trader.
This is where options shine because it lets you control a very expensive asset for a much cheaper. This is not what most traders that you'll see on social media doing, because the time is going to be a major factor when you are taking these type of trades. There's trades that
How broke you're gonna be? You don't know that. You don't know that. You don't know that. We never watched this video actually. I think it's the only one we haven't seen. I guess this one as well. And this one, I don't think it's about trading, right? It's about like FOMOing, not FOMOing. Interesting.
Welcome everyone back to Chart Fanatics, the go-to channel for all of your best strategy and concept breakdowns with the very best traders in the world. Talking of which, today we have the honor of welcoming back. We've done a podcast episode and everyone was requesting the strategy that is so easy that a child could use it. Well, today you get to see that strategy firsthand with the man himself, the founder of D&D Capital, a traditional prop firm here in the UK. It is the one and only Rajan Dahl.
Thanks for having me. I had to come back, Riz, after
Yeah.
all of those questions, didn't I? I was getting bombarded.
I can imagine. You know, it wasn't my fault. You know, I honestly thought that to be fair, we went into it, but obviously there's no charts.
Yeah,
So
true.
it's hard to visualize. I think people wanted the charts. So here we are.
I fully blame you for that. It was all about the title, but no, it's all good.
It's
I'm
all
happy
good,
to come and explain.
Well, people really enjoyed that episode. You know, we got to talk about your journey and the common practices of a professional trader and someone who's, again, leading the way in terms of UK prop trading as well. But today, we're going to go into that strategy. So where's the best place to begin?
I think if I just explain the ethos and how it all began. So obviously you guys know that I've done the STA stuff. We've had Axel on and all of that. So I was teaching at the London School of Economics for the STA. So I was kind of like the teaching assistant. I covered some subjects like GAN theory and stuff. But what was really good about it was I got to watch all of the lectures over and over and over again, probably like 8 or 9 cycles of this at LSE. So I got to know all of the lecturers like Clive Lambert, Jeremy Duplessis, all of these guys who were top in their field, and obviously that helped me quite a lot as I was going through it. But one subject that really picked me up was the market profile subject. Now I did explain that like I am a statistical analyst, but I use technical analysis. But the fact that it went through market auctions was a key thing for me. So if we can break this down to a simplest form, which is what I like to do all of the time. Imagine we're going to a car auction or an auction for a house. Essentially somebody throws in a price, right? And then they bid it up, bid it down, then go through it. That's exactly the way that I see the markets every single day. And going back to, the rice traders in Japan and, how Steve Neeson's book on candlestick patterns came about and all of this kind of stuff, it was literally that. Like the market traders used to go there. And, even today, there's a price discovery. That price discovery mechanism is how genuinely I trade every single day. So that was kind of really what I wanted to explain.
I love that. I'm excited. And I know everyone at home is as well. And how visual are we going to get today?
Yeah, no. To be honest, I want to explain what it looks like on the whiteboard and then bring it up to the charts a little bit later, because I think that visually it makes the most sense, like to kind of draw it out and kind of see how we go. So let's get going with that.
Definitely.
All right. So what I'll do is I'll start with just obviously if we look at a daily candlestick first of all, okay. And I'm not gonna make this super basic for everyone, because I know everybody's gonna be able to find out what candlestick is. But obviously you've got the low of the day. Yeah, you've got the high of the day. And then this here is the main body where you've got the opening and closing prices. So say this is an up candle and it's up for the day. You've got the open here and then you've got the close here. Yeah? So literally I look at a daily candle as being my most important information. The data in the daily candle is what I really need to know. Now, if the open here and the close is here, and let's say we're drawing a line graph,
Well, interestingly enough, I saw a really cool indicator the other day. I'm gonna try and find it after. But like essentially, the way it worked was like okay, suppose this was like the actually we'll do like this. So like this is like the daily, right? From here to here. And it would have like a hollowed out candle of like the daily. So you can see like this is the daily candle, how it looks, and then this is like the inner candle, and it works for like all the historical candles. But you could do it for like any time frame. So you could have it like 4-hour candles as well. So it would be like one candle like here, one candle like here, but they're like see-through, so you can like see it without having to actually switch the time frames. Which seems pretty useful actually. Like a bit more noise in the chart, but it is pretty interesting.
it's going to do something like this, all day to get to that point. That's what that line graph is going to do to give us this information for the candlestick. But it's this information in here is where my trades are going to be placed. But I use the information of yesterday's auction and the current price action to make those decisions. So as I get this information every day, if something rejects a high or rejects a low, that's going to be really, really important for me. So if we look at this this, like I really look at this really simply, like milk, handbags, shoes, sugar, whatever you're going in the shops. The way inflation is now, let's say like in America they're having the issues with eggs or whatever. If obviously we're having issues with supply, you know, we're going to get, auction is going to get higher throughout the day. You know, orange juice at the moment, what was going on, it sold off very heavily. We were really, really high. At the point where the prices are too high, people are going to start to produce too much more, and then supply is going to kick into the market, and then it's going to sell off, right?
Yeah.
Essentially, every single day, this is on my mind, and that's the bare bones and the start of the strategy. The actual strategy is even simpler than that. So I just wanted to explain.
This is on the daily candle, right?
This would be a daily candle. And this gives me my ideas for the following day. So like 9 times out of 10, and I'll probably say let's maybe put this down to 80% of the time. If the previous day is long, I'm actually looking for longs the day after. I'm always going with the flow of what the auction's telling me. I'm very rarely looking for mean reversion strategies or something like that, unless it's a mean reversion strategy in a larger underlying trend. So I'm always looking at this sentiment. Where is this auction going from the day, the week, and the month? I'm always thinking about that for my next day trade.
So you'll be looking at the bigger picture.
Yeah, I do look at the bigger picture, but most of the time I'll draw down into yesterday's price action.
Okay.
Yeah. So now we've got this out of the way in regards to what the daily sentiment means and what the actual candle means. We then look at, let's say today, for example, after yesterday. Sentiment was really poor in the S&P 500 yesterday. We had a huge sell-off, isn't it, by the end of the day? So I'm then going to look at what Europe is telling me, what's going on with the data. You know, we've got inflation data tomorrow and stuff like that. With that, all that new information that I've got coming into the session, after a big sell-off day yesterday, are we gapping down today? Is the auction starting lower? You see what I mean? So then there's always this is the first clue. The first clue for me is like yesterday, okay, we had a bearish auction. Today, our sentiment is already starting really poor. Where are all of the big stocks opening up for the session? Where are the first trades? And that's a huge advantage of having the pre-market data that we get. We get pre and post-market data. So we can watch the ticker tape and the flow of all of this before the market opens to get ready for the market open to see what the feel is. So yesterday I was trading Google. I had a Google short, I believe, and I won the trade. But as I was leading into the session, I could see every time it was getting bid up, there was a huge seller in there, and it was coming down. And then, like, basically, even prior to the open, because I watch it like very, very carefully, I was seeing gaps down into the, and you know, I was sitting there thinking that sometimes this is this is where the trading gremlins get. You're thinking, if I entered that pre-market, I would have won it by the time the market opened. You know, I could have done that, but I obviously waited, and it worked out fine for me yesterday. But that all came from the auction.
When you say the auction, is that at the market open, or is that just throughout as well?
Yeah, so I will look at it in most trends. So like let's say for example we're heading into Europe, US Open. I'll look at the European one first and see how it goes. And because we've got the futures markets as well, we can look at 24-hour charts and stuff leading into it. So I will take that into account as I'm heading into the US Open. But I do only really trade for the first hour of the day.
Incredible.
Yeah.
So is that part of the strategy as well?
Yeah.
First hour, so
Yes.
timing.
So let's then simplify it again, because obviously that's what I said, a 5-year-old could do it, right?
Yeah,
so I'm going to use all the colors. So essentially, because we're going down at the moment, I'm going to do it in a downtrend, right?
Yeah.
So if we've got like this nice wave pattern down, and then all of a sudden, you know, we got this into heavy. Of course, in the past, I'm going to take a look at the massive support and resistance levels and round numbers. I will take that into account. But we often see them break more often than not. So like Tesla had a massive level recently on the longer term charts, the weekly charts and stuff, but it crashed through yesterday. You know, we were down 11% in the end in Tesla.
Yeah.
So then we've got this. So let's just say that this is the price, okay? Then what I've got running through it are like my moving averages, but mainly because I don't really use them for indicators. I just use them to smooth out the trend. So if something on my 2 time frames, which are my daily and 5 minute, if something's moving below the moving averages, I'm only shorting. Yeah.
So you're looking at daily and 5.
Yeah.
So daily is your sort of bigger picture.
That's my anchor chart, the bigger picture chart, 100%. And then the 5 minutes where I trade.
5 minutes where you trade.
Yeah.
Anything in between that you look at, or
No.
just from daily down to 5?
I tell you why I do that, because obviously I use the gaps.
Yeah.
So if the stock market closes at a significant low or something like that, I don't want all that muddled up data that comes in everything in between. I want to know where the market took it at the close and where the market's going to bring it at the open. So that stuff in between, I actually don't even want to really know about.
Really?
Yeah, because that sentiment, that adds to the sentiment for me. So
do you think it's beneficial? Because do you feel like a lot of people, they hear top-down analysis and they believe that they have to go through each time frame a lot of the time, creating conflicting sort of ideas? And
exactly that. I think that if I was trading a 5 minute chart and I was looking at monthly and weekly levels, I could easily win a trade within that parameter. So I even though the monthly level is there or the weekly level's there, the trade that I'm looking for is generally about like $1 or $2 difference in the price most of the time. If it's Tesla and Meta, they're high beta, so there'll be more than that. There'll be $5 or $6, but that's not going to make a lot of difference to that monthly level. Most of the time, when you're testing a monthly level or a weekly level, it'll trade through it anyway to come back and close above. Yeah. And I'll be winning the trade in that portion. So that's why it doesn't make a difference to me.
Hey guys, just a very, very quick one. If you're enjoying this playbook and you want to get it sent directly to you, make sure to go on chartfanatics.com, put your email in, and every episode we drop drop, we open.
That's in the
Actually add the playbook to your TradeZella. Make sure you go check that out as well.
Is it back? I think it's back. Interesting. My internet died again like they did the other day. Odd. There's like a huge snowstorm here right now. Perhaps it's related to that. Should be good though, yeah? I mean, look, let's see on my phone, I suppose. Blah, 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 blah. Blah, 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 blah. Okay, cool. It works. That was a little alarming.
got an area about. It looks really simple when it's laid out like that. Now, so
moving
right.
Yeah.
So we've
to your TradeZella. Make sure you go check that out as well. But let's get back into this episode.
So going back to this, right?
Yeah.
So we've got the moving average, which is in the purple. We've got the price data
What would be the
that's in the red.
moving average wise?
So normally, like depending on the time frame, it will be between a 50 and a 21.
Okay.
So it's quite short. It's a short moving average because I'm a day trader. Frame it will be between a 50 and a 21.
Okay.
So it's quite short. It's a short moving average because I'm a day trader, so I trade in and out quite quickly. So now we've got this auction. So this auction, right? It looks really simple when it's laid out like that. But you know, I'm throwing in what I think about that level there is really interesting when you get this, because obviously you've come in, the price has stopped there, you've got an area of congestion here, and it's come back to test it before we go down.
Yeah.
That's the auction area in theory. Okay. So we're flowing down. We've got the auction area. Now anything that kind of comes into there, and then we get a bearish candle pattern down. I mean, when I said it's that simple, it really is. So this there, the chart on the daily often mimics the 5-minute chart for me to take a trade. They normally have to look quite similar. If the daily chart is looking like this, but the 5-minute chart is looking like this, I'm actually not trading that.
Okay.
I'm only trading it if it's got the same kind of 45-degree angles on the way down.
Okay.
I'm trying to match them as much as possible, because when we say like swim with the tide, that's what I mean. I'm only ever
Say
really
if the
swimming
price
with the tide.
daily's like this, 5-minute is like this, and then within your time window it starts to then do the 45-degree. Is that when it's then in play?
Correct. Yeah, because then the thing is that as well, if I change the colors on this, I'm going to reverse them. This is going to happen with that moving average, right? And then it will start going like that. Okay. So then when this price starts to catch up and get underneath the moving average, that's when I'm looking at that trade.
Okay.
So so the indicator isn't an indicator for me to take a trade. It's just an indicator for me to make sure, look, I'm on the right side of the tide, both directions, on the daily and the 5-minute.
Yeah. So you want that correlation between the two.
Correct. And then like bringing this all back to how it comes around with the auction is because we get data throughout the day. We get price earnings data. There may be some news, things like this. Like Cisco Systems had data last night post market. This is a picture that's evolving. So this week, obviously, we've got the CPI coming up on Wednesday, and then on Friday, we've got Michigan inflation expectations. Yeah. Now, Michigan inflation expectations on every calendar is normally quite low on the significance, but last time it came out, we saw one hell of a drop because it came in really high. So as this information kicks in, that's what that auction's going to do for us. If we see, like, all of a sudden, all of the Mag 7 dip below all of the moving averages when the underlying trends are going down anyway, we're looking to catch those bearish candle patterns that look a little bit like that in and across, right? So it is really simple. And when I mean bearish candle patterns, we could be looking at, shooting star formations, bearish engulfing candles, anything that can take the price into an underlying trend.
Would you say it's less so about the pattern itself in terms of the terminology used or how it's presented? It's I think that's where a lot of people get caught up, because they focus on that. Yeah. When in reality, it's just what that represents.
Yeah. So we call it the candle matrix. So like I said to you in the last.
I thought this guy was going to use market profiles. Didn't he start talking about market profiles at first? Anyways, I'm going to go brush my teeth and we'll finish doing this dangity thing.
Perfect, almost divine. They draw noise, I draw design. They lose control, I sip my wine. Tú lo ves, no lo creo. Tú lo sientes como fuego. Imaginary, solo pa' ellos. Pero ella toca donde quiera. La línea, ella no miente, no. Price moves slow, pero toca mi mente. Yellow dash, they say pretend. But I just wait and then it bends. La línea, she move like a flame. So close, then hit my name. Feels so soft like lips at night. They call it ghost, I call it right. She touch it again. Same line. Again, which means always. Marcos. That it? He got again, not new. Same with Kid, same fate too. Shot flip fast, I ain't blink. Man play clean, he ain't think. Got bad, twice maybe three. Try break out, price played me. You chase green, I lay traps. You play loud, I press maps. He got again, not new. Same with Kid, same fate too. Shot flip fast, I ain't blink. Man play clean, he ain't think. Got bad, twice maybe three. Try break out, price played me. You chase green, I lay traps. You play loud, I press maps. Same candle, same scream, same thread, new dream. He said it's different, it ain't. I drew that line in paint. You click buy, click pause. You hit top, I hit cause. You want hype, I want price. You still lose, I trade twice. She said how we get wrecked again. I said same zone, same end. He saw pump, I saw snare. He got caught, I wasn't there. He got caught. I wasn't there. He got caught. He got again, not new. Same wick hit, same fate too. Shot flip fast, I ain't blink. Math play clean, he ain't think. Got bad, twice maybe three. Try break out, price played me. You chase green, I lay traps. You play loud, I press maps. Mark that zone with silence first. He stepped loud, charted the worst. Stop, got clapped, I watched it fall. I ain't move, he risked it all. Draw once, I wait weeks. He 8 moves, I press peaks. You tweak charts, I stack fills. You chase patterns, I kill wills. One tap and the whole thing turned. TP flash, another got burned. She said mask cold, I said true, but I don't miss it, neither do you. Again, just means you never learn, and I never had to speak. He got again, not new. Same wick hit, same fate too. Chop flip fast, I ain't blink. Math play clean, he ain't think. Got bad, twice maybe three. Try break out, price played me. You chase green, I lay traps. You play loud, I press maps. It's not luck. It's not hype. It's always math. And always again. Marcos.
Yeah. 4 on the floor. 0 in emotion. Marcos. I trade the math, not the mood. Wait for the level, I don't move. I trade the math, that's the groove. You chase hype, I improve. System clean, wrist stay light, entry hit, exit tight. You want fast, I want frame. You want noise, I want name. Volume dry, I stay calm. You press long, I stay armed. Tick by tick, zone get kissed. Stop gets hit, I'm on my list. Trade the man, not the mood. Wait for the level, I don't move.
Okay.
Podcast, when you do this so often, you're like looking at a 1 minute chart or a 5 minute chart, and you can add that puzzle together to make up what a 10-minute chart is doing or what an hourly chart is doing. You don't, after a while, you don't need that stuff. So essentially, if we're looking at the candlestick pattern itself, so let's say that there is the up candle that's coming across, and let's use this one for the down candle. We've then got this and a small rejection to the upside. Literally, right? If this down candle breaks the low of the other one, you know, that's enough for me. Something as simple as
What
that.
time frame would that be?
That would be on my trading time frame, like the 5.
Okay,
or
so then from that, you know, with your experience on the 1 minute, that's a break of structure, right? So without having to go there and get involved in all those emotions and then sort of messes.
Yeah, and then, you know, even breaking it down so everybody understands it a bit more, because it's such a fluid kind of trading exercise. Like, you know, my stops, you know, are basically in around the candle structure high.
Yes.
So then I'm, you know, I always go for positive expectancy. So I always go for 2 to 1 on every single trade that I'm in. So this is the first part. The whole part of that is that let's see how we can boost our odds in our favor. So if we're looking at a market like Tesla that's just taking a huge dive at the moment, it's not going to happen forever, but if it's taking a huge dive at the moment on the daily charts, right? on the 5 minute charts, it's still trending down in that. We then come back in to test what we call like the value area or the area of congestion that we're coming in. What's the auction area? If as long as we're under there and we're getting some bearish candle patterns, you know, I'm good.
So just to be clear, in terms of the auction, is the auction everywhere really in terms of every candle? But the auction area is where it's, as you say, most congested, meaning the area that seems to be the mean, the average of where price action is interacted for that day or whatever time frame you're on.
Yeah, correct. So if we rub this out for a second, for those of the people in the world that may not have seen another chart type, because everybody focuses on candlestick patterns, right?
Yeah.
So with market profile, right?
Okay, so you guys use
what we do with market
profiles.
Profile, it goes A, whatever like that, right? For the first half, like for the first set of trades, right? Then what will happen is, depending on your designated time frame, would normally do.
He's talking about the TPO, right? This is like a TPO. He's just using the blocks on it. The A, B, 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 B.
Hour, okay? If the price goes up from where A finishes, so let's say the last, let's say for this period for 5 minutes, that's where it ends. B will be here, B, 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 and if it breaks out, B will be up there, okay?
Okay.
Then let's say B finishes here and it stops at this, it will be then C, 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 like that, and then it will carry on D, 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 like that. So let's say this happens, yeah, and then let's kick in E, 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 like that, and let's say the price finishes there for that. This area here is the time where price spent the most amount of time.
Yes.
Yeah, so that price there is where the price will spend the most amount of time. That's effectively the value area.
Yeah.
If we were looking at this in chart form, it then does something like this. It goes all the way up there, then it settles down there, and that's what the chart would look like with this particular price action. That's an auction. We started the day, lows, market went up, up, up. It found a high. It settled in around the middle.
Yeah.
So the auction area is this. This is the congestion area is this. So that's...
And would these be like, would you be seeing orders here, like numbers in orders?
Correct, because like with a footprint chart, they actually write the orders in the numbers in here of how many longs and how many shorts are here. Now, as an equities trader, it's a big skill, but you can obviously watch the tape and you can watch the order book. And you can see, let's say, for example, this is like 500 or something like that in SPY. You can see like a lot of people coming in at 500 or whatever. There's a lot of orders there. Automatically, this will be the volume profile area, and it will be the area in which the participants in the market will place the most amount of trades. Yeah, and it will become a magnet. That's why support and resistance levels exist. That's the whole point of them. You know, is it gets there, there's going to be a reaction there because there's the most amount of orders there. So in my mind, then, if we're long on SPY, if we're using this as an example for SPY, and we're talking about the level of 600 at the moment, if we're long and we're trading above 600, this has happened at 600, right? As long as we're above 600 and the trend's long on both time frames, I'm going in that long direction because all I've done is just stack those odds, get that positive expectancy, that edge is slightly in my favor. That's all I'm trying to do. Tip that, even if it's 5%, 1%, 2%, that's all I'm trying to do.
And really what you're doing as well, based on this, is are you scalping, would you say, day trade?
Do you know what? It's actually not as much of a scalp as some of the other guys like Lance, etc. All of those guys. I take one trade a day. So normally, if my stop on something like Google or whatever it is like 60 cents, I'm normally aiming for $1.20. So that could probably take about, on average, my trades last about 4 to like 8 or 9 minutes. So they're not very long.
I'd say scalp.
Yeah, if that's a scalp, that's a scalp. But I've got another trader like in our trading room, like, you know, who trades like literally like 10-cent stops to 40-cent targets, like a lot all day.
Yeah, a minute or two.
Exactly. So I see him as a scalper.
I know, it's so interesting, and I think it's a really great point actually. It's like perspective. Right. You know, someone might sit there and say scalping doesn't work. I had that recently, to be fair, guest, and a lot of people get annoyed when in reality, what I've noticed, and you really see this when you go into the more professional picture, is that people do have very strong opinions. More so because of what's worked for them. And it's not that sometimes they do say like it can't work. Like they'll say, let's say like scalping can't work. But they might be referring to scalping like that, like seconds, while you know they understand that's, you know, minutes or what they would make class as a day trade. And that's where I guess it's not a problem, but it's something to definitely be aware of as the general audience, especially coming into trading if you're in that sort of beginner intermediate.
I'll bring up something there because shout out to Lance on your podcast, because what he was saying about the technology that you have, also, you know, that practicing your game, like when you were speeding up and slowing down the charts and all that, brilliant. Like we do that. So like he's giving out all our secrets, man. Like, but yeah, we genuinely do that. So what happens is that with the technology that we have, we trade direct to market. So everything we trade is on an exchange. If we're trading the DAX, we're trading on Eurex. If we're trading copper, we're trading on CME. If we're trading stocks, we're trading on NYSE, right? So we don't have a spread on anything that we trade. A retail trader can't do that. Can't scalp. There's no point. There's no trying to enter that game. If you're playing against somebody like me who's got all this technology and this market access at home, I'm gonna
when you
win.
say scalp, you're talking the second side.
The seconds, yeah, because we get in with like 400-500 contracts with like Tesla, Google, Apple, and all this kind of stuff. A scalper of ours has no spread. The commission's tiny in comparison to a spread and a commission a broker will charge you. They're getting out 20 ticks later. They've made $700-800 on that when you're overcoming your spread on that $700-800 that we've just made. It's pointless. So that's why I would probably say maybe there's that misconception saying, oh, scalpers don't work. They work if you've got the right market access.
Yeah. So like the technology will matter. And
Well, I mean, I get like that's the Dash Trader, right? It's a direct to market kind of thing. Interesting.
Maybe even who you're trading with and what, because as you say, the average retail trader 9 times or 99 times out of 100, for example, won't have access to that sort of stuff.
Yeah.
I love it. But the auction is very fascinating. So you're looking at that average, you're looking at, so that auction is everywhere. Yeah. But the main focus of that auction, or say, let's actually break it down. Actually, that's what came to mind earlier. In terms of why is that area of interest? It's because that is where almost the bidding war is taking place.
Correct.
That is where you're going to see between the buyers and sellers who's in control.
Yeah, so let's look at fair value. So if we're talking about like, Canada Goose jackets or something like that, right? So, the price of those went up to like $1,000 or 800 quid or whatever at some point. And then what we then see is like an increased supply. So if, for example, something gets too popular or there's a lot, so the easiest example of this is gold, right? So if we're trading with gold and gold is auctioning higher like it is at the moment, as soon as we get close to $3,000, right, the average cost of production is like $920 to $970 an ounce. So they're selling it at 3,000. If they get to 3,000, Newmont, Barrick, all of these Yamana Gold, all of these gold companies are going to produce more because they're making more money at that stage, right? That's what's going to drive the price down. So that's what we mean by this auction, is that if we've got a fair value area where the market thinks it's fair, but also the producers think it's fair and they can make enough sales, that's that fair value area, that auction area for us. That's what we think it is.
I love that. And another prime example, I just used the word actually, but prime a few years ago.
Yes.
The supply was so small, you couldn't get it. So then the prices were so high.
Genius.
So they created obviously a huge amount of supply. Which then the interesting thing is people don't realize it's not the shops who are buying it, it's the suppliers who are then ordering it directly from them. So they're creating this huge order, but then now the demand has dropped. But then the supply is so high, so the price has dropped with that. I love it.
And we also, when we got all those questions and stuff that we were getting on YouTube and on our inboxes and all of that, it was really interesting to see that the focus on the psychology versus the focus on the strategy and how that was all working together. This wouldn't work if you didn't have composure and if you didn't let it play out. So in the day, limiting the amount of trades that you've got, making sure you're using the correct money management, this is all part and parcel to it. I still just genuinely feel that 33, this is potentially the smallest part of what makes this even possible. When I'm sitting there and I'm watching the auction and I'm watching this happen, if it's a day where it doesn't feel like price discovery is going to be made and the auction isn't feeling right, there's no problem with not trading for that day. I do try and take at least one trade a day because I'm trading around the open. It happens so fast. So that the volatility enables me to make my money because it's moving so quickly. I need the volatility for this to work for me.
Of course. So what would be an instance, or what would it look like in terms of if it's not looking right to you, you're not getting that feeling from the auction?
Well, we've had this recently. So
probably just like a balancing day essentially, right? Probably was going to say.
Normally when information is coming out, so Trump is an absolute nightmare for me. And I like the fact that he's inspiring volatility. So don't get me wrong. It gives us more opportunities in the market. But what's happening is he seems to wait for the market open to send out all this stuff. So we've got all of this going on. We've done all our analysis. We've set up the room. All of the traders know sentiment and what everything's going on. And then 10 minutes into the session, you get these headlines from Hassett. You get these headlines from the economic advisors. You get these headlines for a defense secretary and all this kind of stuff. And it's either a trade war headline, a Zelensky headline or something like that, or a Russia headline that then flips the auction on its head. That's where we're going to have problems.
Because you prefer to have a planned trade versus than having to react in the very moment.
Yeah, but think about it. So what I said at the beginning was from the daily charts, the bigger picture. If we're, for example, long and we're gapping up and everything's looking all fine and everything's good, my lower term time frame chart, my 5 minute chart, is going to start lining up with that, and then all of a sudden those headlines come out and it shifts. So then I've not got that synergy between the two, and that's when I'll step aside. When I'm not going with the tide, I just think there's no point wasting my money.
Let's take a break for a minute there, guys, because I want to tell you about our preferred
I thought I was going to say when you have like days with TPOs just like symmetrical and kind of not moving and just kind of ding donging between the value high and low, like but it seems like you try to trade when it breaks out of this, right? When the EMA is like following along and it's breaking out the high. Seems like that's what he's doing as his strategy. Assuming it aligns with like the higher time frame moving average it's referring to.
Firms we pay out at AK single payout trader for get the 2300k trader to when strategy actually no thanks to use the Kex trader for available
the statement right that got everyone interested and probably why a lot of people are tuned in right now. The strategy that is so easy a child could do it.
Yeah.
Is this why? Because it's essentially, rather than looking at all these different confluences and different patterns and different strategies and so on, and really in-depth layers to it too.
Yeah.
It's just an auction. Like focus down to the auction.
Yeah, because people then just with all the indicators and the support and resistance levels and the chart patterns, triangles, pennants, and then RSI, stochastics, and all of this stuff, you get lost in what the chart is actually trying to tell you. It's trying to tell you that it's about price. You're forgetting that it's about price, and you're more thinking it's about indicators or about chart patterns and all of this kind of stuff. At the end of the day, that's where the simplistic nature of this comes in. So just grab the thank you. So if why I say it's so simple and why why I believe it is so simple is because if this is the daily chart, so if this is the daily chart going up like this, like the weekly or monthly chart on the S&P 500, literally on the lower term time frame, if we use this color as a lower term time frame, we're getting this every day, right? That's what's happening in there every single day. So I'll just finish drawing in that. So they're the intraday waves. The big purple one is the daily waves or the higher time frame waves. All I'm saying and all I'm suggesting for people to do is only trade this side of that curve. Right.
Yes.
I think Lance was talking about when he was trying to keep going long against a short market, right?
Yeah.
And he was saying, was he calling it the right side of the V?
The right side of the V, yes.
Yeah, this is what I'm saying. So the right side of the V is always going to be that side of the V, that side of the V, that side of the V. That's when the odds are stacked with you. So that's why I'm saying it's as simple as so simple a 5-year-old can do it. Because if the daily time frame is doing this with all the moving averages, and that's how it looks, and if we draw the moving average, it's going to be something like this, right? Going through it. What I'm trying to say to you is when the 5-minute is on the right side of the V, happy days, you're with the bias, and that's why it is that simple. So trade with your daily on the right side of the V, so you're not trying to catch buying the low, because you're never going to get that right. Or you are sometimes, but it's a very low percentage. And I do understand when you get that trade right, you've got a bigger risk to reward.
Yeah.
But it's not worth it, because I think psychologically people can't handle only winning 30% of the time, but having like 9-10 to 1s.
Yeah.
Because then they have to be such a good loser. They're going to be losing 70% of the time. They have to be one of the best losers possible, and I think that's quite tough for the human psyche. I think when you get better with your trading, you can do it. On the other side of the scale, if you're winning 50% of your trades on this side, I think at 2 to 1, I think that's where we want to be.
What is your mindset when it comes to risk with this? Because you're already through this process.
Yeah.
Putting yourself in a much higher probable scenario.
Correct.
So essentially an A+ setup and environment.
Yeah.
What is your stance when it comes to risk then? Are you using static, or are you trying to be more dynamic in these scenarios?
This is probably me being completely open and honest. Even with some of my traders that I have at D&D, they're probably better at it than I am. I'm not as good as Lance was saying and a few others, that when you really know something is in your favor, you're doubling up, tripling up, compounding and stuff on it. I'm not good at that. I want an easy life.
Yeah.
So honestly,
Well, it's hard with the strategy he's doing. It's hard, right? Like it's doing some like 5-minute scalping type execution every single trade. Like that's based. If this is like your playbook, it's just one trade setup. It's gonna be pretty hard to like justify scaling up trades like that, because they're all like the same minimal low time frame edge.
With the same risk every single day, and I compound on my risk in the sense that, let's say for example I'm in casino money and I've got 20 trades worth of casino money. If that 20 trades of casino money turns up to 40 trades worth of casino money, I'll up the risk, so it's back to 20, but I'm trading a higher sum.
Okay.
So that's the way I manage my risk, or a very on a quant basis. So I do it with maths rather than on my feel thinking that today's the big one, I'm going to go in a bit heavier. The reason why is because, like Axel said, I write down every trade that I take and I put a percentage score on my confidence level. And honestly, I'd say 75% of the time, the ones I'm least confident about win. So I'm not trusting that intuition of going bigger when I think it's right. I'm not trusting it. I just go with what my statistics are telling me rather than...
If anything, you should just be using like the Kelly criterion, right? We're doing like a set strategy like this, and you have data for like every single trade, your exact win rate, expected win, expected loss. Probably the best way to go about scaling for him.
Some of the other traders that go big when they feel like they're really right, because I'm not that guy.
I love that. How important is that though, in terms of knowing yourself, knowing your habits and your traits?
It's good. And when we talk about pros and cons of strategies, I would probably say that's maybe a con of the way I trade, because I'm never going to be that guy that has that 50, 60, 70 grand day. I'm at peace with that now, because I've tried to do it and I've lost the money.
But do you have, so in terms of strategy though, do you have people using the exact same strategy who are able to sort of identify that?
Yeah, so I'm going to name drop. So one of my traders is called Marta. We actually call it the Marta method. Okay. Yeah, in our trading community we call it the Marta method. So what she does is she trades the same way as me, and then she'll drop down to a 1-minute chart, and she'll run her trades as much as possible until the 1 minute turns. So she can, on the same trade as me where I'll take 2 to 1, she'll sometimes get 5 or 6 to 1, because she'll she'll like microscopically drop
Like a
down
better
the
entry?
time frame and wait until she waits for the reversal candlestick pattern on that time frame to get out, which means that if we do have great momentum, I'm lying there with my pending orders or my stop loss and my target, and I'm just chilling out, right? Genuinely, I'm so relaxed when I trade. But whereas what she'll do is she'll zone in on this chart and she'll try and push it and push it and push it and be aggressive with it
So
as
more
much as she can.
micromanage it.
Yeah, and she's a really good trader, so it suits her, and her composure makes her handle that. I don't have that same composure.
How important do you think that is, though, to really? Because let's say if she carbon copied you, do you think she would still perform well, or do you think it would go against, her sort of personality, and therefore could end up not getting positive results because it's not really suited to her? Does that make sense? Because it's the same strategy.
Yeah.
Just managed in a way that suits her.
Correct.
Versus you manage the way that suits you.
Yeah, that's why we always have why I can't teach everybody the same way and why they can't teach me the same way, because we adapt it to our own characters. Like, I'm very much of a Buddhist mentality, of a Buddhist Zen kind of guy. So like I'll meditate every day, I'll chill out every day, and I'm not that guy that wants to be staring at a chart for 8-9 hours, and that sounds strange because I love it when somebody's so passionate that they're going to stare at a chart and do all of their learning. I think maybe I've been through that phase,
Yeah, of course. Yeah.
and I don't need it in my life. So because the stress levels and whatever you're going to do is going to be much higher. So I'd rather trade for the first hour, and I'll monitor the market and I'll talk to the guys. But when I'm trading, the cortisol levels and the stress levels are high, and then as soon as I finish trading, I'm talking to everybody about their trades in the chat room. I'm down on just like, well, look, my level-headedness or advice then becomes less biased on what's going on in the markets. I'm done now. So like what I can say to them has no connotation of what's actually going on. It's 100% objective.
Love that. And should we go through in terms of like trade management?
Yeah.
How we're looking using these methods?
Yeah, great. That's a good point, because I think that's actually a big part of being a profitable trader. Actually, the trade management.
Yeah.
So let's say, for example, and I'm just going to draw the candle of what would have happened yesterday. So let's say, for example, we've got this big bearish candle, and we're like kind of closing near the low. So a little bit of a Marubozu close, right? Now this next part, I'm just going to draw with a line graph. So let's say, for example, this is yesterday. So let's just write it. So that's yesterday.
Yep.
And then today we're coming in and we're gapping down here. So this is before we start. We know that the market is gapping from there to there. And let's just call that, let's write dollars, and let's say it's $1.2 down.
Yep.
Okay. So $1.2 down. Now from this point, I'm then thinking, on a really good day, and this probably, I would say, happens maybe 50% of the time. Our research shows that it's about 64% of the time, but it's not. At the moment, it doesn't work that way. I'm straight away, let's change the color for today's price action. I'm then thinking that, look, I'm hoping that we've got a smooth day going down. First of all, right, the first resistance lines that are going to be in my chart are going to be this one.
Yeah.
And then I'm also going to have the gap level in there as well. So
Okay.
I've got two levels that, one, if we gap fill and we get to there, that's an auction area.
Yep.
Yeah, because we want to see what happens at yesterday's low. And then if we break through there, we've then got that level there that we can potentially look at this. So this whole area has a chance to either be rejected because the market, hopefully, hypothetically, at the first trade could start doing this, come back and test there, and then go that way. And this would then be my ideal scenario.
Okay.
But then sometimes, obviously, this can happen or this can happen. So I'm short already in my mind because the daily chart's telling me that I'm short.
Yes.
And then I've got 3 or 4 different scenarios in which an A+ short setup's going to come in for me. So if this doesn't happen, I'm just not bothered with it.
So price just continue to sell off without any sort of retest of any of the zones.
Yeah, correct.
That's, stepping away. If, let's say, price just comes in and just stays in that zone.
Yeah.
You're stepping away.
Now the issue is that at this part here, right at the open, it can happen really quickly.
Yes.
It can happen really, really fast, and that's normally what I'm in. So as soon as we're in 10, 15 seconds into the open, really you're going to see a lot of orders coming like that. And if it gets below here, normally you get like quite a big tank. And so that's why like my stop losses are generally 60, 70 cents, aiming for a 1.5 target most of the time, something like that. It happens super fast. And that in context of the range of the day, when I show the charts a little bit later, I'll show you range of the day in stocks. If we're looking at the big ones, Nvidia, Apple, Google, we're talking maybe about $3 ranges, something like that on an average day. So I'm trying to capture like $1 of it, $1.2 of it. So not a lot of that big range.
Would you say because of the speed, do you at all micromanage or manage your trade once you're in it in terms of break even or anything like that, or because of the speed it's not really something that needs to be focused on?
We have a massive debate about this, and this is the good thing about being in a prop trading community, because we do studies. So there's a couple of traders. So I describe myself as a gap trader. Other ones we call them candle breakers because they look for the specific candle patterns. When they're at 1.75 to 1, most of the time they'll move to their stop to break even. I'm wondering, is that emotionally or is it statistically? And then Felicia, who trades with us, she goes through all of her stats meticulously. So does Rob. They've told me categorically, from going to 1.75 to 1, if they move their stop to break even, that's statistically viable.
Mm.
For me, because I'm so close to the open and I'm trading around the gaps, it's not, because the whipsaws are so high.
Mhm.
I've got a trader called Anton who's doing this at the moment, and while volatility's been so crazy with all these Trump headlines, he's hit break even, like, you know, I would say over the last 7 days, maybe about 4 times, because it's come down so far. He's got to 1.75 to 1. He's moved his stop to break even. It stopped him out. Some of them go on to win. So statistically, I would only take the data from this moving stop to
You know,
break
the
even over 100.
thing about this that you can be very mindful of is like you don't have to. Say the trade is running and you don't want to get like stopped out at break even, but it hasn't reached your target. You can also shave a little, right? You can like shave a little, and that way like your stop at break even is like much lower than the actual break even point. So it doesn't have to be some like binary like all or nothing on the break even stop.
I think if we're in a really, I'll call it a dark time like we are now, honestly, man, it's tough.
I do that a lot when I don't get like a perfect like pixel perfect entry. I do that a lot because that way like I don't get fucking tagged on the next like golden pocket pullback.
If we're in this time, I would say moving stops to break even isn't a good idea at this present moment in time, because of the volatility of the candles. The individual candles are so volatile, it'll stop you out before it goes in your direction.
Yeah.
And that's where we were talking about pros and cons. That's where I see a big con of what I do. We're setup traders. We're systematic traders. We can't all of a sudden think, oh, like, you know, today's a really, really good short day and this headline's come out and I'm going to run with it and make a shitload of money. We don't think like that. We trade specific setups every day because we keep a track of the statistics. And I think if you're a new trader or a beginner trader, that's the better place to be.
Yeah.
I have one trader called Darren, who I just leave him his risk and he decides what he does with his risk every day. He does my head in and he knows that in the chat room. Honestly, I'll say to him, are you going rogue again today? And we've got a wall of shame as well. So if anybody makes mistakes, they go up on the wall of shame. So he's normally on the wall of shame, but literally he doesn't over risk every day. So he does whatever he wants, but he has a set risk and he has a set target for the day. If he hits his risk, he walks off. If he hits his target, he walks off. Everything in the middle is a chaos. So but he's a very, very good trader. He's a profitable trader as well. That's what we were saying about each to their own.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool in is sync edgely adding F10% off them out. Let's get back to
We'll go to the chart to show you this in a live scenario
course, yeah.
a little bit later on. But really, the only thing that everybody needs to think about is depending on your time frame, the moving average is important. So if we're looking at big macro trades like monthly, weeklies, I'm obviously using a lower moving average because I'm day trading, right? So if for example, I'll draw it so they're both alike and we're still in uptrends for a lot of things. So if we look at a UK stock like Rolls-Royce or something, right? So Rolls-Royce has gone like really, really smooth like that, right? Now, the moving average that I would want to use might not be the 21 for something like this. It may be the 50 or something like that, or something that's a little bit slower, because as long as we're trading above that, so let's get this in. So like basically, as long as we're trading above that and the moving average is doing this, it's these areas on the weekly or potentially the daily are the ones that I'm looking at, the retest areas of the moving average. Because then if this is the monthly, let's say this time frame, and I'm going down to the daily, so let's completely change the colors and use the daily in red. So, and I've got that similar type of pattern and like it does something like that, that's the area, right, that I'm interested in for the long on that lower time frame, because that's the auction retest before we get the breakout.
Yeah.
So that's why the moving averages have to match the time frames quite nicely, because you know I want the break into the moving average and the breakout, because the moving average isn't what I'm using to trade. It's just making sure that the edge is in my favor on both time frames.
Yeah.
So literally
Using
just
for that
smoothing it.
alignment.
That's it. So I'll write down the time frame so this is clear, right? So this is the month.
It's kind of how we made this thing, right? That we got from SMB, like the scanner. It's essentially like this is telling you the moving averages if they're in alignment on the different time frames, right? Like this one's trending up, and then this one's like not, right? So like you're not having alignment along all the different time frames. Whereas like I don't know, it's been trending really hard. Of course, Google. The Googs. Like same story. This one's like been losing momentum on like the medium, whereas like the other 4 are all in alignment. Like here, like, all 5 are in alignment, right? It's like a very quick way to like scan if the trends are aligning on all different time frames.
Is the day. So that's what I would want to see between them. I want to see the month looking really smooth, nice flow, looking like a river swimming in that tide, that direction. This one is going to be the more volatile one.
Yep.
So when we get that auction area test and that breakout of the auction area test, it's so simple because this here gives our natural stop. Yeah.
Yeah.
And then we're looking for that 2-to-1 target to the upside. It's giving you it. The market's giving you where the significant low point is if it rejects that auction.
Would you say this is primarily a strategy for stocks, or can it be used elsewhere?
I'll explain why. So again, I agree with some of the other guests that you've had on about the marketplace for FX trading and for the indices. Now, they're very efficient markets. So the FX market, and this, let's go back to the summer before COVID. We used to, when I was growing up in the FX markets, because I used to work as an FX broker selling forwards and options in that market, we used to see swings in euro, dollar, and cable of like 120, 150 pips a day. The summer before COVID, it dropped down to 30 pips a day. I don't know if anybody remembers that summer of 2019. All of the FX traders, options traders and stuff were leaving the market. I had mates at JP Morgan and stuff going to work for sports betting companies, like genuinely, like quants going into different sectors and stuff because FX was dead. They were just like, well, what's the point of trading this? And that was that thing about our algorithms coming into markets, high frequency trading coming into markets, smoothing out the price data. It's good if you're a trend follower. So that volatility, traders need it. So if a market starts to smooth out like that, very hard to do something like this. So if you're trading the S&P 500, the E-minis, right? The daily ranges on the E-minis is a lot smaller than it is on stocks. So if you're trading the mid to large cap stocks, like Tesla will move $10 a day.
Yeah.
You know, that's a lot of alpha to be captured within that $10.
Yeah.
The DAX, I quite like it. It's got enough range in the morning and stuff to go through. So on the DAX, we're working at like 50 cents of a stop loss on average in terms of the volatility rating with a one euro target, and it meets that every single day. So that's all right. So FX. There's the other thing about it is two-way flow, right? So you can buy euro, sell euros, you can buy pound and sell pound every day, and then you've got two opposing fight.
Yeah.
With gold, you're either buying gold or you're selling gold. That's two variables. With stocks, you're either buying Apple or selling Apple. It's two variables. So there's 4 variables in FX markets. There's 2 variables in most other markets. So I find that hard as well. Lastly, I'm just going to throw this in there. If a currency gets too strong, it affects somebody negatively. If a commodity gets too strong, it affects somebody negatively. That doesn't happen with a stock.
Yeah.
A stock, everybody's happy if they go up to the moon, right? Everybody's making money, right? But if the pound goes up too much, then nobody's going to be able to buy our exports. If oil goes up too much, we can't afford to put petrol in our cars. So there's an economic impact to this for currencies and commodities that there isn't in stock.
I love that. So it's really understanding volatility is a huge part of it in terms of, you know, where you can get edge, because you're not trying to, I think a lot of people look at, say, for example, the average pip move on euro. Let's say if it's 70, 80 pips, right? A lot of people are like, I need to get that 70, 80 pips.
Right.
Versus, as you mentioned earlier, let's say with stocks, if a stock moves on average $3 in a day, for you, you're just trying to see if you can capture $1 of that, $1.20 of that maybe. So by knowing that you have larger ranges on certain assets, it allows you then to have a lot more comfortability of what you're trying to capture. How large is the slice you're trying to capture?
Yeah, correct. And you know, we measure this all of the time. I say to a lot of my traders, for the average range of a candle, of a daily candle, don't trade in the top 25% or the bottom 25%. You want to be trading in the middle portion of that candle, because if we do get to extremes,
and that's that auction area, right?
You're going to make a lot of money.
Yeah.
So that's the point. Know where your trade is. Work out what you're looking for from it. Something like this, you know, you've got 2 moving averages, one on a higher time frame, one on a lower time frame. If you're trading above them on both, you're going to win. If you're going long, if you're short, you're trading below them. You only need to win 50% of the time. That's what I say. Like a 5-year-old could do it, especially if you color them the way I color them. So I color them yellow for down and blue for up.
Yeah.
So if we're under all the yellows, we're shorting. If we're above all the blues, we're going long, and we'll win 50% of the time. And we proved that. You know, so it really is that simple.
Yeah.
The rest is in the mind, right?
I love that. I love that. Cool. Let's go over the pros and cons quickly and then pull out the charts for the people. You already mentioned some of the cons.
Yeah.
Very simple, right? For someone that's like new to trading, it's like a pretty good video to like base your trading around. And maybe like the TPO profile might be a little bit for them, but the rest is like quite straightforward. Not particularly scalable though. You can't like scale doing this.
Okay, cool. So if we start on the pros, I would say it's the simplicity of that, right, is a huge pro. It's not something that's difficult, you know, trading above both moving averages, trading below both moving averages if you're short. So that's fine. A con for me is what I was talking about in terms of the restrictive nature of the risk to reward, right? So I don't know, how would we describe that? It's systematic. So
you can say limited in its risk to reward. But equally, you've also highlighted how, depending on the trader, you could increase it. So like, I can't remember the name you said.
Marta.
Marta, that's the Marta method, right?
Yeah.
So they've found a way, but obviously if we're taking exactly how you do it, then But also on the other side, it's mechanical rule based. I would say.
Yeah, it is. It is very rule based. So this is the thing. So I deal with At DND, we mainly want intermediate traders that have been trading, let's say, for 2-3 years, but haven't managed to turn the corner into going profitable. Because we do teach beginners. We do have a beginners course and everything, so we teach people who are brand new. But really, the ones that like have floated around to different funded accountant firms, have tried trading with brokers, and they're not sure like why they can't turn that corner, we turn that corner for them. We really help them. In terms of the beginners, like the trader like Judd, for example, we want to get them fresh so they learn the good habits as they grow up, rather than coming with bad habits, having to turn them if they're new. Like, for example, I don't know what it is in people's heads that always want to trade mean reversion against they always say, oh, the stock market's at all-time highs, I'm going to short it. Like every single day, people that do that, just I don't understand it, right? So that's, the rule-based thing is 100% imperative for a beginner. I would say that. So that's good. In addition, on the con side,
I mean, the thing about like mean reversion is like hard to say. I think mean reversion is the best way to trade in terms of like gains and juicy RR trades. Like that's like the best times to be getting in, right? If price is like doing this, and you're getting in here for this massive leg down with like a tight defined stop, like you're getting like 10, 20, 30 R fucking trades, right? With like pretty defined minimal risk. The problem is like you have to know when to be doing this, right? If you're just trying to fight the trend like an animal the whole time with like very little edge, you're just gonna get rolled over and over. You have to be like very selective with the spots that you do it, and like manage risk very effectively. So probably not ideal for people that are just beginning. So I get where he's coming from, but I wouldn't be shying away from it either. Like a lot of these trades, right? Like when we kind of review these videos and people talked about like their biggest trades, what were the biggest trades these people all had? They were all like the mean reversion trades, right? Where they caught like the bottom of some like the tariff dump, for example, so on and so forth.
I would probably say for that reason, it probably does take a bit of courage and a bit of bravery, right? I'd definitely say that. So
I'd say, because even the cons, just to bear in mind for the audience as well, the cons aren't saying these are bad things. These are more so things that you have to be aware of, things that could be a hurdle when trying to
trade-offs
or try and actually apply this. So it's not necessarily saying it's bad, it's just more so something to be aware of, or in comparison to another strategy, could be the bad side, if you will, in comparison to the good. Because I believe every strategy has its own pros and cons, and it's actually being aware of them that helps you to understand what you're doing.
Yeah, so the reason why I said actually courage is because something could be going down like Tesla for so long. And, I have traders in my room who said, like, how far can that keep going? The thing is that, over the last 7 or 8 days, I've shorted 4 times. And I don't know where it's going to stop. I'm the first person to turn around and say, I don't know where the bloody markets are going to go. I'm just following those rules and keep on trying to go short. And I've won 3 out of those trades. So, I've lost 1, absolutely fine. But this is it. Like, that's one of the
Would you say patience is another one in terms of, as you said earlier, there may be times where you have to sit on your hands, especially as we talked about, if the alignment isn't there, again, you have to sit on your hands. And I know a lot of people would probably, that's a hurdle that some people would struggle with because they're so used to just being active.
Yeah, definitely. And then, that's why.
I mean, in the grand scheme of trading, it's just very little patience in the strategy, right? You even set himself as a trade every single day. Like, there are people that have strategies where you're taking like a handful of trades a year. So when it comes to patience, I wouldn't say necessarily applicable here. Very active trading strategy.
2 trades a day is right. So across our data bank from our traders at DND, so I go over the reports of every trader every Friday, and I don't know why, and this is just how it happens. The traders that take 3 or more trades a day are currently less successful than the ones that take under 3 trades a day, and I don't know why. I have no clue, because our strategies are 50-50, right? So we're 50% win rate most of the time, but it just works out that way. The people that overtrade, I think it's because the emotions or the fatigue of getting to that point,
Also, like time-based, right? Like if this strategy, if they're, I don't know if they're all using the same strategy. Seems like they are using something similar. Well, he's trading the market open, right? Their strategy is the market open volatility. So if someone's taking 3 trades, that means the 3rd trade is like much further away from the open than the first one, right? So I'm sure there's like edge decay in their strategy just from that.
Is what makes them lose trades at that point. But on average, our traders who trade under 3 trades a day are more successful for some reason.
There's an interesting saying that people say is that you can only make, I think it's like 2 really important high quality decisions a day. And the fact of, because at the end of the day, you're trading, you're trying to make a very strong, informed, high quality decision when you're placing that by yourself.
Yeah.
And therefore, trying to say that you're going to get 5 high quality decisions.
Yeah.
One, making sure they're high quality, when in reality that's very hard to do.
Yeah.
And then secondly, them being right as well on top of that.
Yeah, true.
I think that's where it comes from. And I think, as you say, like the more trades you take, whether positive, even if let's say you've taken 5 and they're all positive so far, the euphoria, the emotion of the positive side is still just as strong and just as dangerous as the negative side, right? And the reality of people being able to silence that and be very neutral, no matter how good you are, how experienced you are, you're going to feel great, right? You're going to feel great, especially in the marketplace like this. So I think I think that's what it comes down to, is that the level of quality decisions that one can make. I think if you meditate, if you look after yourself, maybe you have a chance of increasing that from 2 maybe to 3. But I don't think there's necessarily a way that people can take that to 5 or 6.
Yeah, because James, who trades in the morning, my business partner, he always says to me, like, why you start upping your trades now. You're a good trader, you're making money. Just trade a little bit more. And one is probably maybe a lifestyle factor, but like I always say, look, if it's not broke, I'm not changing it. I'm making money, so why do I need to do this? Like, I'd rather leverage more money on that one trade a day than take another trade a day and add another bit of risk unit to it. So yeah, specific times. So this great thing about the time window. So in our chat room, we do the 7 a.m. session, which is all the people that like DAX, gold, copper, like all of those guys. They do the 7 a.m. session. Then there's like the lull period and stuff, which they do look at the markets, but the chat room obviously goes a little bit more quiet, 11 o'clock and stuff. Then when we get to 2 p.m., it gets busy again. And then we have swing traders as well.
Yeah.
So Mayan is the one that looks after our swing traders, and she trades very similar strategies. They're really, really similar. But I would think this pro on specific time windows is choose the time frame for you where your brain works the best.
Yeah.
So again, it goes back to knowing yourself.
That's true. Yeah.
I am rubbish in the morning. I do not, like, you got me here early today, right?
I got myself here.
You asked all of the people that I work with. I get going at 10 a.m. So I don't book any mentoring coaching sessions until after 10 a.m. because it's not fair.
That's why half an hour in.
Yeah,
Shut up.
exactly. It's not fair. I haven't had a coffee. I haven't had my breakfast. You know what I mean? Like, I've got I know that I'm not good in the morning. Yeah. So this comes actually back to my sports background. When I used to go to the gym when I was playing sports, I was strongest in the afternoon.
Yeah.
If they made us do workouts in the morning, lifting weights or doing sprinting and stuff in the morning, my numbers were down. My body clock was really strong at 2-3 o'clock in the afternoon. So
I think one to add, I just thought of it, is
probably related to food as well, right? If you work up in the morning with like nothing in your system, a bit less energy.
Line with trading with trend, number one.
Yeah.
But also, as a side note, I won't write it down, but as a side note, you're trading alongside who's in control.
Yeah.
The buyers or sellers, which is with the trend, essentially.
Yeah, it is. Yeah, I only ever trade with the trend. I would definitely say that. I put down good loser, right? Because it's hard for humans. They don't like to lose.
I'd say the speed as well.
Yeah.
Because that is something that is a hurdle for a lot of people, I think, in terms of being, especially the level of speed we're talking here.
Yeah, it can be trained. It can definitely be trained. So
would you say the strategy is possible if you don't have that direct market access? Your version in terms of the minutes?
I don't think so.
Without,
No, because so in a previous life, I used to swing trade. So I only used to swing trade. I used to put it like this. So if you're trading with a normal traditional broker that's in the UK, like if you've got a 2 to 5 pip spread and you're aiming for 200 points, that's 1%. But if you've got a 2 pip spread and you're aiming for 20 points, that's 10%. So that's the way I used to put that. So when I was trading with a traditional broker, I would only swing trade because I was giving up a certain amount of my profits to the spread. It was only 1% if I used to swing trade. If I was day trading, it would be 10% of the spread of me overcoming something. And that odds, that's the positive expectancy odds. People don't think about it like that.
Yeah.
So we had this quick chat about FTMO, didn't we? Like the fact that they charge you for the challenge, they give you an MT4, MT5, they charge the commissions and the spreads, and then they have all the market data. Like for me, that's them owning that game, right? So I wouldn't ever do that because that's a lot to overcome. The odds are not stacked in your favor there. Whereas if you're going direct to market for DAX or on Eurex or stocks on NYSE, there's nobody else playing that game against you apart from all the other participants. So I liken this to blackjack. In blackjack, all of the participants play first and then the dealer goes last, right? That's the way I see FTMO. Poker is a bit like the stock market. Everybody's on a bit of a level playing field. Yes, you get charged fees and commissions, but that's neither whether you win or lose. It's not on top,
they
is
just
it?
take their fee at the very beginning.
So that those two games, that's the way I see it. Poker's a lot fairer than blackjack. There's a small edge to the casino with blackjack, like 51%.
Definitely. So maybe that would be one of the cons in terms of the need for certain technology and access.
Yeah, definitely. So
would you say that a lot of strategies can be fractal?
Yeah.
So could you take this same concept and do it on a higher time frame?
Yeah, we
so
do.
then that's the pro side in terms of the fractal nature. So even though they may not be able to scalp as a retail audience if they don't have that direct access, they could take the same principles and apply it to a higher time frame.
Yeah. So part of making D&D Capital and D&D Trading School is that like a lot of people, on some of the comments and stuff was like, that you have to pay to join this place, right? That's the problem. It's the infrastructure, so it's costly. It's like a desk fee. So all good prop firms, proper prop firms, traditional ones charge a desk
They
fee.
do, yeah.
And it's because, you know, getting each trader the market data, getting each trader the platform, getting each trader the news systems, the chat room, the admin, you know, this just is a cost of doing business for us. So like one day, if we get as big as you know, those guys Trillium and S&P Capital or something like that, we'll probably cut it, to be honest, if we get that big. But the fact is that a trader has to come in, and the other thing is that it's kind of like putting their balls on the line as well as us.
Yeah.
So we're both in.
You want
this
someone to have
together.
some level of risk and then
Yeah,
commitment.
Yeah, it's kind of money where your mouth is. But even on top of that, is like I have mentored some traders for free in the past, and when they don't come in with the same commitment as you, the balance isn't in alignment. Because like if we think about it this way, if a trader came to me to learn and trade with me,
Yeah.
and then I trained them for 6 months and then they pissed off and I never made any money out of them, that's pretty tough, you know.
Yeah,
it's
exactly.
So there has to be the
It's
same
a
level
charity
of,
in that sense.
yeah. It has
But the
to
thing
be
is,
same
though,
level
it's
of
like,
commitment.
I don't care what people say.
Yeah.
Because at the end of the day, a lot of the time they're saying that 90% of the time because they don't have money, right? Which is no problem
Yeah, of
at all.
course.
But the problem with that is that why are you trying to trade if you don't have money? It's not going to work,
Yeah.
right? And any business, so for example, you take any of these richest people in the world, guarantee you they paid someone for some level of knowledge, access, mentorship, guidance. You know, specifically, let's take someone like Elon Musk, for example, right? We just go to Tesla. I am guarantee you he would have paid someone for information around the design of his cars, let's say,
Yeah,
right?
But I did. I went to the STA. You know what
Exactly,
I mean?
yeah,
yeah.
I did all of this.
I know.
So, like, it's kind of like.
Agree. The problem, though, generally I would agree with this if there wasn't so many grifters in trading, right? Like, okay, sure, if you're someone that's been trading with like a verified record and blah blah blah, and you want to like sell a course because you don't want to be like dealing with the stress of trading anymore, or whatever, or maybe just have a passion for teaching, okay, so be it. And it is worthwhile, right? If you're a beginner, like it kind of, you get put on the right track immediately. Maybe not the right track for you, but like probably better than what you do on your own, sifting through all the garbage online. But the problem is a lot of people aren't that, right? It's just like people that don't know how to trade, just yapping online. So very tricky world for this kind of stuff here. And in reality, I don't know what number to throw on it. Like 90 to 95% of the information you need to become a profitable trader is online and available for free. It's just a matter of if you care enough to go find it yourself and do it and consume it. Like go read books, go read articles, watch stuff like this, play with ChatGPT, so on and so forth. Like there's like plenty of interviews with like professional traders online. So yeah.
Like paying your dues as
Yeah.
well. You
I
know?
do get it though, because
Yeah.
I think it really, the mindset stems from the bad actors. So they look at everyone who charges as a bad actor, when in reality,
True.
you have the results, you have the track record, you deserve to be able to charge because you've actually done it. And I think it's fair to say those people who haven't proven themselves, they shouldn't charge because they haven't proven themselves. But the people who have, it's fair game, I say.
Yeah, it's an interesting concept, and I like honestly, I would love to you know do that, like, and have a charitable way.
And yeah, their tricky angle about it as well is like, okay, not to like shit talk this guy or whatever. He has this strategy, he sticks to it, so on and so forth. But like clearly someone who's happy being like an average trader, right? Like there's a lot of levels this guy could level up from where he is now. He chooses not to, which is fine. But some people want to aspire to more than that. And a lot of people that are teaching are like in that kind of scenario, right? Where it's like, sure, they know some stuff, but do they know everything? Not really. Not even close.
They're even in the chat.
That's what this is.
Yeah. Do you know what? Good point. Yeah.
that's,
fair enough.
That's what the podcast and this is, because that is the the closest level and the highest level of free education, I would say. It's pretty much available, and we're getting some of the traders like yourself as well. But it's time for the charts.
Oh yes.
Let's take a break for a minute, there, guys, because I want to tell you about our incredible partnership with Prop Firm Trade to get with trading. We do this firm in percent profit, and not only to top of the many of prop firm efforts that was entered every
God damn,
so
it's
we
as
have the
long as
chart,
hell.
And what are we starting with first? We got SPY.
Yeah, we'll have a go at SPY first because I just think it has been an interesting couple of days. So this is essentially what I was talking about just a little bit earlier on the whiteboard. So my daily chart is obviously showing an extreme downtrend. Like you can see it's pretty solid on the downside, under the moving average, looking short and everything. And you can see exactly what I mean here. So if I
Are they going to show it or?
drawing tool, so let's go for a rectangle. This area here. So this is where we were talking about of where it started and what it actually did at the first part of the auction. So nice. It's brilliant, right? And then as we got into that motion, if I take an arrow, you can see that right there.
Yeah.
It like this is so clear to see for anyone.
Is this what you're talking about when it comes to speed?
Yeah. So the market auctioned, it sold off.
It doesn't even need
Again,
speed though, right? This guy's doing this in a 5 minute. Yeah, you had 15 minutes to consider this.
So let's just, if you were really, really fast, and I think a few people probably would be, you could catch the test into the low of that auction period here, comes down.
And that gap, is that the gap for the open?
This here, yeah.
So as we talked about earlier, gap in the open, you then have two levels.
Correct.
One being the gap and then one being the opening level.
Correct. So as soon as we gapped, we went down, found out where the price auction was. It traded within there, came, tested it, shorted, right? So it was a really, really nice move. And this was the better one for me because it came up to test that level again where it was stuck slightly. So we had 1, 2, 3, 4, 5, 6 touches of that level, broke down, and then it was shorts all the way for the rest of the day. So it goes off the back of this, obviously. You know, we're short. We know we're gapping down. Today's going to be an interesting one. You can see my pre-market data. We're gapping up. So this is where we have to wait a little while for today's trading, because if the auction is going to change to the upside, we would need a whole candle encapsulation on the daily for it to go long for that candle pattern that I was talking about. So I wouldn't really be taking longs today. I need to find something else like that. So I've got a little watch list which I call like Raj's trading watch list. This one. So it's the Mag 7, right?
Yeah.
So if I'm looking at today, you can see like most of the big firms are all gapping up, apart from Apple. Right?
Yeah.
So if I was to short and sentiment was going to be short, Apple had a really strong bearish day yesterday. We're gapping down between here and there. If we get under there, literally, you know, this whole zone is one zone. This whole zone is another zone. So depending on how it reacts at the open, if we gap down and it goes down, I know I've got 2 areas in which I can look for a short, right?
Yeah.
If it doesn't, if it goes up, then I'm either going to sit out or I'm going to wait for the whole candle to be you know, engulfed to the upside, which it doesn't look like it's going to happen.
Yes, it looks that way. Yeah.
So this is where you've got to work out where you want to trade or not. Like I would, if we're so far opposing, I wouldn't. If it looks like a really bullish candle that's running away, I would need to wait for another auction type that looks like that before I'd be interested in, and that's going to take a bit of time on a day.
Interesting. I thought when he was mentioning, because a lot of people like when they see this with their moving average, where it's like constantly chopping above and below, like they don't consider this a trending market. Like I thought when he was describing like the moving average being aligned with the daily, like he's looking for periods where like the daily is doing like this or like this, like not this kind of like ding dong that's going on here. So I don't think that he'd be doing it this way, but maybe I misunderstood.
That looks like that before I'd be interested in, and that's going to take a bit of time on a day like today. It probably wouldn't work. Yeah, so I will just go to the FDAX is the DAX futures, right? So let's look at the DAX. So like today, look, DAX is in a long trend, right? It's looking really, really
like more like this.
So if I just bring up where the open is, so on the DAX, you know, you really want to be looking at the 7 a.m. The 7 a.m. open there.
Yeah.
You can see it's been a bit of a struggle. It's not been easy, right? Having said that, did it. Right, so that level came in, tested where the opening was, pushed off, nice little trade in there. So it's not big. What we're trying to capture isn't big, but it's above the moving average.
Is that something you would look to take? Yeah. How would you go about the stop loss in this, so that you can get your 1 to 2 in that range?
Yeah, let's draw. Let's just actually physically draw it so we can make it as clear as possible. So on a long trade, like as we get in here, I would look for the confirmation of that fractal pattern that we were talking about.
Yeah.
So this would be that type of a trade, right? And I don't know if it hit 2 to 1, so let's just go and have a look at what risk to reward that actually managed to get. Yeah, it would have.
2 to 2.54, yeah.
So it like, look, odds are stacked against you. You've rejected the moving average, you've come up. Auction has started to become positive. This auction area at the open.
Odds are stacked with you in this case.
Yeah, sorry, correct. This auction area showed you that, look, we dipped below the moving average, it rejected it. It's come above the moving average again, which is the same thing that happened there.
Is this why you say it's as simple that a child can do it?
Yeah,
in terms of looking daily time frame, where are we? Moving average to help with in terms of you know, being above that.
Doesn't actually use profiles though.
On that trend, and then straight to
maybe just not showing it because he doesn't execute on using this platform.
Coincide above auction area, you look for your 1 to 2.
Correct, and the two charts look like each other. That was the other thing. So I wanted the daily chart to look up and long like that with a 45-degree angle. I wanted the 5-minute chart to look up and long above the 45-degree angle. And then look, any long that's above that and any long that's above that, that stacks the odds in your favor.
Yeah.
That's it. So when I did say like, yeah.
So if you were taking just a fractal, you know, just to go into detail in terms of, let's say, like day trading, swing trading wise.
Yeah.
If we're looking at an auction on a higher time frame, would you say that it's very similar to this one? Like you said, they look very similar. Would you say your auction would be this area just here, where you're seeing that interaction?
Correct.
So therefore, once you're above, you get the close, let's say on the daily, maybe similar, maybe slightly higher than it is now on the DAX.
Yeah.
That would then be, if we're going fractal, that's where you then look to enter 2 to 1 to the upside. Is that generally what we're looking at?
Yeah, yeah, it's
Simple. If I can do it.
yeah. If you could do it, 5-year-old could do it.
I'm
Yeah,
telling-
yeah. But so yeah, I'll run right the way through the chart. So like, interestingly, I know you got a lot of crypto guys, right?
Yeah.
So I've got it in already for crypto. So I'm just going to increase the size of this because we have a few people that like crypto. So look, we broke down off that auction. Look at how that auction came in.
So auction, people could say support resistance.
Yeah,
auction is kind of just breaking it down into what it actually is,
Yeah.
how that support resistance is formed,
It's
or
why-
why it's support resistance.
It's exactly that. It's why support and resistance is in there. So this blue level is another one. Look, it's another one that's in there, right?
Yes.
And then, but this was the main one. So if we zoom out for like however we get there, I've got another one hanging around.
And that's probably where we're headed.
This is the thing. Like, I don't mind if it works or if it doesn't work, but because we're short, right? I'm only going to take shorts into that level.
Yes.
So, intraday, I'm going to look at what's confluencing with the higher one, and below moving averages short, above moving averages long, just like that. And I don't really need the moving averages. I just put them there for simplicity's sake and just to give people a good
Interesting.
idea of what we're
Now
looking
you
at.
could imagine if you were to overcomplicate, right, and you instead of
Interesting.
making 5,
Yeah.
as you've shown, if you were to still have the same mindset, but then you're going daily, 4 hour, 1 hour, 15.
Yeah.
By adding all those layers, it sounds like, on the surface, you could look at that and go, that's more information. That's great. But equally, I can very easily find how you would have very strong conflicting biases. And by trying to take in all that information, by the end, fail to execute, especially when you need speed.
Yeah.
Fail to execute because, you could have a daily that looks, as you said, actually, it's very interesting you said that. The daily and the 5 look similar. I can very easily, even though that's the case, see how the 1 hour, 4 hour could look different.
Yeah, because that's the thing. I think being that far apart in the time frames, it helps you because remember I was saying the daily auction for me, when a price opens and closes on a day, I'll know when people are going to sleep how they feel about that market.
Yeah.
When they wake up in the morning, what they're going to do with that market. That's key because on a week, for example, at the moment, it's also key because nobody wants to hold risk into the weekend with Trump around.
Of course, yes.
So if you're trading a swing trading time frame, and I would do weekly 4 hours because the weekly is enough information to know how people feel for that week. Then going up to even like pension funds and investment funds going even higher, I would go quarterly because if they're high dividend yielding stocks, like how crap is the stock market at the moment, right? Look at this stock. Altria. It's a high dividend yielding stock.
Yeah.
So a lot of pension funds and stuff are going to want to hold this and, not being, too silly about it. Why did that hold? It seems so obvious when right?
Yeah.
But this is where we're trading this. We're trading in Altria and there's also another one, I think it's Johnson & Johnson. Look, they're defensive stocks. They're high yielding. Pension funds are looking for somewhere to place their money. This is where in times of tough, where we're going to go. And it does the same thing over and over again.
I think one thing we didn't touch on, which I think it might not be important in terms of, I think it is important because I know it is something that you are really tapped into in terms of the fundamentals. As you say, like just having that bit of deeper understanding of the yields for this, for example.
Yeah.
How important is that for your strategy as a whole to understand the fundamentals and understand that data?
Yeah.
Or would you say that it's helpful, but it's not necessary? Yeah, it's up to you, that statement.
The sentiment on the day for how we feel like the auction is going to go, that is key. So right the way, as we lead up to the US Open, we go over where fixed income is, so yields. We go over where gold is. We look at the news. So we want to work out how the market is feeling about sentiment today.
Okay.
So we're bullish leading into today's session, right? But the market is bearish. That gives us a better understanding. So like if the market is generally bearish, but we're bullish today, I'm not going to hold positions for a long time.
Okay.
Because we're going to hit a wall somewhere. And also on the downside, if something's sold off so heavily and we're nearing levels to the downside, so the average pullback that we look at for the S&P 500 since the great financial crisis, the COVID crash and the rate hiking cycle, they've moved anywhere between 50% to the downside to roughly about 17%. So if we're getting near 17%, 20%, somewhere around there, we've got a box that we use for it. I'm not going to keep going short.
Okay.
If we've got space for shorts, I'll go short. So that sentiment leading up to it, plus that averaging of the statistics of the waves or the moves down,
Interesting.
gives me a really good indication. But that's why I think, giving away strategies for free and stuff. That's why I say to everyone, it's 33, 33, 33. I could talk about strategies all day, but if you don't have the psychology, you don't have the risk management, these are things that we pick up in the community and they need coaching. A trader's not going to be successful just by learning a strategy and they need to understand that. That's why in that video when we had all those comments, some people were writing in there, you missed a point if you're asking him about your strategy. And I do believe that they did miss the point, but it's good to cover it for them anyway because everybody's at different parts of their journey.
No, definitely. I feel like for me, that was a really, really in-depth podcast in terms of like the mindset, not just mindset. When I say mindset, I don't want it to feel like psychology, but more so like the processes, the structure to your trading and the mindset you're meant to bring towards your trading.
I haven't watched the video video he's
well.
talking
And that's why I
about.
was happy
Interestingly enough, I must have missed
now
it.
you've seen the strategy as well, and this is one of those strategies. People do ask me like, Riz, do you ever feel inclined to trade? You know, like some of your.
I've seen one of the older
I'm like,
ones.
yeah, like this is one of those where I'm like, this sounds great, you know, and you know, I might do it, I might not. Like a lot of the time, I try not to, simply for the case of like, otherwise I'll be jumping strategy, especially with the guests I speak to. You know, I'll be jumping strategies a lot, but this is a strategy that I think, you know, as you say, a child could do it. And when we say that, it's not to say a child will do it. It's more so it's very simplistic in its nature. And I remember you saying that as well, like how you didn't used to be simple. Like you went through the struggle of trying to use complex systems, not getting the results.
Yeah.
And it's amazing to see how if you strip it all back. And I always say, as you said, actually, you know, the candle matrix. I love that because I've always said the candles are the language of the markets.
Yeah,
right. And essentially, regardless of what your debate is, whether you think there's an algorithm that moves the market, or whether you think it's buying and selling pressure, or whether you think it's whatever you think, in the end, it is buyers or sellers. Like that's all. If it's an algorithm, what's that algorithm going to do? It's going to buy or sell.
Yeah.
Right. If it's you know, the buying and selling pressure, obviously it's buy and sell. If it's supply and demand, if it's whatever it is, they're buying.
I mean, agreed.
It's hedge funds.
Agreed.
Buying and selling.
Yeah.
And that's essentially.
I think order flow is so powerful. Like I find it so fascinating when people like ignore it, right? 'Cause at the end of the day, it's like you could think the market was whatever you want, right? Some like sovereign fund, some like algorithm, fucking moving average traders. Like, it doesn't matter what the strategy is, right? Just say these are all some kind of strategy. Right, it doesn't matter what it is. They all go into the bucket, but like at the result of this, whatever is in here, comes down to like a buy or sell, right? Doesn't matter what it is. You can name any trading strategy you want. It's coming down to this. So I find it a bit fascinating when people ignore order flow, knowing that this is how this works. But each to their own, I suppose. Each to their own.
Understanding the auction.
So I went full circle. So like I went down that rabbit hole of footprint charts, price ladders, you know, multi charts and Sierra charts and all this kind of stuff. I went down that rabbit hole because I was a technical analyst and I was good at it. So, but then after understanding and seeing that all for what it is, it took me back to something so stupid and simple. So that doesn't make a difference. Like the more complex you make it, ego gets involved a little bit more because you're like, oh, I have to be that smart to win. You don't have to be that smart to win. Stupid people are rich.
But it's not being smart, right? It's not nothing to do with being smart.
Rajan, I really appreciate you being here with us today and really going into this in such depth. And everyone at home, you know, links for all Rajan and DND Capital will be in the description below. So make sure you
Definitely don't agree with that last bit. Also, that statement.
Rajan will be.
It's about being more efficient, right? You're seeing things that you wouldn't be able to see otherwise. Kind of hard to argue against it when you know that. Interesting video nonetheless, right? Interesting video. Definitely something that I would suggest for like beginners to watch, right? Pretty like straightforward way of kind of systematically looking at things. Anyways, we're gonna go to the bathroom and then what time is it? 10:30. Damn. How does 30-minute candles print? A whole lot of nothing, right? I just sit in sideways. Sitting sideways. Free FOMC. Yeah. Okay.
That's the groove. You chase hype, I improve. Like this candle green, but I don't chase. I don't care about your pace. You want flash, I want fact. You play charts, I play tack. Delta lean, I fade high. No reaction, I don't try. Plan been set, I don't adjust. If I lose, it's still just math. Think late night screams.
You know what? As like a perfect example, right? Just to show you that this guy's strategy is like flawed, using no order flow. That just gives us some thought, right? Have a thought experiment, a little powwow together. Okay, so the candle closes here before, right? Then it gaps down. So like this is his zone of interest that he's talking about, right? And this candle comes down and puts some like big ass wick here, right? Then this is like the next candle. Then he gets like this one with the big like inverse hammer. And then he said he would enter on this, right? When this next candle closes below this one's open. Right? But this wick could have been because there's like fucking 100,000 shares someone's trying to buy. Like, it's a massive goddamn limit. That is not a spoof. Like, they got filled and then price just bounced from there. Now he's about to market smash a fucking entry into this shit. Not knowing any of this because he's not using any like order flow tools. Which is extremely inefficient, right? You're borderline gambling, don't even know what you're doing kind of thing. So, yeah. Not a huge fan of that. What do we have time for here? We started a bit late, but I don't think I'm gonna stream too late. I'm probably gonna stream during FOMC tomorrow and just kind of chill for the night, kind of thing. Pretty determined. I don't know yet. Either I stream FOMC and I don't stream at night, or other way around. I just don't stream during FOMC and we'll stream in the evening, kind of just everything digest a bit to come see what's going on. TBD. There was one more video we didn't watch, right? With the one with the girl, I think. You can probably power through it, right? It's an hour long.
Today, we have a very special guest.
I don't know if it's gonna be particularly useful because this is another like ICT type trader, like the same way that the crypto guy was. And that one was not the best of videos, we'll say that. We'll say that.
All the way from New York, one of the best and the best ICT live streamer on YouTube is the one and only Tanya Trade.
You might get married to your bias there and continue trying to short as
Who
it's
the fuck is
retracing, and then you
this?
get stopped out, and now you're mad, and now you're flipping long here. And that's exactly
I've never
what
heard of this
it is.
person.
Welcome everyone back to Chart Fanatics, the go-to channel.
One of the
for
most
all
famous
very best.
YouTubers.
Today,
Is
we
that
have a very
true?
special guest, all the way from New York, one of the best.
Can't be that big.
Strategy breakdowns with the best traders in the world. Talking of which, today we have a very special guest, all the way from New York, one of the best and the best ICT live streamer on YouTube. Is best to begin, do you think?
I think today what I really want to tackle is going over the high probability trading days and the low probability trading days and how to avoid the low probability days and save your capital. And I think where we should start off with is talking about how, well, the market pretty much moves in accumulation, manipulation, and distribution. So if we can go ahead and I'll draw that out. So it's like AMD, accumulation, manipulation, distribution. So the first phase is pretty much accumulating. Price is just moving sideways. And then you typically get some sort of manipulation to the downside. And then after that, distribution to a point of interest. So I want to always get involved in the distribution aspect, right? And this is the easiest part to trade because typically price is just going towards a draw in liquidity, which we'll get into later what that looks like. And this is the part that I want to avoid because range bound action is really hard to trade. And it'll have you scratching your head, it'll have you annoyed and just questioning your life because it just
Okay, I'm not watching this. Like, I can't already tell this is like low rank trader, right? Extreme low rank. I'm gonna maybe I'll watch it someday at the gym in the background just out of curiosity, but what those people really mean to say is, I don't know how to trade in a range, therefore range trading is bad. It's what they're really saying, right? And then when we translate into actual English, I don't know how to range trade, therefore range trading is shit. Interesting logic. Boom, 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 boom. Oh my gosh. Yeah.
They said it's fake till it hit Marcos. Línea, ella no miente. Price moves slow, pero toca mi mente. Yellow dash, they say pretend, but I just wait and then it bends. La línea, she move like flame. Wig so close, then hit my name. Feel so soft like lips at night. They call it ghost, I call it right. I draw that dash, no decoration. She touched that zone, no hesitation. Matemática, sin emoción, pero como baila esa reacción. Late night feel, no notification. TP hit pure confirmation. She bounce and curve like I'll go cold. You chase the break, I ride the mode. No necesito suerte, no necesito fe. Just a silent chart and my PNL okay. They call it random, but I see the way. Price don't lie, it foreplay. La línea, ella no miente. Price moves slow, pero toca mi mente. Yellow dash, they say pretend, but I just wait and then it bends. La línea, she move like flame. Wig so close, then hit my name. Feel so soft.
Interesting. Bum, 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 bum.
Nivel sagrado, no lo toco, solo el mercado. Imaginary, solo si no ves, pero el precio baila como mi ex. Whisper close when she taps my line. Pixel perfect, almost divine. They draw noise, I draw design. They lose control, I sip my wine. Tú lo ves, no lo creo. Tú lo sientes como fuego. Imaginary, solo pa' ellos. Pero ella toca donde quiero.
Hmm.
Ella no miente. Price moves slow, pero toca mi mente. Yellow dash, they say pretend, but I just wait and then it bends. La línea, she move like flame. Wig so close, then hit my name. Feel so soft like lips at night. They call it ghost, I call it right. She touch it again. Same line. Same night.
Might as well watch this mental one, right? And just chill for the night.
I call it math. Marcos.
Take it easy before FOMC.
This guy has
That'd be something interesting, right? I don't think this episode's about trading per se.
Said I'm delusional, still I'm up. Math on the screen and they call it luck. Fade that move, price bleed abrupt. They trade vibes, I press, I cut. No emotion, I draw, then wait. That line hit once, now they close that gate. She said you guess, now calculate. You mock the math, you imitate. One draw, that's all it takes.
Oh, I closed my notes. Damn it.
This guy has mastered trading psychology. The world famous author of The Mental Game of Trading.
This is one of the primary derailers of traders continuing to be in the zone. This is why I see so many times you've got a great like Monday through Wednesday, and then Thursday can be a little rough, or Friday can be a little rough. And it's not because, pay attention, because this is a critical concept that a lot of people don't know. And if you don't know it, you're behind the 8 ball, and in a sense, you're kind of going to a gunfight with a water pistol.
Jared Tendon. In this episode on Chart Fanatics, Jared gives the exact blueprint to stop you going on tilt, stop you revenge trading, and most of all, stay on process.
A lot of people think
Just don't do it. Just don't do it.
Be that kind of cold-blooded killer who has no emotion whatsoever. And the reality is that, so to me, this is basic maintenance for traders, and it's a bit of like kind of buying insurance on being able to get into an optimal state profit.
By the end of this episode, you will no longer struggle with your trading psychology. You will now stay consistent and disciplined in your trading journey.
You do not need to be optimistic to start the trading day. You do not need to feel like today is your day, or today you're going to be in the zone because you've done all these things. In fact, if you have the expectation of checking all these boxes, that means you're going to be in the zone, guess what? You're not going to be in the zone. One of the biggest mistakes that I see traders make with regards to the mental game of trading, it's...
Welcome everyone back to Chart Fanatics, the go-to channel for all of the very best strategy and concept breakdowns with some of the best traders and people involved in trading around the world. Now, why did I say it in that way this time? Because finally, we have our very first trading psychologist with us today. He actually is the author of The Mental Game of Trading, bestseller, incredible book that so many people have given such positive feedback for. And I was so excited to be able to sit down today so that we can break down exact concepts and actionable steps to help you improve your trading psychology, discipline, and hopefully confidence. It's the one and only Jared Tendler.
Riz, great to see you.
Thank you for being here, man. I really, really appreciate it. And I'm really excited to go into this today. It's the first of its kind for us, and we've been talking strategy, we've been talking trading concepts, but this is the first time finally, and I'm super excited to see how we do this in terms of breaking down steps and actionable steps that people can take in terms of their psychology. Where do you feel like the best place to start is?
The most important piece of the puzzle. So for you watching, if we could tattoo or burn this at the inside of your brain, pay attention, because this is a critical concept that a lot of people don't know. And if you don't know it, you're behind the 8 ball, and in a sense, you're kind of going to a gunfight with a water pistol. So, all right. I call this the malfunctioning mind. The research term is the Yerkes-Dodson law. So if you want to do some research on that, Yerkes-Dodson law.
The what?
It's been around for over 100 years. This is not new. I didn't invent it. So
The what now?
Yerkes-Dodson.
Yucks. Okay, it's Yerkes, Dodson law. Understand?
Dodson law. It's been around for over 100 years. This is not new. I didn't invent this. But what it does is help describe the relationship between emotion and performance. Okay, a lot of people think that the optimal in trading is to be that kind of cold-blooded killer who has no emotion whatsoever. And the reality is that that is not true, because...
And that's a completely subjective statement, but okay.
Intensity is an emotion. We need that kind of vital energy in order to power the frontal lobe, right? The power, the thinking part of the brain, where decisions are made, planning, all that kind of foresight comes from the frontal lobe. If you don't have enough emotion to power that brain, enough energy to power that part of the brain, you suck. So here's the relationship, okay? So here's this kind of upside down U curve. We've got performance, and then like emotion is on, yeah, you can read it. All right. Performance, emotion. So bottom line is your peak performance exists up here. Okay? This is where you are in the zone. So again, you have a high amount of emotion, but like the right amount of emotion. Now, everybody experiences this state differently. Some are, kind of the bug-eyed, kind of crackhead intense, right? They need tons of market activity, like 400 to 500% more trades per day, because the market's just giving them just like constant, and they're making a ton of money, right? There's a lot of opportunity. Others, more calm state, serene, you almost kind of look heart rate wise, almost like resting heart rate. When they're stressed, they start to get a little bit, performance drops. Other people, describe it as kind of like this more like kind of heightened engagement, right? The market is intense. There's a lot going on. So to be at your best, there's got to be enough activation. So commonly what I see with a lot of traders is, they'll kind of start the trading day here.
Yeah.
They're a little too low, a little too flat. For whatever reason, they haven't had their coffee. They haven't gone through their full warm up. It's Thursday after a couple rough trading days. And it kind of takes, some market action to drive their energy higher, right? Or it takes, unfortunately, like making a couple mistakes, right, to get pissed off to drive their energy higher.
Yeah.
And this is a prime example where we could say that anger is not bad. Okay. Anger is bad when you're here and then you start to fall down the curve. Right?
Yeah.
And that's where the emotional system starts to become overactive. Okay. So this is the problematic side. This is where, like I said earlier, you tattoo something in your brain, it's this. It's understanding that as your emotions continue to rise, okay, so again, the ratio is, this is emotion at 100, right? Emotion at 0, right? So as your emotions get to, let's say, 60, 70, 80, there's a progressive shutdown.
Yeah.
Some people think about this as the fight or flight mechanism. I like to call it just a malfunctioning mind, just to describe that it's not a binary like fight or flight. Like it just doesn't get triggered instantaneously. You don't go from being perfect to 100 instantaneously, unless there's a factor, and I'll get to this later. But in general, for most traders, there's kind of a progressive action that occurs here, right? There's a progressive nature to how you kind of fall down, how this emotion continues to rise and escalate. So, for example, the start of the trading day, let's say you actually are in a great state. You didn't need, coffee's there, like you're raring to go. But out of the gate, you've got a nice juicy entry, take it perfectly. It rips.
Juicy,
target,
juicy.
and then just completely crashes and
Juicy entry.
By, just a couple ticks, and then races to your target, and you're like, pound the desk, whatever. A little bit of frustration gets created. Again, not overwhelming. You're still clear-minded. Another trade opportunity doesn't happen for another half hour, so you kind of are able to reset. But then the next one just chops around, doesn't really do much, and then fails.
Yeah.
So now you're 0 for 2, and frustration is starting to kind of build here a little bit. Okay. What happens is, and this is why again it's progressive, you begin to start to lose access to the thinking part of the brain, the planning, the decision making, your access to new knowledge starts to kind of fade away. To me, it's almost like kind of holding sand, right? Like things are starting to kind of fall
through the cracks.
Through the cracks. And so again, you're not trading terribly here, but maybe there's a little bit less patience. So your next entry is a little bit premature.
Yeah.
Right. And now, okay, let's say you get lucky, right? Trade, works out in your favor. Like again, you're still not totally reset here. And the reason it's called the malfunctioning mind is because one of the key parts of the brain that I haven't discussed yet is the emotional system. So higher brain function, while you're powered well, you are automatically correcting any flashes of things that might have triggered you, whether it be anger, greed, overconfidence, fear, because your mind is very clear. The part of the brain responsible for controlling emotion is powered. But as this emotion rises, right, you begin to lose the ability to actually control your emotions. So it's a very sadistic way the brain is designed. The part of the brain responsible for controlling emotions gets shut down as your emotions continue to rise, okay? And this level right here, I think, is the hardest for traders to deal with. So here, this is when you are clearly making mistakes.
Yeah.
Okay? And the problem is that you still retain enough self-awareness. So again, awareness is another higher brain function, right? When you're at 100 and you're in that blind rage, blind panic, emotional system's totally shut down. I think the blindness in terms of how we typically describe these things is a function of our awareness just going away by the wayside. We're raptured by our emotions and we lose control entirely.
Yeah.
But at 80, you still retain enough self-awareness without the ability to translate that awareness into control, into action, into stopping yourself. It feels like you're on a train or on a car, like driving off a cliff, and you can't stop the car. You just like, it's going to lead to its inevitable, crappy conclusions, which has happened many times before. So it's really, really hard for traders to understand this concept. And the problem is that when mistakes are made, and I've had clients who have physically tried to restrain their
panic, basically, right?
clicking,
Panic.
Getting into certain positions. When they're in this position, there's a ton of self-criticism that happens. So now you make mistakes in this position, and then it just keeps accelerating. So, you think about some of the blown accounts, some of the significant drawdowns that happen on big red days. You turn, 5% down day into a 30% drawdown, right? Because the frustration, the rage that builds here is like, this is where revenge trading really kind of clicks in. And so I've kind of described this mainly from an anger standpoint, but the same thing can happen in any other emotion. So
in terms of, let's say, for example, this cycle takes place, we get to this point, and you create that negative experience, as you mentioned. Let's say you come the next day. Is it a reality that the next day, this curve actually is much shorter in terms of you never really get to a high, because you're carrying that baggage more than likely? The emotions are already heightened in terms of the scale, but the performance element is actually reduced because of that baggage?
Yeah, so it's interesting to frame it as like it being kind of reduced in that regard. I hadn't thought about it in that regard. Typically, the way I've thought about it was you were just sort of starting kind of farther down the curve.
Got you, yeah. So rather than,
Same thing.
The emotional baseline has been increased.
Adjusted, yeah.
And so now after that first loss, you're already kind of here.
Got you, yeah.
And the problem with a lot of that accumulated emotions, kind of the term that I use for it, is it's generally hidden. Especially because traders tend to be pretty optimistic. So, you go have a good workout, have maybe a drink, you go for a walk, like spend time with the family, whatever it is to kind of reset yourself.
Yeah.
You come back the next day and you're like, all right, today's a new day, optimistic, let's, grab it, take whatever we get, and you don't really know that you're, a little compromised, right? There are some warning signals, but they've got to be studied. Like patterns in the market, you got to study the patterning in yourself to recognize, did you sleep as well? Did you wake up with trading more on your mind, a little bit kind of itchy and antsy to get to the charts, and maybe spending more time in your prep, which, theoretically is not the worst thing in the world. But when you understand kind of what helps to produce your optimal performance, to me, I think of it like a mixture. There's lots of different data points, right? There's a certain amount of sleep and exercise and rest that's required. Nutrition's important, hydration. But then there's also, degrees of preparation. And sometimes when traders over prepare, now they might be more strongly biased. Now they might be looking for something and not really as tuned in. I think of, this space up here, and I've kind of like made it a little bit cluttered, but I think of this place as being really, really clear. Right? When you're at your best, you are clear-minded. You're very receptive.
A flow state, essentially.
To what the market is telling you.
Yeah.
And so that, how can you tell when you show up to the markets not quite as clear-minded, a little bit, as you said, maybe over-prepared and trying to fit in, what you think is going to happen.
Up to $6 million in futures funding. That's only possible at one place. Offers across from here.
But the thing about people like this is like,
that traders should be focused on.
I don't know what he's going to say or not going to say, but the fact that he's using this segmental framework based on this Dodson's model, always a bit suspicious, right? Because I was researching this on the side when he was first talking. Like, it's very clear that new science has come out that like counteracts what he's saying. Like what I was saying, how it's very subjective. That's what all the new science says, right? He's applying some like old generic principle to everybody when it's not the case at all. Because in the ideal world, you're not getting emotional about anything, right? You're planned, prepared. If the trade setup appears, then you're taking it. If you're not taking it. There's nothing to get emotional about than anything that I just described. So,
In order to
yeah.
quite consistently put themselves into this bracket.
Yeah. I mean, I think so. You mean into like their like the zone?
Yeah.
Yeah. I mean, so yes, aspirationally, I think sometimes, especially when clients come to me, it's like there's clear problems that we're trying to solve here. But I found that the answer sometimes is aim at this, figure out how to get in the zone more often, and that kind of raises the threshold for what you're trying to accomplish day in and day out. And sometimes that actually prevents, right? It sort of stops that from happening more quickly, because if you can define the characteristics of what your zone looks like, you create a target. It's like, as you said, aim at that every single day, right? Optimal performance. Who wouldn't want that? But to understand that it's not. So I think sometimes a lot of traders come from sports, and the old methodology, the old philosophy on this was remember the times when you were in the zone.
Yeah.
Right. And you can meditate on it. You can imagine yourself at the start of the trading day, or the start of right before you're going to go play a big baseball game or football game or whatever, envisioning your best performance and really kind of feeling that, and responding to the nuances of what's going on. I think that's generally not advantageous, especially for trading, okay? Because the conditions vary so greatly.
Yeah.
It's less about kind of envisioning the optimal and more about understanding what are the key variables and elements that fit in. So yeah, number one, you're going to define what the zone looks like for you. So emotionally, like I said earlier, like there's a specific way in which you experience it. Right? High energy, low energy, medium, engaged. What is your focus like? What is your decision-making process like? I mentioned clarity of mind. So kind of just trying to like almost in paragraph form or bullet point form, define in great detail what the zone looks like for you. And it might take you 2 weeks, a month, right? But, certainly when it happens,
that's when you
want to nail down these. But you can, obviously in hindsight, go back and think about times when you've been in the zone. And then we want to start to look at the factors, right? What produces the zone for you reliably? We're not looking for correlation, okay? A lot of people confuse correlation and causation, right? Correlation is two things are happening simultaneously, but they're not actually causing one or the other.
Yeah.
So I, walk my dog every morning, and that gets me in the zone. It's like, is it the walking of the dog, or is it that you're actually just outside getting fresh air? Right? What's the piece that's causing you to
the actual thing? Yeah.
The actual thing. We want to understand what those are. So determine the factors. And again, I think energy is the number one factor. Okay. So if your energy is too high, there's times where you just come into the market just way too intense, and it's a problem, right? That higher brain function starts to shut down. The clarity of mind shrinks, right? The working, so the part of the brain. So we're kind of talking about, optimal performance here. There's a part of the brain called working memory. Okay. If you have thoughts in your head, that's occurring in a space that researchers call working memory. If I ask you to remember a phone number, right, that's what we're talking about here. So in normal circumstances, average people have between 5 and 9 pieces of information that they can think about at one time. Okay, so not ironically, this is why phone numbers, at least historically, were 7 digits, right? Because the average is 7. Okay. Now obviously we've got area codes and whatnot, but bottom line is average people can hold 7 digits and what. Now here's what happens. So this is in in the zone. I would argue that you're able to expand that. So if your norm is 7, maybe you get to 8 or even 9, and that is where intuition starts to get accessed. You're able to bring in data that is very, very subtle, right, and normally not accessible. When the emotional system starts to get overactive, 2 things happen. Number 1, you start to lose this space, right? That's gone now. Okay. Now you also have space that's being used for defense, right? So when you're in this at this zone of emotion rising, like you're not going to just like allow it to just keep happening. Like you're going to try to correct it. You're going to do things actively to try to get yourself back reset. So here you are using a portion of your working memory for defense. So now you're left with like 5 or 6 or 4, right? And so you can't get in the zone when you don't have access to full mental functioning. So clarity of mind is really key. And if your energy is too high for whatever reason, just because you're like excited, want to take on the world and like overly motivated, you can be too inspired. That can be a problem because working memory gets compromised, that mental space shrinks, and now you're kind of down floating in that 60 to 70% range. So yeah, what we're looking at here is trying to define factors. Energy is number 1. Okay, what are the factors that help you to find this space reliably? Okay, for some it's sleep, but it's maybe not always. Like you can still get in the zone if you have poor sleep, but there's other factors that come into play. So I'd say energy is made up of physical energy, motivational. So you sleep poorly, but you're not going to let that deter you today. You can tell this is, there's some ripe opportunities here. I know market conditions, sometimes get pretty tough. Maybe they've kind of ebbed in your favor now. It's like, all right, it's go time. Like, the fatigue you feel is not a reason to not get this today. Motivational, then we've got emotion, right? Again, emotional energy is, kind of what we're talking about here. So yeah, what is the mixture of energy, or what are the factors that help to influence your energy most? And then, as I said before, kind of clarity of mind is another kind of primary factor. I think a lot of traders skip out on their journaling. And not realizing how much it's costing them. So here we got this working memory.
Would you say you mean trade journaling or like actual journaling?
I was wondering.
Yeah, good point. Perhaps both.
Or both,
yeah. I mean, I was thinking the trade journal, kind of post day. Just like making sure you got all the data there and have kind of worked through and went through all the trades.
Yeah, okay, everyone should be like doing this at some when you start, definitely, right? Once you've like dialed in your system and you're kind of going through the motions, like the same exact trade you took a week ago, you don't have to be journaling as much at that point, right? Like if you make note of something that was different, they need to make note of, then yeah, journal it. Like, even to this day, I still do that. Like I don't journal every single trade anymore, but at the start I was, right? So like I'm definitely a big advocate for that, and like everyone is, right? When do you ever hear someone say that you shouldn't be doing that? You not once. Everyone has gone through the same trials and tribulations in that regard. There's too much to remember, right? Like you might think that you remember something from like a trade like that you did yesterday, but like 30 days from now, when you've taken like 30 more trades or like whatever your trade frequency is, like 2 months, 3 months, 4 months, you're not gonna remember that small thing if you don't write it down, right? So whenever there's something worth writing down, do it so that we can review it.
Athlete, right? No professional athlete is like walking off the fields, walking off the court, whatever, and hopping in their car going home. Right there. Ice bath, stretching, like there's some rehab that they're doing to get their body like reconditioned for the next training or competition. Mentally speaking, right, like traders are kind of like mental athletes, so like the cool down has to mimic that same idea. And in this case, it's more about the absorption, the consolidation of both the thoughts, the details about the trading day, not even on a mental side, but just the pure details that have kind of come to you that day. Like there's a lot of learning, there's a lot of absorption going on. And so if you don't digest that, then working memory gets consumed because now your mind's kind of chewing on that stuff. Maybe you don't rest as well, sleep as well, you come down, it actually affects your energy. Conversely, you can kind of come in the next day with your mind a bit cloudy, a little bit foggy, a little bit kind of harder to think. Maybe it's like harder for you to sort of see and have a sense of what the market's going to do today. Your pre-market prep's a little bit worse. other traders like see things that you don't see. You're like, wait, you're kind of feeling more out of sync.
Yeah.
Ironically, being in the zone regularly can make you out of sync.
Hmm.
So the journaling, post-session cooldown, is a critical component, but also it can help you to digest some of that emotion. You know, like you said earlier, like kind of not fully reset. Well, you've got an opportunity to kind of journal and get out those emotions. And yeah, maybe there's not like a massive release from it, but just putting it out, seeing it. Sometimes the emotions, when they're just kind of in our head, just continue to spiral, and getting that on paper helps to digest some of that.
No, definitely. I think it definitely does. And, you know, I think it's a very simple technique to be able to really reduce that mental pressure down, because I think there's a huge point to what you're saying in terms of by keeping it inside, it's easy to spiral and allow that energy to continually almost take over your inner dialogue, versus once you put it on the outside, you're now able to actually observe it and, you know, think about it rather than just kind of letting it go back and forth within your own mind. Actually think about the reason. Would you say, though, that a lot of these can almost sort of have a knock-on effect? So if your clarity of mind isn't there, you then can impact your sort of emotions and your energy. If the energy is then down, then, you know, there's certain factors that normally should be part of your process to have peak performance you're now not doing because of the way you feel. And then therefore you start to sort of have this knock-on effect in a negative manner. You can probably do the same thing on the positive side, like by having, say, the certain process helps you with your clarity of mind, which then helps you to have a good energy in terms of your physical, your motivation, your emotion. And therefore, would you say that a lot of it does come down to how people structure their day-to-day to facilitate peak performance?
Couldn't have said any better, honestly.
That's right.
No, that's great, because that's exactly what it is. It's a formula. It's a mixture, and so you're kind of adapting based on kind of what's going on in the day. Like, all right, today was a very emotional day. Then you got to spend more time, you know, doing that journaling. You know, maybe you're feeling a little bit burned out, so like more rest is a better component to it. Yeah, you've been doing really, really well, so confidence is high. Maybe motivation is lagging a little bit, right? Kind of get a little fat and happy, and you know, just have like monthly targets, and you're, you know, kind of killing it, like, or you're off to a great start with the year, but you know, motivation kind of lags. So it's like you're kind of finding the key variables and just understanding, like, all right, well, this one's lagging a little bit. So what do I need to do to keep that one up? It's like, all right, well, I'm clear-minded. My energy's lacking, right? Because for that reason. So yeah, it is very much of a formula and a mixture. The other thing about the clarity of mind component too is if you are, again, kind of regularly in the zone, you know, that working memory starts to get consumed, you know, and you can actually start to feel physically fatigued. So it's an interesting thing, because the way you can kind of test this is at the end of your trading day, if you feel really tired, but you still have the physical energy to go, you know, do sport or whatnot, it's unlikely that you're actually physically fatigued. I think there's like a physical or emotional experience where when your mind kind of gets full, and, you know, the easiest way for some of us to recognize it is like, you know, we all maybe in like university studying, or when you've been, you know, maybe back testing for hours, right? And you're like, your mind just gets like, I was like, I can't, you're like, I'm done. Well, that's like an extreme example of what this happens. It's like, you're not tired.
Yeah.
If you need to go, you know, go for a run or whatever it is physically, you can do it. It's the amount of kind of mental data that you're carrying is like metaphorically like weighing down on you, giving you the feeling like you're tired. And I believe that that's a primary excuse that traders give to not do their journaling at the end of the day. They're like, I'm tired, I can't. Like, no, you'll actually feel better.
If anything, I was about to say, if anything, journaling helps a lot, right? Because like all those you're basically like sitting there ruminating in thought, right, of all these thoughts. Whereas when you take the time to write the thing down, and I mean like literally write, like pen and paper, not type. You like slow down, you put your thoughts on paper, you like kind of write potential solutions, so on, and then that's it, right? Like the thought process, it's like you word vomited onto the paper. Your brain just like unwinds. So like yeah, like a very valid point, right? I agree with that a lot.
You spend 5 minutes just getting your thoughts out.
So it's like building up of this energy in your mind and body, but your mind in particular only has certain capacity. So when you've overloaded it through the day, especially if it's built up with a lot of negative experience and that negative energy, if you will, that you're taking from that experience and what you've done and the actions you've taken, then obviously that's even worse. But even from a positive standpoint, if you've done really well, it's still the same principle, right, of the capacity being limited. So even on the positive side, if you feel tired.
That's another thing I would say, like journaling is not just for like the things you did wrong trading, right? It's like, oh, I did this well this time, like keep doing that.
It could then have that negative impact in going into the next day because you haven't decompressed and let it out.
And that's the crazy part. This is one of the primary derailers of traders continuing to be in the zone. This is why I see so many times you've got a great like Monday through Wednesday, and then Thursday can be a little rough, or Friday can be a little rough. And it's not because market conditions are so different. It's because maybe your motivation is lagging, and maybe you're also motivationally lagging because you've been so locked in. There's so much kind of in your mind now. And yeah, you're just not clear-minded. Your energy's low. And then, you know, ironically, what happens in this stage too is you kind of go looking, like you know that you're kind of not quite fit, and it's almost like you'll try to compensate for it, right? You'll take a higher risk trade to kind of just like try to like break you out of it. But it's, even if you do, so let's say the trade wins, like now you get euphoric, like now you feel more overconfident. Overconfidence is now here. Like you can't kind of find this place. You end up like teeter-tottering on either side of it, like trying to oscillate between like, you know, overconfidence, anger, fear, and then it's like, oh, like, and then you breathe too much, you then release too much energy, or it's kind of too flat. So I like to think of the kind of high level performance, the, you know, being in the zone, like you're a sponge, absorbing a ton of data. And the cooldown is you just sort of squeezing some of it out. Like the body will process and digest it. You don't have to do all of it, but you got to get it started, because what you're doing is too intense for it to naturally do on its own, for you to then be able to trade incredibly well tomorrow. Because like the reality is, I don't know too many Premier League games that happen back to back, right? Like they've got plenty of time to absorb what had just happened and be able to make sense of it.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry. Prop firm all day on every give challenge plan payout within that doesn't available funded next. US trading comes to you as well. Traded.
And there's a early
to funded next. The link is in the description below. Now let's get back to the episode.
The other thing that I want to pick up on from what you mentioned earlier was this, you know, when you're journaling, you're kind of getting thoughts out on paper, and there's a way of kind of interacting with it. That's how we can escape the limitations of working memory. Okay, if you are only trying to process the information in your head, imagine reaching into a box of puzzle pieces. Let's just say it's a pretty simple one. One you give it to a kid. It's 100 pieces, but you have no picture on the cover, right? And you can only look at between 5 and 9 pieces at one time. So you grab a handful. You're like looking at it, like, this is interesting. Like, okay, I still don't know what this is yet. Right. And so then you have to like maybe grab 2 and replace what. It's hard to work it, but like if you can grab a puzzle piece, look at it, put it on the table, grab another one, put it, and now that's how you start to make sense and complete a picture. Because at the end of the day, you do not collect data around things that are already mastered. You're only collecting data around things that you're learning. So to me, this is basic maintenance for traders, and it's a bit of a kind of buying insurance on being able to get into an optimal state more often.
Would you say by going through this process and having a focus on getting into this state, that to begin with, you might find yourself on these sort of these parameters on the extremes, but over time and doing repetitions and building a process and being disciplined over time. So yes, in the beginning, you might stay within these fluctuations, but you know, given a focus and consistency and allowing yourself to build momentum over, say, a month, you start to bring them in. And yes, you may not ever.
An interesting way to visualize it.
Interesting. Really the goal is to bring those parameters as closer in as possible over time, because that process becomes a part of your routine. It becomes really part of your day-to-day life of being focused on these things and decompressing and keeping these things in mind. Do you think a large part of the mistake that traders make is that they're just not aware of what's actually happening internally and what's happening between their ears there when they're having these reactions and these thought processes and these wild swings in both emotion and P&L and everything? They're not actually aware of how the body's responding. So a large part of it doesn't even cross their mind that it can be fixed. It can be something that can change, because they're really not aware of actually what's going on. They're so focused on it's strategy based. It's how I'm trading, that's the problem, versus actually dialing in on why am I responding in this way. Because at this point, our mindset is that we have an edge, and that's why we're going to the market. But then why am I not performing with this edge long term? Because I think what a lot of people, what they do is they'll go away, they'll do some deep work. And when I say deep work, it's less so on this, more so on strategy. So they go to strategy, they come back, and then they do about maybe a week, maybe up to a month, where they get to be in this zone quite often for a large portion of time. And a large part of that is probably because they went away for 3-4 months away from the market, focused on a strategy, and through that process, got clarity of mind and really sort of have this nailed down subconsciously, I'd say, probably not consciously put effort into that.
But then the natural byproduct.
Yeah, and then they've come and then they have that week, maybe a month, where they're really in that zone. But what ends up happening is this emotional factor. They start coming, maybe towards the end of that week or month. However, it's normally around the month mark, I've seen anyway from personal experience. So then they get to a point where they're now feeling the emotion on this end, and then the cycle begins, right? The cycle of being on this emotional side, being out of flow, out of the sync, out of that zone. And again, still not aware of why this is taking place. And they end up back over here, but they end up basically having to reset. They take 3-4 months away. They blame the strategy. They look at the strategy side of things as a subconscious thing. The clarity of mind's coming back. Their emotions are coming in. They're feeling more motivated. And these factors are taking place. They come back. They're doomed to repeat the same cycle. So do you think that a lot of the time it's because they're not aware of what's actually taking place and why these responses are taking place, that they find it difficult to maintain something long term?
No doubt. Yeah. I mean, there's blindness on every aspect of this. I think you've kind of articulated the cycle well, which to me I think reflects the utility of this idea, because we all can acknowledge the times where we are a bit kind of tired and unmotivated and maybe bored, and then times where our emotions are kind of rising. But like, have you spent time to actually map, chart, pattern those with the kind of precision that would allow you to, like, if you drop to 60, right? If or I should say rise to 60, because there's some increased hesitation, right? Now you're doing incredibly well, and you know that you've kind of messed things up in the future. So now you get a little bit fearful of messing up.
Yeah.
So now there's the hesitation. Maybe your sizing gets a little small or whatever. That if you know that you're there, you're not helpless, right? Obviously, the awareness is number one. You can't do anything without it.
Yeah.
Right. You're blind. You're going to end up where you end up, and without much to do about it. But if you're aware of these different levels, right? And I think this is the homework that I generally give any new client. And if they don't have a good beginning, recognition of that pattern, it's to spend time being very diligent in writing down the details that characterize each of these different levels. And it might mean somebody is dealing with both fear and anger at times, or some greed and overconfidence and some anger. Right? It doesn't have to be sort of singularly like one emotion, but you need to have that precision so you can recognize it in real time. Like, you spend so much time looking at charts to recognize when there's opportunity.
Yeah.
Right. There's metrics and data points that you see and certain patterning that you see that clearly indicate to you opportunity. If you're not aware of the patterning in yourself, well, then you don't know you have the opportunity to actually stop the car before it drives off the cliff.
Yeah.
Turn things around. Now that what you do about it is the second step, but the first step absolutely is to spend some time looking at the triggers. Okay. What sparks that deviation?
Being unprepared, right? Like this is the thing about this video that I hate, and I hate because people watch this and they start to like fool themselves into thinking that like, oh, I have some psychological problem, blah blah blah. Like, no, you're just not prepared. You're just not fucking prepared. Like, one, like, have a strategy, right? Have a data tested strategy, right? Two, have your levels in mind. Three, wait for price to get to your level. Four, does the current PA align with your strategy and the data? If so, take trade. If not, do nothing. That's it. That is it, right? You were either fucking planned and prepared with data to validate what you're about to fucking do or not. Explain to me where in these fucking 5 bullet points there's emotional psychology issues. They're not, right? It's either you are fucking planned and prepared like a professional, or you're just an amateur freaking out because you don't know what you're doing. Period. So we can try and hope as much as you want and say that that's not the case, but that is the reality of the situation. So
it actually is
these kind of videos, like, I don't like when they do shit like this.
There's just a little bit of loss of confidence, a little bit of desperation to try to like kind of force and make something happen.
Yeah.
Because if you win, well, then that means that you're still good and you're still in sync. So that would be one example. Obviously, a loss, rough market conditions. Things are just kind of chopping around. Getting stopped out by a tick, having a bit of bad luck.
Yeah.
There's a wide variety of triggers, but you want to know the things that spark the greed, the fear, the FOMO, the revenge trading. All of that needs to be understood. The triggers. You want to look at the thoughts. The thoughts. It's rare that you have unique thinking at these times where your emotions are getting high.
Yeah.
Right. And that's how you know that it's not like real working memory. It's more of a pattern associated with these triggers, with these emotional reactions. When you have the same, like, so for example, you get down to like level 80 from a greed and overconfidence standpoint, you're like, I'm buying the Lambo. Like, I figured it out. Like, I'm the next trading guy. Like, there's a very clear description of that state of mind, of that emotional state, and it's not new. It's repetitive. Right, the revenge trading, like, mother effer, like, I'm gonna get you back, like, I can't believe that I got so screwed. Like, there's again, the thoughts are not usually that new.
Yeah.
Obviously, try to define the emotion. Right, what are you actually feeling? Then we'll say kind of like the behaviors and actions. More kind of the physical stuff. So, you get pissed off, do you slam your desk?
Yeah.
Do you kind of have like a death grip on the mouse? Do you actually start to feel tension and heat in your
Yeah.
head? Can you recognize how your breathing patterns change?
Mhm.
You know, posture. Like sometimes
The
you're
death
kind of
grip?
locked in the screen. You're just like
Curled over,
just
yeah.
so burrowed in.
Mhm.
Or look on the flip side, you know, you're kind of just like disinterested, bored, like not really kind of feeling it. You're just like going through the motions. So again, there's physical signs that you can chart here as well.
Yeah.
And then lastly, it's perception, right? And again, perception of the market, of your positions, of the viability of your strategy. Effectively, we're kind of looking at like the technical ways, the ways in which your mind kind of changes from a technical standpoint.
Yeah.
Again, they're not going to be that unique, right? You have a bias. You become overly convicted to that bias at times when you're angry. Why? Because you want justification to take another trade so you can try to make back the money you just lost.
Yeah.
Right? Or you know, FOMO is rising, and so yeah, of course this thing has more room to run. I mean, like everybody else is making money, or like, you know, or you missed out on a previous opportunity, so of course now is the time. And so you convince yourself that, you know, what's being represented in the charts is actually there. And I know traders, you can make yourself see things. Okay.
Yes.
Yeah. And so that perception, you want to understand precisely how that perception gets altered. What's kind of the BS in your head that convinces you to get into these trades that you know you shouldn't?
Would you say as part of that, like especially the thoughts and the perception side of things, how many people do you speak to when they are going through this area, but initially, before they start making the mistakes and the poor decisions, initially their first thought is actually, oh, I should cut this trade, or I shouldn't take another trade, but then completely gets pushed to a side. And
yeah, I mean, I think you'll see that generally anywhere
as you start to come,
as you're kind of falling home. Once you get into the 90 to 100 range,
Just a very amateur, right? Describing amateur behavior.
in terms of trying to collect
Basically.
what it is that's taking place. Is that something that should be included? Of like, did you think the right thing before you went down this path?
I think you're talking about some corrective actions, and that is the next step.
Okay.
So the first step is, what is the actual patterning? And so if it does generally include, yes, okay, I'm aware that what I'm doing is dumb, but I can't stop myself. Then that's part of the pattern. Or if it's you're aware that you're, you know, sometimes at level 60, you are able to recognize the impulse to, you know, jump into a trade prematurely.
Yeah.
Right? It's like, and you stop yourself. You're able to hold. Like that's a very clear pattern, right? You know at that point that there is an existing competence to recognize what's occurring and stop it. But then as the emotion accelerates, then that ability to fight.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool that makes cleaning your expired or recent 20 descriptor.
On average, a random case study, someone, as you say, walks the dog in the morning, of which it's not the dog walking, it's more so the discipline of probably waking up and getting outside, getting that, you know, oxygen and getting moving. But that's their normal routine. And they normally sleep on average 7-8 hours. They go to the gym as well in the day, and they eat healthily. And I'm just speaking on that side of things routine-wise, okay? But then on this one particular day, they woke up late, or they didn't sleep well, first of all. They woke up late, which meant they didn't go outside and get moving. Is the thought process that they then come to the market in this area, right, more heightened already? So like, you probably noticed, I've noticed it in my own journey where I woke up late and I had to go to myself, or I've had an argument with my missus, right? Something's not right 100%. Not completely off grid, but I'm not in peak. And the funny thing is, in my head, I'll say, I probably shouldn't trade today, right? But then it's one look at the market and something happens.
And you convince yourself there's something there.
Exactly, yeah. And so my thinking is, based on this graph, is that in those scenarios when you have happened to maybe not sleep, whatever it may be, it could be a combination of things or just singular, are you automatically almost starting in a more heightened state already?
If you have not done any work.
Exactly, yeah.
Yeah, so yes, correct. Or you're actually aware that you're probably stressed, so then you're kind of actively trying to calm yourself down, but then you're likely to kind of overdo it.
Oh, yeah.
So then you come into the market a bit flat and kind of a little bit, but you're just getting, that's your attempt to
And I don't know if I'd say it's emotion though, right? Like if you just like got like a bad night's sleep and you're like rushing to get ready, like market opens at 9:30 and you're waking up at like 9:25 on like 3 hours of sleep. Just the lack of sleep, right? It's not really emotional. You're not going to perform like in anything doing that probably.
Thing though, if you did do
Yeah, definitely don't suggest that. You do have the option to just not trade, right? You don't have a gun to your head forcing you to trade.
and you came into the market still, and then you take again a poor decision, you kind of just jump straight over to the other
You
side.
do, yeah. To me, it is like the teeter-totter, like the seesaw. You cannot, when you have too much emotion that you're trying to manage, your mind's not clear, you cannot find that optimal place. But our minds kind of keep trying to find it.
Yeah.
You know, and so the reality is we look again at causality. You having argument with the missus, rough night's sleep, for whatever reason, just not having your normal prep time.
Yeah.
That does not cause you to not be in the zone. Okay. That means that it might be harder for you to be today.
Yeah.
It does mean that you have to adapt the factors that are what's going to take you to get in the zone. One of my favorite examples of this, and I would also argue too, you do not need to be optimistic to start the trading day. You do not need to feel like today is your day, or that today you're going to be in the zone because you've done all these things. In fact, if you have the expectation of checking all these boxes, that means you're going to be in the zone. Guess what? You're not going to be in the zone, right? Because that's not now you're actually likely have too much emotion at play, and ironically, when you have expectations, it clouds your judgment. So clarity of mind tricks. But this story comes from baseball, right? I think there's been, or at least at this time, there was like 19 perfect games in the history of Major League Baseball, going back 100 plus years. So very rare occurrence. This pitcher named Mark Burley from the Chicago White Sox, going back maybe 15 years now, pitched a perfect game. Okay. When asked afterwards, hey, warming up in the bullpen, did you have any indication that this was possible today? He's like, no. In fact, actually, it was the exact opposite. I could not find the strike zone, and he had the distinct thought, like, oh my God, like today could be bad, like this could be awful.
Yeah.
So again, I think there's a misconception that preparation causes you to get in the zone. The reality is, perfect preparation is defined by what the outcome is. Did you get in the zone? Then yes, your preparation was great for that day, which is why we retrospectively look and examine, like, all right, on this kind of a day, this kind of market conditions, this kind of physical state, this kind of it, like, how did I do it? And again, you look at it the first time, maybe it's not really clear what the causality is. So then you kind of pull out a few factors, and whenever I talk about this with clients, I
It's
say,
like it's a decision making, right? That's what it is. Like being prepared is obviously the important step. Unprepared is the important step. But then if you're starting to find issues with adhering to those things, that's when you start adjusting, and that's where the journaling helps. Like, oh, I missed this. Let me be more mindful to be looking at this when these things are happening. Then you eliminated that error, and then you repeat. Now you do the first two things correctly, and then you say, oh, I missed this third thing. Let me journal this. Now you have like 3 things correctly. Dev. Hello, Dev. Hello, Dev.
do not change your entire routine. Just try to tweak a couple things to see if that helps to encourage it to happen more often, right? But Mark Burley made the adjustments to his emotions that day. He was like very realistic and likely more focused because he understood that he didn't quite have his stuff, so he wasn't going in there with a lot of expectations, trying to overdo it and be like, oh yeah, like I'm going to strike everybody out. Like again, clarity of mind decreases, emotions rise. So yeah, the retrospective piece is really key.
And where should we go from here?
Task of charting those individual thoughts. Something I call I have a data collection worksheet that I have clients fill out. It's freely available on my website. So jaredtendler.com/worksheets. Yeah, you can get it there.
Gavin Belson? No. Jared Tendler. A somewhat interesting video, I suppose, but don't agree with a lot of what he's saying. He has like a very someone who's speaking very confidently on a very subjective topic is what this is.
What I would do is spend 2-3 weeks doing this, certainly around every trade that you take. But as we all know, when you're not in trades, you're technically in a trade. So you're just kind of looking for deviation in levels of discipline, deviations in levels of motion, and just begin kind of noting those times. Like if you,
there are like some like things to be noting, right? I mean, it is. I suppose it does provide people a framework to abide by. They are finding issues with these things, and like the stuff in the middle is like quite important, right? Like I think most people in most professions, not just trading, but like any kind of high performance job or even just a regular job, right? Like you need to be eating properly, you need to be active, you need to be getting good rest, so on and so forth. Like it's a huge impact in your life. Hallmark of an idiot. I wouldn't go that far. It just he's a psychologist who's like using a specific model to define performance in trading. But the thing is, he's like saying it as if like this is kind of like a universal view of it. When in reality, there's like a lot more subjectivity than what he's describing.
right? So anytime you take a loss, just take notes down what you're thinking first, even if it's very, very minuscule. Again, early warning system. If you can recognize it there, right? Just factually speaking, it's a lot closer to recover if you catch it here versus if you catch it here. You have a lot longer to go. It's going to take you longer to recover. So the faster you catch it, the earlier signs you recognize, the easier it is to recover. Okay. So give yourself 2-3 weeks and then examine what you found. You've got a bunch of puzzle pieces. Try to put them in order. And you're looking for creating order in levels of severity. Excuse me, in putting them in order in levels of severity. And that's the key piece here. Now, what you might find is fear or hesitation is the beginning. And then once you miss a couple trades because you're worried about losing, then you get pissed off, then you feel FOMO. And so then it kind of converts into something different. Maybe at the beginning, it's, a bit of greed or overconfidence. And then, when that, kind of bubble bursts and, you realize a couple losses, well, then it turns into anger and revenge trading. So it can be blended. Don't think that just because you've got one, and it certainly could be that way, but it could be, standard anger, greed, fear, FOMO, confidence, or it could be a blending of the others. The other thing I want to call out, which I think is super important, just to make this even messier here. On this side, we are dealing with emotion. And on this side, we're dealing with discipline. One of the biggest mistakes that I see traders make with regards to the mental game of trading, it's mistaking emotion for discipline problems. They're like, oh, I can't adhere to my rules. I, blow my risk management parameters. I don't adhere to my daily loss limit, whatever. Jump into business too early. It's like, oh, my first question is like, are you, can you reliably prove that it's not fear, FOMO, greed, overconfidence, anger that is driving those violations of discipline? To me, the pure versions of discipline come from your energy being too low. So impatience is like probably one of the bigger examples of it. And ironically, impatience oftentimes happens when our energy is too low. We're like looking for something to kind of wake us up. And so, especially the market's open, video games on, roller coasters there, like let's have at it. And so you're kind of looking for the market to get you into a better state of mind. So, if you're going to, let's say very quickly, and I don't be pivoting a little bit too much to like the next stages, right? Because you do want to still do the same kind of patterning as I mentioned here with the discipline, so you can recognize the charting. But a very quick and dirty way to get yourself more disciplined is through your goals. So this motivational component, like the reality is you are driven to care because today is an opportunity to realize your goals, whether they're short-term, long-term, whatever. If you didn't have goals in trading, I mean, true hobby, you're just there for like, what's going to drive the energy? Like there's got to be something that you're trying to get out of it. So in other words, have your goals very clearly written down. And understand that being at this level is not going to get it done.
No, one of the best goals, and I've heard this a lot from so many people, like from just reading books and whatnot, and just from talking to people in general. And I'm not even just trading, but like with some of the best goals you can have are like not for you. Like, oh, like, I want to do better for my family or like for my parents or like something that benefits somebody else, right? Like that like locks you the fuck in for real, right? More than anything you could want to do for yourself. So the good way to frame things in that regard.
I mean, you are choosing to trade poorly. So you're using your goals as a wedge to drive your mind to have more energy so that you can effectively kind of have more control over your performance rather than what a lot of traders are relying on is market conditions to naturally kind of pull their energy higher. It's like, there's more going on. Right. But there's less going on, or I'm like, I kind of want there to be more going on. So then, I am now actively trying to make something happen in the market versus generate the intensity internally. And understand that, while it's maybe harder to stay out right now, that's what's required. And I know it's easier said than done, but that's the task.
Would you say as well that just as we say, not every day is a trading day, meaning there might not be an opportunity every day, but is it the same, would you say, with being in the zone and in the flow, if you will? Like not every day you're going to be able to achieve it. Your goal is to try, but equally as you do the work to get as good as possible of getting close, but equally you need to accept the fact that when you're not in that zone, you are probably better off scaling back, like
my favorite,
going to the market.
After a breakup, making more money because I don't make my ex come back. I mean, I don't know if that's the best one to do, right? Per se. Well, like, it is pretty motivational, honestly. I know plenty of guys who, like, that is, like, their motivation. like their girlfriend broke up with them for like whatever reason, and then they went from being just like lazy-ish person to like hella in shape, like eating healthy, like on the money grind, blah blah blah. It's probably one of the most common reasons. Yeah. But in a day, like, it's not the best goal, right? Because realistically, like, think about it. Okay, I've had exes that like hit me up now from like stuff they'll see on my Instagram. But like, it's at that point, it's too late. It's too late. There's no getting back together, right? Like, it's over. So like the idea of like, oh, making my ex comes back, like it's not realistic. It's probably not gonna happen, right? You're much better off just going to date somebody new. And so are they. Depends how in love you were. Couldn't have been that in love, right? Wouldn't have broken up if you were. Wouldn't have broken up if you were.
When not in the zone, if that makes sense, because would that then lead to, if let's say you're not in the zone, you then make a mistake based on that, it then can lead you to going down one side or the other.
Yeah, I mean, I think it's a to traders' discretion, right? How much control have you established, right? And this
within that area.
The next big step here is like, I think it's a little bit too fine of an edge to say if you're not in the zone or you're not like near the top, like don't trade.
Okay.
Because I think you're gonna like really remove a lot of opportunities, but it could mean I'm gonna be more intolerant of just some of the noise. So I'm really only gonna take like my A+ setups or my A setups. Right? I'm not gonna even try the B stuff because there's like an emotional EV component to it, right? I think sometimes traders start to look at trades too myopically. So you're not in an ideal state of mind, right? So
what does that mean?
Let's say you're here at level, let's say 55. So still at a high level. But if you take like a suboptimal trade, let's say a B trade, and it fails,
short-sighted.
Now you're just going to creating greater risk, and especially if the risk is like you can really lose a lot of control. And of late, you have been a little bit of a drawdown, lost a little bit of confidence.
Yeah.
So objectively speaking, the emotional EV of the situation suggests like
what's the opposite of that? Like the antonym? Is there a word for that? Myopic. Hyperopia? I mean, I think that's quite literal. I feel like that's a word like an optometrist would use. Hyperopia is the opposite of myopia, in which objects can be seen clearly at a distance, but are blurry up close. I mean, if you're like sticking to like the pure strict meaning of language, I suppose you could throw it in there, but probably not the best word to be choosing to say the opposite of being short-sighted in a metaphorical sense. I was a psychologist. Apparently.
Because the upside of taking another trade and having it win is a lot lower than the downside of having another trade fail, because you might lose 20% on the day versus like maybe only gaining back like 3.
Okay.
But again, I think it's to everybody's discretion to kind of figure out, kind of where those firm lines are in terms of how much they're going to allow themselves wiggle room. And I would say for those that are just starting out with this, there's not a lot of risk in the short term to kind of overdo it and just gain some experience being more disciplined, more controlled with how wide of a latitude you're allowing yourself to, let your emotional range exist. And because once you establish these kind of firm, kind of guardrails, so to speak, you've proven that there is some discipline, there is some control that's being established, and so then maybe there is more room to go here. Because maybe instead of going down to 80, you're going to now stop yourself at 70. But giving yourself more room to kind of trade here means that you're able to capitalize on the upside. You've taken away some of the emotional downside upsides there. So yeah, I think establishing control is a huge sort of second stage, which I think we could get into later, but it would be a whole other topic.
Great, we'll do a part 2 for sure.
Yeah,
well, Thank you, Jared, really, for breaking this all down for us. Like I said, no one better, in my opinion, to be able to do the first psychology breakdown and concept breakdown on Chart Fanatics. But everyone at home, drop a comment with your biggest takeaway from this episode. Any questions you might have, me and Jared will be taking a look at the comment section, so make sure you drop them there too. Links for Jared will be in the description below, so make sure you go check them out.
I don't know. I'm sticking to the same thing. When it comes to this trading stuff, I've had the same opinion from the start, and I will continue to have the same opinion. And no one, I don't know if anyone can convince me otherwise, right? Like if you like the same thing we just had, right? Like you either planned or you're not, right? Planned or not. That's basically what it comes down to. If you are planned, there should be no psychological issues, no performance issues. You're just sticking to the plan, and if your plan doesn't develop as you planned, you're not doing it, right? Like a revenge trading, for example, is it part of your plan? Is that trade part of your plan? No, don't do it, right? Simple solution. Risk like blowing up your account because you risked too much in one trade. Did you plan to risk 3% of your account in one trade? No, then don't fucking do it. Rinse and repeat for every single issue, right? And if you can't do that, then trading is not for you. Or you better figure out a way to become disciplined enough to do it. And that's just the harsh reality of things. And you don't have to be perfect, by the way, right? You're not going to start perfect. But like if you just sit here making the same mistakes, like if you do like a revenge trade, and then you come back the next week and you do the same fucking thing, and then you come back the week after that and you do the same thing, and then you just spent a year constantly revenge trading and whatnot, like what the fuck are you doing? You're just wasting your own time, wasting your own money. So like, do you learn from your mistakes or not? Like that's really all what trading is, right? Or do you learn from your mistakes and change them or not? I'm an idiot. I'm always YOLOing all my Capital One stock and just sell when it goes up a little bit. Yeah, but like it depends though. Like for instance, like if you have $1,000 and you put $1,000 into a trade, like that's not necessarily an issue, right? The issue is if you plan to lose like, I don't know, 5% max of that capital, which is a lot. Probably shouldn't be doing that high, but we'll just throw out a number. And it's like $50, right? Out of the 1,000 you're gonna lose if you're wrong. And then like the trade starts going against you, and then you like take your stop and like move it. You're like, oh no, I'm gonna put it here. Oh shit, no, it's gonna bounce down here. Let me put the stop here. And the next thing you know, you just lost like $200, just blew up like 20% of your account. My whole life savings. Just don't do it. Don't do it. Just don't put yourself in that position to begin with. Right, problem solved. Problem solved. Or like if it goes up at like a few percentage points, like sell half. Like you enter here, it goes up a bit. You sell half and then put your stop here. Like worst case, like let's say it made 5% move up, and then you do what I just said and it comes back to your stop, then you made like 2.5%, right? Excluding like fees and whatnot. You have them. We can just kind of leave the rest running in case it goes higher. And just sell at 1% profit. I can't tell if you're joking. You put your life. I can't tell if you're trolling me or not. There's no way you put your life savings, all of your life savings, into a single trade. No stop loss. That sounds so trolly. Come on. Ugh. And I'm trading blue chips though, so I don't mind holding. You're going the trader turned investor route, right? Like most people in crypto. Trader turned bag holder. That is funny. I like to live life on the edge. I would recommend that, right? I'm sure you know, given it's your money, but it doesn't just grow on trees, right? Probably have to put a lot of time and effort to get it. So if you just lose like 500 hours of work in like one bad decision, probably not the best idea. This is the thing people don't realize, like, okay, if I told you that you can only risk 1% of your account per trade, okay, and I give you an account with $100, and I tell you to blow this account up, to run it down to zero, you probably couldn't even do it if you tried. You probably couldn't even do it if you fucking tried. So like if you're managing risk properly, it is very hard to not make money trading. Very hard. I think I will change dollars of reaching like a few million. I just want to be trading if I were you then, right? Just invest in stuff and just leave the money there. Maybe I should diversify. Yeah, like... Yeah, I don't know of any traders that I know or that I've seen talk about this stuff online or that I've read like about books on who have all their money as their trading account. Like everybody has like a long-term portfolio and then they have like a trading portfolio. And usually the long-term one outsizes the trading one by a lot. Just takes me too long to find a good stock to invest in. Did the research a lot. You know, you can always put it in the index, right? But most people do. Or like the NASDAQ. I think S&P is about to crash. Yeah, but even if it does, like, who cares, right? Won't come back up for 35 years. I don't know about that, but I suppose it is possible. I suppose it is possible. That'd be like a mega bearish scenario. Like, why do you think that? I can't control how the S&P index is formed, who's in it. I mean, that's like the beauty of it for most people, right? And like they update it up for you. The theory I read about from another investor. I'm curious who this person is. Because like, yeah, there are some people who think we might be entering like a bear market. I haven't seen a single person, single reputable, notable person mention we're entering a 30-year bear market. That'll be quite the scene. We'll say that. Yeah, but if I find a good stock with good management and good cash flow and good dividend, it does not matter if the stock crashes. I'll still get my money through dividends. I mean, yeah, but like, I don't think having dividends is gonna compensate for you missing out on like tech stocks going up like 10,000%. Like dividends like aren't even gonna outpace inflation, right? If I remember which investor it was that said 35-year bear market, I'll let you know. Pretty well respected. I mean, like first and foremost, like there's like the logic behind that statement is like so flawed, right? Like most of like the elite global macro experts like struggle to predict like 2 or 3 years out what's gonna happen. Like the further you go out, the more difficult it becomes. Like they're operating in like 6 month to 1 year windows, maybe 2-3 years. And this person is talking about 35-year bear market happening. That's happened before in US history. Put this thing on log mode. I don't know where you're seeing this 35-year bear market. How much was this? This thing went up hundreds of percent from here. It went up hundreds of percent from here too. To get back to the peak. 25. It is possible. It is possible, I suppose. But I wouldn't go sitting in cash waiting for this to show up. Personally, I'm not a financial advisor, of course. Do your own research, blah, blah, blah. With typical disclaimers. Looking at an index, not every stock was down. Value stocks held value. Yeah, I have to go through and see name by name, but like still a pretty like you know, if we had to plot all the possible scenarios that can happen from here, like 1 to like whatever, so on and so forth, like n, and then give them all like a probability of happening, in this case 35-year bear market. And what probability are you giving this? Like 50, a 1, 80, like a sub 1, like 0.01. Because if it's not particularly high, then probably not the best to be planning around that. By looking at it the other way around. Which investing strategy can survive market turmoil? Value investing. I don't believe in that. I like the whole Warren Buffett style of stuff. It's just outdated in my opinion. They're very outdated at this point. There's plenty of studies talking about how fundamental investing has like little to no value on any like, relatively short time frame. Much better off just riding the sentiment, riding the momentum, and then getting out. Value investing does good in bull and bear markets. I mean, does it though? Let's just look at like Coca-Cola, for example. Damn. What's like another common, like what are some of the common dividend ones? I'm not like a dividend investor, so you probably know better than me. But typically dividend companies don't have like huge outsized gains, right? So you have to keep that in mind. Like are they beating the hurdle rate or not? Which is like 12 to 13% a year. Yeah, I just said that because I just said dividend because you had mentioned the. I would say I would probably say the best bet is to be well-rounded, right? Like don't just go full value. Don't go full dividend. Don't go full growth. Don't go full highly correlated portfolio of the similar assets. Like have some commodities, so on and so forth. Like the kind of the typical modern portfolio theory, essentially. That way you don't have to do all the guesswork, right? Kind of be prepared for all scenarios. And then if you want to be like active with the risk management, you can just like use these higher time frame moving averages. Just and cut your bags when they start to break them, and then if they reclaim it, keep going, get back in. What most people do. So it can be valued today and it will value tomorrow. Not remain static throughout the stock, making me think my strategy is better and better actually. Well, what's the strategy? Just 100% value stocks? Did you mean to write macros in the title, or is it Marcos? No, it's Marcos. I'm gonna ever buy growth stock. You're gonna be missing out on a lot of gains then. Each to their own, right? Everybody has their own what's the word? Everyone has their own risk profile, right? Some people don't want to risk their money at all, other people do. Don't mind, don't need 100x. I'm happy with 10x or so. I don't know if you're even gonna get 10x with those. Like maybe if you're lucky. I guess I'm not too familiar with how many I mean there's like thousands of stocks, right? I'm not familiar with, so I don't know what you bought exactly or how it's done. Greed is not bad. Greed is not bad. And it's not greed, it's like me seeing that AI is going to be a massive trend and buying Nvidia stock because it's the most likely to perform in that environment. That's where the future is headed. It doesn't mean I'm greedy. It just means I have a good investment thesis with a high probability of playing out. There's no greed in there. That's not greed. But that's the whole point of the market. Okay, every company is risky, right? Like there's no risk-free investment aside from like government bonds, like which could have risk as well. Obviously, like extremely small percentage chance that the government defaults on their debt, but it is possible. And then that's the only like that's what everything's compared to, right? Like that is the risk-free basis that everything gets compared to with the current rate. Like you could have your value company that's like doing well and whatnot, right? And then all of a sudden, boom, massive scandal comes out. They've been cooking the sheets, blah blah blah. Thing goes to zero, money burned. Like an Enron type scenario. What was the other massive one that blew up? It was Nortel, right? In Canada. Yeah. Nortel. Didn't think of fraud. It's unlikely. It's unlikely, right? That these things are like regulated quite well, and they do try and cut down on that stuff. But it's always possible. Like there's like no risk free in any kind of sense. Also, not guaranteed to continue having the performance that you're seeing, right? Make sure maybe you've caught some things in a good trend, but then like that specific sector might start to trend downwards or have just like a consolidation for a year or two, while like the growth things keep running, right? That's why I think it's best to have like a balance. I mean, I'm not obviously consult with a financial expert about constructing a portfolio that suits you and your risk tolerance, but most of them are going to advise you to do a similar thing. Just give you some kind of balanced portfolio with a bit of everything. Like that way there's no guesswork, right? It's like you have a bunch of like pie slices in your portfolio, and like typically like they're somewhat uncorrelated as well. Like in the world where like this slice and this slice are like performing poorly, and like these ones are like doing well to compensate. Like it's pretty rare that like every single slice in your pie is going down at the same time, right? And every single instrument is just tanking at the same time. All the commodities are tanking. Like your treasuries are getting defaulted on. Like it's pretty unlikely, right? Like a doomsday scenario basically is what would have to happen for that to occur. Like a lot of time what they do is like they give you like a variety of portfolios, and they'll have a bunch of different slices, and depending on like how risky you want to be, they'll like have the bigger slices be like the riskier stuff, whereas if you're not as risky, they'll give you like the bigger slice of like the lower risk instruments. But in general, like they're all going to be a big pie of like different uncorrelated slash different sector components. Doomsday? It's possible, right? A lot of people think the US is doomed. Kind of like the whole Ray Dalio thing. Like if you ever have read The Changing World Order. Seems like the US is on the downfall. What does my pie look like? Not quite like that. Not quite like that. I'm like somewhat concentrated. Like a lot of Tesla, a lot of Tesla. So like what do they say? Like concentration builds wealth and diversification preserves it. And even like the Druckenmiller and whatnot are like big advocates for just having concentrated bets. So like I have a portfolio like with, look, I'm diversified, like because you gotta keep in mind like what I'm doing, right? Like I have at my bank, I have an account with like a financial advisor, like wealth manager, who has the money that I gave them is in one of these well-rounded portfolios. I don't do shit. I don't have to ever like worry about it or nothing, right? They do it all for me. Then I have my own portfolio that I'm managing myself with a different set of money. And that's the one that I have like the things I like in there, right? Like I have a bit of like S&P, Tesla, so on and so forth. But it's not nearly as diversified as the other one. And then my trading money. Hard to diversify. It's not hard. You have to let's do the research, right? And also stay on top of like, depends how active you want to be too, because a lot of times they'll rebalance it as well, right? Like, let's say like one of the pie slices has gotten like too big from how you originally laid it out. Like, let's say like this pie slice has grown too much. Now it's like this big compared to everything else. Then they'll like rebalance it into like the other slices. So it's nice to have somebody do that for you. But I don't give them all of my money for that because it's the fees are high, right? The fees are like a huge difference. I just do it for like mental ease. Okay. After the research, it's like a full-time job. Yeah, exactly. But the thing about those people, it's they're kind of frauds, right? And like the banks, like they really are just ripping you off. So what do they do? Like typically what they do is like the entire bank, like the whole, like just in Canada, one of the banks is like Bank of Canada. Like the upper management comes up with these different portfolios, and then like all the people that work at the actual bank branches are just like regurgitating what they came up with to you. It's not like like tailored to you specifically per se. Like maybe you can request some of the stuff, but generally they're just whipping out like the same thing for everybody, right? You're better off doing it yourself. It depends. Because it's just a lot. For some people, it's a lot, right? Like, think about it. Like, let's say you're 26, you just got married, and you're about to have like your first kid. You have your job working as, I don't know, a personal trainer at the gym. You don't have time. Most people are not gonna have the time or effort or like care to want to sit there and become a like financial analyst to build their own portfolio, right? They're much better off having someone do it for them. Usually. It's a lot of learning, right? A lot of learning. I was offered jobs as a financial advisor, turned it down though. Yeah, you have pods to come up with portfolio allocation, SPY, SNAP diversification. Yeah, as long as people are doing something, right? Like, the real problem is when people just don't do anything with their money. They just leave it in the bank on like a checking or savings account doing nothing. At that point, you're just like getting wrecked by inflation year after year. So yeah, even if it's as simple as just putting in like the SPX, and so be it, right? I always tell people that because there's a lot of times when I'll go on like a date with somebody and they'll start asking me about like financial stuff. And then I ask them what they're doing with their money, and they all just say like that exact answer. It's just sitting in a checking account, collecting dust. I'm like, man, that is rough. That is very rough. Like when you go to Charles Schwab for wealth management, they just put all their money in their expensive mutual fund. Yeah, that too. That's actually very true, actually. Now that you mention that, it's very true. They say that the index funds / passive money is a huge bubble. Again, in what regard? In what regard? Don't know about the ETF bubble. No, I don't. That's the ETF bubble. No, I don't know about it. Are you talking about like like newly released ETFs like flooding the market? Or are you talking about like the Vanguard SPY ETF kind of thing? I guess we can ask about it. No? No what? No what? Arguing that ETFs have become too popular and that this might be inflating asset prices or concentrating risk. Less about one specific ETF and more about the massive growth of the ETF industry. Self-fulfilling cycle. Basically, 50% of the money in the stock market is passive. Same thing, less than 10% of the market investing is done with active investing. Yeah, but like, hasn't that always been the case? Passive index funds were never this big. Yeah, but like, what difference does it make? Like either way, it's all growing, right? Maybe I'm not understanding it. How about the S&P? Oops. They're searching for the most accurate price of a stock. I don't think it works like that. At least I don't approach, like, it's impossible, right? Like, there is no accurate price for a stock. Like an imaginary concept never exists. Yeah, I'm not seeing it. I don't know. I mean, from what I'm reading on like ChatGPT and Gemini, it doesn't seem like this is a particularly big issue. Like, sure, there might be like a correction where people take profit, but it's always the case. Like, I don't see what's different. Like, yeah, there's more money flowing down the waterfall, but like, it's just money flowing down the waterfall at the end of the day. Only one. Already read that. Already read. What else should we look up? ETF bubble. I mean, the first post I see about it is something on Reddit, which already makes me incredibly suspicious of the validity of this. But like, the main thing I'm seeing, if anything, is like the idea that there's a lot of new ETFs being released, which that makes sense. Like a bunch of like fragmented liquidity, and they should become illiquid. Like that seems like a problem. Like the rate of new ETFs coming out has like gone exponential essentially based on the chart I'm looking at. This is in research papers and stuff. Yeah, I get that. I get that much. Yeah, I'm not sure. Like, I mean, I'm reading about this more, and with a specific emphasis on the passive investing, and like even then, like I don't. It seems like a nothing burger. Small market, I haven't seen sell-offs in these names, right? Like that just look at this past year alone. Nvidia down 40%, down 20%, 11%. Again, this is like with all this like all-time high passive investing occurring, right? Plus, like the weightings of the allocations change over time too. Like if one of these companies becomes like seriously overvalued and starts to like drop a lot, like the weightings will change and it'll start to get like less and less. It's not like a static weighting allocation, like dynamic in that regard. What was this on? Oh yeah. There's a feedback loop. Yeah, I was reading about that. You go to bed soon. Reallocation is once a year for some ETFs. But we only care about the biggest ones, right? We don't care about these like random ones that don't do it. Like, isn't the S&P the only like main one that we're like considering here? I suspect that's where most of the money goes. Like something equivalent. What are the largest ETFs in the US? By flows. Why does it every quarter? That seems pretty good, no? 4 times a year? But it takes a while for money to like rotate as well. But that seems like a fair enough time to like let people move around. Interesting. The Bitcoin's top 3. Interesting. Interesting. In terms of inflows, in 2024. Pretty high, actually. Wow. One, two. That's a good trading opportunity. Short stocks are going to kick the other SPY and buy stocks before they get added. But is that doable though? 'Cause, like, isn't that like kind of already arbitraged out mostly? Like, what was the recent one? Carvana got added, right? What day did it get added? Out of curiosity. Carvana added to SMP. Interesting. Yeah, I've heard of this before, right? Like what they were suggesting, where essentially you're like, because like it makes sense, right? Everyone that has to sell it if it leaves the index and buy it if it joins. I'd have to backtest it though to see how effective that is. It seems a little too easy, right? Like a little bit of a free lunch. Which makes me a bit suspicious. Carvana CRH. Because this one's definitely like quite the move, right? When did they make the announcement? I think it was like a few days ago, right? On a CRH. This one like gapped up. What was the other one? Six. Interesting name. You say something about the Bitcoin inflows? Yeah, the BlackRock Bitcoin ETF was like the third highest inflows in 2024 out of all the ETFs. And I think it's one of the best ones this year as well, actually. Like they've come out and said that's like their best performing ETF. Sometimes they change their mind at the last minute. Really? How last minute though? Like the day of, like, psych, we're not adding them. We'll put it on the to-do list out of curiosity to kind of research this a little bit. Like research, ETF addition, and removal history. Oh, these are the ones they're removing. LKQ. It's been on quite the downtrend already. Souls. This can't be it. Unless like they just switched like the exchange or something. That's odd. And Mohawk, MHK. Interesting. Not familiar with any of those, but they seem interesting. I didn't know that about the BlackRock ETF for Bitcoin. Thanks for that. Yeah, they talked about it. Like by all accounts, it's quite a successful, very successful ETF launch for them. But it was enough of that. My alarm's gonna go off again soon. I need to start wrapping this stuff up. Information provided by Gemini. Could be wrong. Whatever, we'll verify it later. Either way, interesting charts to look at, just out of curiosity. Probably time for a juice box, yeah. Although there's not really much to talk about in terms of a juice box. Potential longs. Shorts. I mean, it's FOMC tomorrow, right? Tomorrow is FOMC. So we've got plenty of long opportunities, right? We talked about this thing, talked about this thing. So pretty recent opportunities again for some longs that you'd still be in now. We talked about the short up here too. So I had a pretty juicy short opportunity today, whether you like took the limits on cleaning the high or you took like the failed auction up here. Really, tomorrow was scared. Scared of what? Scared of what? Like realistically, it's gonna be tricky, right? Like depending on what this guy says, his chart is gonna start doing whatever, right? Like, ain't no relying on fibs, no relying on data, no relying on math, nothing, right? At this point, it's just up to what comes out of his mouth and all the documents they release at 2 o'clock. So a bit last minute to be trying to position yourself. But in terms of like the liquidity on the higher time frame, I guess like medium, I won't even say higher. Down here. Where does tab go? Most of it's like here, right? Most of like the okay, we've talked about these lower levels, so nothing has changed here. But in terms of like this zone, most of like the liquidity is like down here. With like a little bit by the single prints. Majority of it's here though. This is like just very low time frame stuff. So like you can like to entertain taking like the single print cleaning, like liquidity grab. Like this kind of region. Basically around the Valeria low, right? Kind of clean the single prints and go. With like, you can use like this kind of fib. So basically like a typical fib box we use, right? Aligns quite well. Sure. Probably gonna be your best bet, but I'd be careful, right? Because like this can just blow down through the zone. Like if this happens before FOMC, that happens like throughout the night tonight, and like you have some edge for me here to be taking this, then like yeah, go for it. But like stop loss, break even. Don't be surprised if you get stopped out tomorrow, kind of thing. So kind of just leave that written there. Kind of just like liquidity grab the PD value low. At the PD value area low. Slash single prints. And for a short. Probably be the higher levels that we've been discussing, realistically. Because if we start to come back up here at this point, like let's say we're looking at something like this. Like first of all, there's like no liquidity up here. It's all higher. So like not really any kind of reason to come up here and start to like reverse, right? There's no like liquidity hunt to go like lower into like a failed auction kind of thing. Like it can form, keep that in mind, but like let's say we get something like this, right? We bounce into the zone. At that point, we're like getting back up with the Valerie high from yesterday. As this is like printing like hit bull dips on the lower time frames, right? So the probability of starting to come up here and like take these highs and higher is like increasing. Also, like we'd be coming back to this key level, right? We've been talking about this level for a while. The value area low of all these value areas. Well, if you start to come back up here at this point, a bit suspicious, right? in terms of like a failed auction that we've been looking at on the daily time frame, it's like starting to get confirmed. But the only thing left is to close above this high, and it's like confirmed, right? And if we start to come back up here, like how we're talking about, like you're getting into like pretty dangerous territory. So I wouldn't be too keen on shorting that. Like potentially asking to get run over. So if you are going to entertain this trade, keep all that in mind. Like treat it as like a very, very low time frame scalp entry, like stop loss break even immediately. If you're even going to do it. Personally, I'll just wait for the higher level. Y'all can do whatever you want to do, right? We'll kind of just leave it on there. Kind of just like the 93.6k failed auction forming. And if anything, you can kind of just like let it print first, right? Like don't risk it here. Like let it print, let it like flip the VWAP. Then you can get in on it. Probably a safer bet. But same kind of story with the long, right? It's FOMC tomorrow. Like everyone's been waiting like weeks for this. And everything's gonna go out the fucking window. Probably not the best time to be getting into trades. Which is why we've been emphasizing this for like a week straight now, right? Get the trades while you can, basically. Well, all the higher time frame levels, and nothing has changed, right? Above and below for both longs and shorts. Higher time frame plans have not changed. Same thing for the shorts. You kind of just go back, look at that stuff. So we talked about all this like many times. All the stuff down here, even below 80k, down to 60k, all the stuff up here, going up to like 120k. We already talked about. So probably should go review that because we might be seeing some volatility tomorrow. And even if it's not tomorrow, a lot of times FOMC begins like a trend change or a trending move. We might start to be getting into these levels in the next week or two, or like at the new year, right? Once kind of the holidays are over, everyone's back at work, liquidity flowing through the markets. But yeah, we'll leave like this for now, right? Leave like this for now. Not that Juicy is the juice boxes, but that's how it goes before FOMC. I've been dreaming, or whoops, I missed a line. I made a mistake and put everything into my stock on my friend's recommendation. Doesn't sound like the best idea right there. I've been dreaming of trying to get out. It's sensitive to FOMC announcement. Yeah, everything is. I just hope my stock pops so I can get break even on my announcement. Yeah, you put yourself in quite the poor position there. And, you know, my advice to you would be like always plan worst case scenario, right? Because there's a realistic world where tomorrow, like there's a sell-off and what goes from you hoping to be break even is now you taking an even massive bigger loss. Like the number one rule in trading, right? Plan for worst case scenario. Is that way your plan for everything? Like I'm imagining like you put all this stuff into one stock and we start to sell off tomorrow. And this ends up being some like multi-month sell-off, right? Like down to like the middle of this channel or like the gap fill kind of thing. I don't mind holding it. I don't know if that's the best way to be looking at it, right? So you could have just like cut your loss and then like if it comes down here, then you're buying like 30% more shares for the same amount of money. So instead of like holding 200 shares from here down to here, you're buying like 300 shares down here. The problem is that you shouldn't be in that situation in the first place, let's be honest. You're putting yourself in like a losing uncomfortable position off the rip. Now it makes every decision afterwards like awkward. I have much better opportunities elsewhere. Could be making bank with the other stocks. They're going up and up. Oh, this one is down on flats. Yeah, plus usually you don't want to go all in, right? Put all your eggs in one basket. Especially like okay, maybe in some world where like you research something a lot and you're like mega convinced of this thesis. Okay, maybe, but at least it's your own thesis. Like to do it because of something someone else told you. Suspicious. Either way, it's suspicious. Even if it's your own thesis, like me, like I'm like pretty bullish long term on Tesla, which is why I have like a pretty big Tesla position. But even then, I'm not like all in on that stuff. Oh, the other thing you said? Well, yeah, can you start doing analysis like SPY or something? Maybe gold. Yeah, I can, but like you're much better off coming during the stream and asking that. So it's all hype, no substance. Yeah, maybe. Like for instance, like before, there used to be some guy that would come in here and ask about gold during the stream. Like during the stream, I'd like talk about gold. But yeah, like I'm not gonna sit here at the end of every stream and just start like whiffing off like 20 charts doing this, right? It'll take me like hours. So ideally in the hours that I've been streaming, people can ask that. But we can look at it if you want, like when you're in here and ask. I'm not gonna do it today because I'm about to go to bed, but kind of throwing it out there for like the future. I don't mind looking at stuff, especially things that I haven't seen, right? Because I might see some stuff that's pretty interesting that I'm not familiar with. Companies like research or so on. Tesla, or already that I have no idea why anyone wants Tesla. I mean, it's more than just cars, right? Not just a car company. Gold self-driving is just one of the many things they do. Like robotics, AI, energy. We'll see, right? Maybe it just goes to 0, which incinerate my money. I'm okay with the thought of that as well. I'm okay with the thought of that as well. Did you see the Xiaomi EVs? They look great. I think I've seen a video like what's his face? What's that black guy on YouTube who reviews all electronics? What's his name? Oh, Marquise Brownlee or whatever. I saw one of his videos, but I saw he has like a new one. I saw he has a new one. I haven't seen the newer one yet. Seems interesting though. I also saw them a while ago when what's his face, like Speed, when he was like in China doing his like little Chinese like circuit like around the country. Like one of the videos he had was with like a Chinese like they're showing off a bunch of Chinese cars. Pretty interesting features some of them had. If that law didn't exist, did excellent value Chinese EVs would dominate the markets? All manufacturers go out of business. Also, China has self-driving. They have robotics too. Much better robots. Yeah, possibly. We'll see, right? We determine. They are starting to integrate them into the EU market, which is interesting to see. Sometime in the next few years. Yeah, I saw. I think he mentioned that in the video, right? I think he mentioned that they're going to Europe. I'll have to put it on my my YouTube queue. But yeah, this video, like living with the the Xiaomi electric car. Probably watch before I go to bed. Tesla sales are down wherever Chinese EVs are. I mean, I'd imagine so, right? Imagine having a competitor in your region probably gonna lower some of your sales. Seems logical. The sales in Germany have declined. Brand toxicity. Christ. Thoughts on the SpaceX IPO? No, I didn't even know. Like, I saw the news while I was streaming, but I haven't like looked into it yet. Like, they just announced it pretty recently, right? Or maybe it was a bit earlier. It was like earlier today, like in the early evening, right? I think I'd already left to the gym at this point. So I've done like a whole lot looking into it. It's interesting though, right? Also, I don't know if that Tesla stuff is not true necessarily. In all of 2024, the Tesla Model Y was the best-selling pure electric single model in China. Per this article, I don't know if it's true. And apparently, it continues to be the case in just September, October of 2025. Which is like quite the statement if that is true. Like, where these like alleged cars are supposed to be like drowning them out are being outsold by Tesla, like in the heart of the opponent's territory. SpaceX seems interesting though, right? Because they do a lot of stuff, right? I probably the last metric I saw was, I think like 90% of like the things that go into outer space now are like done by Tesla, or not Tesla, like SpaceX. Like, they basically have like a monopoly on it at this point. I'd look into it more though, to be honest. I'm not like too familiar. put this article on our reading list for later. Fuck off. Well, apparently they mentioned like the part of the reason they're IPOing is to fund the data centers in space. Interesting. It's a pretty interesting concept to have them in space, right? Like the cooling issue that we have on Earth would like kind of resolve itself because of how cold it is there, while being have like direct access, like line of sight, like solar power. Seems like a pretty good fit actually, like in terms of like the issues we have here. Curious how they be routing all that data back and forth though. Interesting. Oh man, I'm gonna give my money to Elon. Says market share in China is shrinking significantly due to intense competition and local brands like BYD falling from around 7-8%. Was low as 2 to 3 by late 2025. What's a NEV brand? Something electric vehicle. I don't know what the N stands for, but its older product lineup struggles against aggressive local players and more diverse and affordable offerings despite strong 2024 sales records. I'd imagine I can't picture how they would like have some kind of like car monopoly in China. It seems a bit odd, right? Given how many like different manufacturers are there. We'll see. We shall see how things develop. Did I save that link? No, I didn't. Whoops. SpaceX IPO. Let's send this to myself so I can read it on my laptop. Tesla EVs, check out China AI. I don't think that's true, right? Yeah, I don't think that's true, is it? You know, aren't all the like the DeepSeek and whatnot benchmarks are all like relatively low compared to Gemini and whatnot? AI benchmarks. How does this thing work? Is this ranked already? Oh yeah, this is ranked. Yeah, I'm not sure where you got that information from. From what I'm looking at, that's not true. I also don't know. I mean, I don't know what website I'm even looking at, to be honest. Kind of look through some of these to see if they're any different. Is this Kimi one from Asia? Kimi AI. Yeah, the only Chinese one I've looked at like 4 different benchmark sites, and the only Chinese one is this Kimi AI in the top 10, and it's not like first. The rest are all like Claude, ChatGPT, Gemini kind of thing. They're the typical ones, right? Also, you have to be like very mindful of like these things. Right? It's very easy to like leak a lot of Chinese FUD, essentially. Not saying that that's the case, but like you have to be very mindful of that. That's like a way for China to like cause chaos in American markets. Unverified LLM scores coming out claiming things like that. You definitely want to like verify all those things from like multiple resources when you read stuff like that. First happened in the summer with DeepSeek. Yeah, but DeepSeek was not like DeepSeek wasn't like better than them. It's just that like the way they trained it was much more efficient. It wasn't like they blew it out of the water knowledge wise. Like what they did, all they did was okay, like ChatGPT or like Gemini, just like have one model that does like literally everything. And all DeepSeek did was have like miniature training. Like it's like, oh, this is the lawyer, this is the doctor, and this is, I don't know, the psychologist. And then like once these smaller ones were all trained, then they put it into like the big one. Like the efficiency of it training this was like much higher than training this like one big blob of knowledge. But these still scored higher than DeepSeek. I was like, eventually it doesn't really matter, right? The thing about these models is like, I suspect we're gonna trend towards some open source world sooner or later, right? An open source / free LLM service seems like where things are headed. Yeah, this will become a commodity. Possibly. The AI bubble will burst. It's goddamn alarm. But I mean, like, if it's a commodity and it's like being transacted, like, why would that be a bubble then? Imagine a big focus on advertisements related to AI usage. We already see that during Christmas shopping suggestions to Amazon links. Oh, like in ChatGPT, you mean? I haven't seen that. Interesting. No, I actually saw a pretty cool study. What do they do? Okay, so like, you know how they collect like metadata on you? Like they have like you know, Meta has like a profile of you as a user essentially, and same with all the other like advertising companies like Google. So what they did was they started serving people like ads made for them specifically, like using like the OpenAI like VO or whatever, right? The video producer. And like the ads resulted in like 30% more purchases when they were like tailored like on the spot for the user. Pretty interesting, right? Pretty interesting. Commodity, everyone lowers their price to the minimum viable price or profit. The theory that AI will be passed through. The consumer will benefit, but corporations won't. Maybe. Like you're like hyper focused on like one aspect of AI, right? Like an LLM kind of thing. But like, what if Google develops an AI that like cures diseases and they don't just give it out to everybody? Like an incredible source of revenue, right? Like they're selling the cure for cancer and manufacturing it, so on and so forth. And that's just like one of like a million examples we can think of. You're talking about general AI, a whole different story. I'm just talking about a bubble. Like you're saying it's a bubble, but like there's many outcomes where it's not a bubble at all. Like the opposite, if anything. The highest revenue producing companies we've ever seen. I don't think anyone is even close to general AI. Who knows, right? Like they're starting to do like the VLMs now. Like you might think it's 20 years away, but like these things happen exponentially, right? And like who knows when that exponential kickoff of like knowledge training happens? Could be like next week, could be next year, could be in 2 years. And once it hits that point, there's no going back. ELM, no, V. As in Victoria. Like they're training them via images now, not just like text. There's like that much more layer of like sensory input that they have. A huge difference. General AI, different type of compute. You say so. I suppose it's possible companies keeping it secret. I don't think that's the case, but I'm just saying, like, for you to sit here and say the timeline, like, oh, no one's even near it, stuff like that, it's like a bit nonsensical. Like they can already pass the Turing test essentially, right? So like how do you gauge anything going past that in terms of intelligence? Like quite difficult. Like that they've already made advancements that humans have not made. Like it's a bit hard to have some like objective line of like, oh, anything below this exact level of knowledge is like not general AI, and then anything above is like a kind of like a gray area, I guess, is like a good way to put it. And like the rate of change is very hard to predict. Like I'm sure you're familiar with like the like how the sciences and mathematics advance, right? Where it's just like some discoveries made here by some person, and then somebody else makes one here. And like maybe this one relied on this one to get it done. Or maybe there's like one in the future that relies on both of these. And it's like very hard to like anticipate how this plays out, right? Because we don't know what these things may be leading to. So for all we know, there's like some new like neural network model that comes out next year that increases like the rate of learning of these models, or like the capacity of what they can learn by like 100x. If not more, like 1000x, right? It's some crazy number. You think you are starting to rely on AI too much in your own life? Depends what you mean by rely on. Depends what you mean by rely on. Like if I didn't have it, would there be a productivity drop? Definitely. Definitely. I also don't sit there and like read it mindlessly. Like I question it a lot kind of thing. And then in terms of like problem solving and whatnot, hard to say, hard to say. I'd like to say no, but I've had people that I've talked to about this where they're like, people that like work, like today, for example, I was talking to a guy at the gym, like I hadn't seen him in a while. He used to work where I worked. And like, I was asking him about Claude. He used Claude for work. I'm curious about how good Claude is for coding. And he was saying that basically nowadays he doesn't code anything. It's all done by like the LLM they're using. And he's like, one time he was talking about we had no internet and he had to code like by hand. And he was like, dude, I couldn't remember how to do anything. Like I definitely see that being the case. I say that no one is near it based on some research. I'm not just saying that. Yeah, but like what I'm saying is like, how do you define near, right? What is near to you? Like near what? Like what are we near? I guess is my question. Do you think the negative effects of AI usage come from the fact people don't know how to use it? I mean, a lot of this anecdotal evidence from my profs, other standardized testing, like EQAO, shows significant decline in basic reading and math skills. Hard to say. I don't know. I'd imagine that there definitely is. I don't know. When I was in school, most people didn't care, right? To them, it was like, I just want to get this assignment over with and go do whatever, right? That was like their mindset on things. But if they had AI, they'd just be using it for just that, right? Just do my assignment for me and I'm out of here, kind of thing. So, yeah, probably a negative in that regard. But on the flip side, also incredibly resourceful because you can go the other way, right? If you want to nerd out, you can nerd out like way harder than you used to. Like if I had to go back and do my degree again with this stuff, I probably could have got like even higher grades with like less time spent. Kind of thing, or like equivalent grades with less time spent. I don't know, though, hard to say, hard to say. I think it's like a benefit, but you definitely have to like use it in a beneficial way. And like the reading and math skills, I don't know if that's related to AI, because that's been the case for a while, right? Like it's schools were already trending down the past like decade, if not more. ChatGPT came out when? Like 2023? 2024? Something like that? There's a possibility. There's a research who's modeling the brain neurons, etc. I can get you a time estimate if you want. 20 years. Optimistic is 5 years. Yeah, but that's that's what I was saying. That's what I'm saying, right? It's like we don't know. Like between 5 to 20 years is a huge variance. Could be less, could be more. Could be something in that range. It's so hard to anticipate, to like have an accurate vision, right? Like before they released like those new what were they called? Like, okay, the transformers and neural networks, like before that came out, people thought fucking ChatGPT was like forever away, right? Like all these technologies are coming out now. They thought it was like way in the distant future. Then the transformers got released and they became public, and then here we are, like less than 5 years later, right? So for example, this year I've been mostly watching videos in 2x, but I found my retention understanding and watching 1x. Like you mean you retain it better in 1x is what you meant, I think. Similar concept applied to AI, I assume. I don't know. I think it's a net positive, really. I think it's a net positive. Like the only concern I have with it, in this, when I think about it, is like any issue you have in life that comes up, like whatever it may be, like any kind of problem solving on anything, I think your first instinct is like immediately just don't give it any thought and go straight to the AI. Like that probably doesn't help your problem solving skills long term. Or maybe it does, right? Maybe it does. Maybe the AI helps you come up with really good ideas. I don't even know how to argue that, honestly. I use it a lot, though. I'll say that I use it all the time, and I think it's been a net benefit. Yeah. I don't think the stock market can stay at these elevated levels with no return on investment for 5 years, much less 20 years. But like what you're saying like only applies to OpenAI, basically, right? Like Meta and Amazon and Microsoft all have like a shit ton of a return on investments on top of sitting on mountains of cash. We'll probably see AI integrated humans in our lifetime. Yeah, that too, right? Almost certainly we will. Like definitely like the wearables and whatnot. In terms of like the brain integration, I'm sure it'll happen eventually, right? How does that look like? I don't really know. Like what would you consider, or like what is your vision of AI integrated with humans via Neuralink? Like you think something and like the prompt that would come out is like in your head already, or what? I'm excited about the singularity. What is that? Singularity. The point where normal rules break down almost famously in physics. Also popularly as a technological singularity. Oh, where AI surpass humans? Oh, that's definitely happening. That's definitely happening. That name seems familiar. Breakers. I don't know why, but like I've definitely like seen or read something from this guy before. Yeah, but like I mean, based on this description, yeah, I definitely agree with that. I think that's definitely happened. Predicts the reverse engineering of the human brain by 2029. A singularity itself by 2045. Yeah, I mean, he's saying the same thing I'm saying, right? It's like that we're on some like exponential trajectory based on these like, key concepts it's highlighting. Actually, this is pretty similar to like the book Life 3.0. Maybe the guy was mentioned in that book, perhaps. If you think about it, like human life is like pretty flawed, right? Like being this like biological entity is like pretty fail. And we can die from like getting a gunshot in our arm and bleeding out, random diseases, so on and so forth. Also, there's like a time limit to our life because of like biological factors. Overall, pretty fail creature in the grand scheme of things. Also, if we ever want to leave like this like a galaxy and whatnot, like actually explore space, like it has to be some kind of robot. Like our bodies can't like survive long enough to get out there. Probably for the best too, right? Probably for the best. I guess that just taking what we have with AI already, making it so we don't need a computer or phone. Augmented reality technologies, mapping Google Maps. Yeah. That as well. We won't be traveling in traditional sense, we'll be teleporting. Possibly. Who knows? The can work in many different ways. You know, hopefully we make it there, right? That's a real thing we should be talking about is can we make it before all this happens? That's a real goal. We might have to freeze ourselves in one of those like cryopods. Getting a big old bucket of ice. Pouring is a bit more difficult. Who knows, right? Maybe it's not. Like at the end of the day, like we don't have like a like we think we understand space, right? But like the more you talk, not the more you talk, I don't talk to them, but like the more you listen to like experts like astrophysics talk and whatnot, astrophysicists, etc. Like we don't know what's really going on, right? There could like literally be wormholes that exist we can be using. Like alternate dimensions, so on and so forth. So like what we like think of conceptually in terms of like space travel or like teleportation could be like way, way, way off of what's actually happening out there. I have an interview. I want you to watch about alien travel. Have I ever had cryotherapy? No, no, I've not. No, I have not. No, I saw a pretty interesting video. Borderline made me a conspiracy theorist about aliens. But like basically it was like a 2-hour interview with this, like what seems like a pretty reasonable person, right? It wasn't just like kind of like unhinged guys going off about aliens. But he made like a pretty compelling argument with lots of proof, by the way, of like increased alien activity on Earth ever since like the World War started occurring. Where there's like multiple different sightings from like different regions of the Earth that are completely unrelated, like northwestern Canada with like Southern America and like Africa. Like all these reports that are like documented by these people where they went to like report to the government. And they're all describing the same fucking thing. On top of like the documents that have been getting like made public in the US that were like previously classified, like aligning with the same story as well. Quite interesting, right? We're not alone, guys. Or who are watching us. You just bend the space-time continuum and jump to the destination. Sounds like something out of a movie. You might be inside of a black hole. What are these documents? Sightings of aliens or something? Yeah, like apparently the one in Canada, like apparently I can go read it myself in Ottawa and like one of like the archives. But it's like people like giving like they're making statements on record that are documented. Also with like random videos of people like identifying things. I'm sure you've seen some of them, right? Like where like the US like what's the ones that fly in the air? It's not the Navy, what the Air Force, I guess. Where they're like just flying around randomly and they see some like flying object. But like the movement patterns it has is like completely unrealistic to any kind of technology that humans are aware of. And there's like a lot of these classified documents that have been declassified. Like they're just straight up fucking talking about it. Like also one of the reports is quite fascinating. It was like one of them got spotted above like a nuclear base in the US. One of these like flying objects that everyone else reported looking the same way, and like all the nuclear warheads were like disarmed, and no one could explain like why or how that happened. A bit odd. And on the flip side, there was like a report in Russia of the inverse happening, where they had like a nuclear warhead like hidden somewhere, and one of these devices were like spotted, and the nuclear warhead was like armed. Strange, right? It's a bit strange. You know, interesting video, right? We'll say that interesting video. I don't know what to make of it, but maybe we're not alone. Which would be ideal. That would be the ideal scenario. I'll question the legitimacy of the sources. Yeah, like I was listening to it while I was at the gym, so I didn't like I didn't have a chance to like sit there and like research every single thing that they were saying, so I was kind of just taking them at their word for it. What was the channel I saw it on? I don't remember, man. Bob Lazar? I'm not sure. I looked it up, but I'm not sure.
Happiness.
Maybe we can find it.
An interest with UFOs is maladaptive to most.
Over 100 pages he gave to the IC.
No, it wasn't this. It was some old guy. I can't find that damn video. Whatever. I'll find it some other time. Yeah, I'm out here. I'm going to bed. It's like 2 in the morning. I'm tired, but what? FOMC tomorrow. How are we gonna sleep in, to be honest? Is there anything going on in the morning? I'm probably not gonna be doing shit until that guy starts talking. Yeah. Maybe we'll sleep in a little bit, right? Have a little bit of a cheat day. If I don't wake up naturally. Yeah, I'll try and find the alien video because it was pretty interesting, honestly. It was a pretty interesting way to like spend the time at the gym. You're at 2. I haven't decided yet. Either I stream at 2 and then like I don't stream at night, or I do the inverse. I might just do the inverse, so it's like the guy talks a bit, kind of make some notes, like digest at the gym, feel like the futures react and whatnot, then we can like come here and have like a more thoughtful discussion on these things. But maybe I'll stream at 2, we'll see how I'm feeling. Maybe I'll post in Discord, kind of go from there. Yeah, we'll see. Or like maybe if like they release the data at 2 and like I go through like the dot plots and whatnot and there's some like shocking stuff in there, then it'd be like, okay, maybe we should stream it. Find the alien video, I'll link in the Discord. Yeah, I'll try and find it. I don't know how far back the YouTube history goes on like your profile, but hopefully it's in my history somewhere. I think it was like a while ago, like 2-3 weeks ago. Let me just use my infinite scroll and see how far back this thing really goes. Well, it actually goes really far back. Wow, I'm already down to October. Okay, maybe I will be able to find it then. Wow, it goes. Oh, I'm in September at this point. Wow, interesting. Did not know that. My entire history? That's pretty crazy. I've had this YouTube channel for like an eternity. Interesting. Didn't know that. Anyways, let's kind of scroll through the chat. I'm gonna give her quick shout outs and get going. Oh damn, I just refreshed it. Yeah. Oh, shout out to Dev. Shout out to Lyle. I know Lyle was here earlier. Shout out to Harris Kamal. There's someone else in here. Damn, I reset it. That's so sad. Anyway, shout out to the other person. There was like a newcomer. They asked like a random question, so be it. My bad. We'll catch them again. But yeah, see you guys around tomorrow at some point. Hope you guys have an amazing evening. Go to bed. You guys are nerds. You guys are degenerates. Go to bed at 2 o'clock. Later. Later.